exit poll saying that the BJP may return to power in Delhi after 27 years is something that really needs to be watched. We'll, of course, know on Saturday when the results are out. But a bulk of the exit polls predicting this.
9 out of 10, right?
I think 7, 8, 9 or whatever. But yes, a bulk of them predicting this. So if that happens for the BJP, a huge, huge upside, because this is sort of one prestige battle, more than meaning anything really on the political front. For Arvind Kejriwal, it's a matter of survival after that, because this was his one big thing. So which is why it becomes very important. Not a big downside for the BJP if they lose, because then at the end of the day, it's a union territory, 70 assembly seats, 7 in the Lok Sabha, which the BJP has won in the last 3 elections. But for Aam Aadmi Party, it would seem like a political, I don't want to say death knell, but very, very difficult for them to move on from here. So yeah, exit poll. So these 3 factors, I think, may be giving some steam to the market today.
Yeah, and the dollar index too.
Oh yeah, it's come off.
It's come off. So therefore, I mean, on the global front, all of this, plus just one thing to watch out for, and I'm sure Tamanna will cover all of that in detail, but there is a BOJ presser today, and if there is some hawkish commentary and the yen were to rally, then just a bit of a further fillip to maybe a broader dollar index weakness, which should augur well for risk assets. So ahead of the MPC, you're just in a perfect state, right? Yesterday the Bank Nifty stayed in the green. It's in a good state, if you will.
So the stars are aligned. Now, I think the only fly in the ointment, if at all, could be corporate results, and some of them all right, some of them not so great. So that's the broad idea that you need to look at before going into today. Implied open 38 points up. So some trepidation there. Also, of course, that FII flows sort of reversed after 1 day. 1 day of positive flows after 23 sessions, and then you're back to business of selling. So, which we had told you, if you recall, that let's not bring out the party hats.
Hold your horses.
Hold your horses. That's right. But let's get you the global setup very quickly. U.S. markets have continued their winning run. The Dow rose over 300 points. Investors seem to be shrugging off tariff war fears. And maybe that's built into the pause on tariffs on Mexico and Canada. Yes, the tariffs with China persist, but then that is something which was expected, and we saw through the Trump first presidency, through the Biden presidency as well. That never really went away. So having said that, you did see markets in the green, Dow futures also in the green, even as we speak. In terms of earnings, because earnings on in U.S. markets also in focus, Ford has beaten expectations on earnings, but they have guided for a very tough 2025. They don't think demand will really come back, and you saw the stock slipped in post-trade sessions as well. Treasury yields, and this becomes important. The U.S. government and the U.S. Treasury actually announced that it won't step up its debt issuances. Treasury yields slid post that, the 10-year at 4.42%, and you saw the dollar index also come off, as Neeraj has mentioned. So both those factors from an emerging market and Indian market perspective are positive. Jobs data which came in was important. This is the private jobs data. Remember, the big number will come in tomorrow, Friday US time in the day. But the private jobs data shows, and this is by ADP, an increase of 183,000 jobs in January, way above estimates of 150,000. So the job market still quite strong in the US. Oil prices slumped as US inventory has risen, Brent below the $75 mark. That also a positive from our perspective. Asian markets largely open in the green. Bank of Japan will be something to watch out for, but right now, most indices in the green, and the implied open is also telling us that you may see that. I'll come back to details on the Delhi fight, but let's go through the trade recap before that.
We were here yesterday, Neeraj. I'm sure you were watching from home, but we started more or less the way that it's indicating that we will start today.
I'm sorry,
yesterday.
I wasn't.
You weren't watching. He wasn't watching. All right.
My health didn't permit me.
I saw you messaging on a few groups, so I assumed that would be the case. But in any case, we've already spoken about this. Foreign institutional investors took a bit of a break, and then they came back and sold again. 1,683 crore thereabouts. Domestic institutions buying to the extent of about 1,000 crore. Think about it. Large caps had a very, very sharp move early on in the week. So to a certain extent, I guess you can say that they were taking a bit of a breather yesterday. And we ended more or less at the low point of the day for the Nifty 50, and you came off the high point quite substantially. In fact, actually, if you think about it, 120 points was the range for the Nifty 15. We ended about 0.2% lower, just shy of that 23,700 mark. 23,780 acted as resistance in trade yesterday, and certainly a level to watch out for in trade today as well. Broader markets outperformed, particularly the small caps, and the Nifty mid-cap index was up about 0.7%. The small cap index up about 1.6%. Some of the budget day moves were reversed over the course of yesterday, and to a certain extent, even the day before that, realty, FMCG saw selling. Metals, oil and gas, energy, on the other hand, saw buying. The rupee, and we spoke about the dollar index, it's going to be something to watch in trade today because the rupee dropped as much as 38 paise yesterday and closed at a record low of 87.46 against the dollar, Neeraj.
Yeah, and Alex, so, like we said, a confluence of factors, if you will, which all align to this. So if you just look at what the trade, one, the trade setup, and two, a couple of notes that I just want to quickly highlight after that as well. So first, the global rally and the lower yields may all help the market move in early trade for sure. The key is yesterday, while the Sensex ended lower, the Bank Nifty still ended in the green, about 0.33%, if I'm not wrong, in the green for the Bank Nifty, and which is the key to the next 24 hours trade. And why I say this is important, viewers, because if you are not a positional trader, and let's say if you are trading for the short term, you don't want to run the risk of going into the policy with a long on the Bank Nifty, because in their wisdom, if the MPC were not to announce a rate cut, and a lot of people, including Nilkan Mishra, have said that the MPC shouldn't. So if the MPC doesn't announce a rate cut, there will be a knee-jerk reaction to the Bank Nifty, and stop losses, if any, will get hit. So the prudence might be that if the Bank Nifty, if you're sitting on some bit of gains on the Bank Nifty, you might want to trim those positions, if not completely take them off the table. If you are a day trader, if you're a positional trader and your view is slightly beyond, please take that view. And I don't know what that view is, but all I'm saying is if your view is for the short term, then you're probably prudent as a trader to get the chips off the table, maybe at 328 today, or maybe tomorrow by whatever, 10:55, if you will. So that's the key. The other thing is all CDMO players have now come out largely and posted a very strong Q3 and good commentary. So you see the commentary that came in from Ami Organics, of course, Laurus, Divi's, and now Piramal Pharma. Strong numbers, 40% uptick for Piramal Pharma as well. And I think all of those stocks are doing well. The point being, it's a pocket that has started to move after a long time. There might be some tailwinds to this. And I don't know if the news of the tariff surcharge review may impact solar cell manufacturers or no, but you may want to keep an eye out for this. I mean, Vari's had enough news flow around it, so that is the other thing. But guys, just a couple of notes which really stood out for me. One is that Jeffrey's note on banks and IT. It forms a part of the trade setup simply because these are the two largest, heaviest sectors, right? Northwards of 40%, close to 45% weightage on the Nifty, right? Or the Sensex, as the case may be. Jeffrey's note says that both sectors have jointly underperformed 75% of the times in the last 15 years. In only 20 to 25% of the times have they jointly performed. Jeffrey's believes that this is the time when we are in the zone wherein this is the 20-25% of the time wherein both banks and IT could perform, and they are overweight both. And the reason being, they believe that there will be dovish comments from the Reserve Bank of India, and with the government capex likely to step up because they have to reach that mandated number, the short-term boost in the economy augurs well for banks. Conversely, pressure on INR augurs well for IT, aside of the fact that the commentary from the US banks has been strong, etc., etc. So they are overweight banks and IT, which augurs very well for the Nifty, if not for the mid caps and small caps. So that is one. And there's a Citi note today out, forget the details, but they are saying that their analysis of Q3 thus far, their headline is that outlook is improving. We started off this earnings season saying that earnings are not looking good.
Yeah.
And now we've spoken about it on this platform as well, right? That somehow the last 10-15 days, the numbers have actually had a more positive tinge. And now they are saying that outlook seems to be improving, which is great from a market's perspective. That a dovish MPC, a higher capex government for the next 2 months, and if earnings are improving, Yeah, and good and decent valuations. You're a good cocktail.
But they're saying outlook is improving.
Of course.
Not the earnings per se. And I think it depends which sector.
Yeah, but because Q3 is discounted now, you want the outlook to be better.
Yeah.
I mean, it's
It
good
could
news.
change the narrative.
No, just in terms of commentary and to add one point on banks, if you look at what Nestle has said in its detail, and they are making the point that the 1 lakh crore consumption boost by cut of taxes, in their view, may not really come back into consumption. They think people will use that money for debt repayment and for maybe savings. Again, positive for banks, but also why I would take Nestle fairly seriously, because they were the first ones who called out that the middle class is shrinking. If you remember, in about October of 2024, and there was a huge furore at that time saying that, you know, why are you saying the middle class is shrinking? But you did see policy action to address exactly that issue. So, as per Nestle, they don't expect a huge uptick in demand. In fact, on the FMCG point, all of the commentary of numbers that have been reported post the tax cut also have not been very positive. They're not yet sure that it comes in.
To the point on saving, just one more point here.
Sure.
Neeraj, I was speaking to a CIO equity just a couple of days back, and the question that I asked is, if there is more saving, if there are more SIPs, if the buy-in is in that form, then what we've been talking about in terms of deployment, where has the money gone? It's gone into small cap funds, it's gone into mid cap funds, it's gone into thematic funds over the course of the last 1.5 years. Do we see more money rushing into the broader markets, and do we see a question mark or the valuations coming off? It's not going to, if more money keeps flooding into that space.
Yeah, well, it's not bad because we have a heavy issuance calendar, right? 2025. So therefore, good money coming in while FI money is absent is actually welcome. But just very quickly, 2 more points here. One to Tamanna's thing that she rightly pointed out, right? I think Madhu in his interview mentioned that some of the consumer companies are also facing the heat of the disappearing middle class because regional companies have come to the fore, right? And therefore, they are hurting the pan-India players, part one. And just because the note opened up, I'll just make this one last point. The Citi note, India Equity Strategy note, says this, that after a 10%, over 10% decline from peak with valuations at 19 times 1 year forward P and FI positioning at the highest underweight in 15 years, India looks well placed. Our December 25 Nifty target is 26,000, 10% upside.
Oh,
nice.
मुंह में घी शक्कर वाला note from Citi.
Some might actually say 26,000 for 1 year forward. Okay, okay. It's not
under the current sentiment.
No, under the current sentiment. I mean, if looking at what the pain is right now, that seems, you know, I mean, till a couple of weeks ago.
I'll take it.
Neeraj's commentary in the post-budget party was everyone was feeling
Mandi
down and out, Mandi type mood. So then that is why. Yeah. Okay, should we just talk about Delhi for just a second?
We should.
And before we get to our stocks, and just we'll take a few minutes on this. So what really is happening? Of course, elections ended in Delhi yesterday. Voter turnout was pretty decent. We will know the results only on the 8th, that is Saturday. But of course, exit polls did come out. Now, having said that, we know that exit polls can go very, very wrong. So I'm starting with that caveat and I'm underlining it. But surprise in store in Delhi is the question, because most exit polls are now predicting a sweep for the BJP in Delhi. If proven correct, if these polls are proven correct, BJP would return to power in Delhi after 27 years. Wow. Some polls are predicting as high as 44 seats for the BJP. Remember, the assembly has 70 seats and 36 is the winning mark. Delhi is in the Delhi assembly. The Aam Aadmi Party has won the last 3 elections. They couldn't complete their term in the first election, but if they win, this will be a 4th time that Delhi is voting back the Aam Aadmi Party. So either way, this is going to be a historical verdict. I'm just going to pull up some of those polls and the poll of poll that we've put together just to give you a sense of what has been happening. This is the poll of poll. The poll of polls is showing BJP at 41, Aam Aadmi Party at 28. This is an average of about 8 to 10 polls, and the Congress 2 to 3. Which is coming in. So, for example, Chanakya Strategies is saying 39 to 44 for the BJP, 25 to 28 for the Congress. DV Research is saying 36 to 44 for the BJP, 26 to 34 for the Aam Aadmi Party. So it's fairly close over there. But most of them, even a JVC, are saying 39 to 45 for the BJP. What's interesting is a lot of channels didn't conduct their own polls. These are agencies which came out and did it independently. I think channels have burned their fingers enough. So it's looking interesting.
I think the NDTV network, and correct me if I'm wrong, has taken this stance from a long time. Right? We'll go with the
poll
poll
of polls. Yeah, that's true. If it does go through, and the polls come correct, another thing, freebie culture, or you call it freebie culture, subsidies are here to stay, because look at the BJP's push. We will continue every scheme that the Aam Aadmi Party has done, and we will add more.
Wow.
So that is what they're saying. So bijli, pani, shiksha, school, all that will continue. And we will give a special stipend to women, and the whole host of things. So same with the Aam Aadmi Party and the Congress, no one's really backing off. So that continues, no matter
Unfortunately.
what happens. Yeah.
And the AQI is an issue that they're talking about as well.
Barely.
No?
Barely. Cursory mention.
Okay.
It's only the AQI is an issue only on X and social media platforms.
And on the Nikhil Kamath podcast.
Yeah, not in the real world of Delhi, unfortunately. All right, let's move to stocks this morning, though. So that was a bit of a political detour we took, but this is something that the street will watch. Let's talk about stocks this morning. Swiggy, first on my list, a thumbs down for their third quarter. Their net losses have widened. They have missed estimates. Revenues are up nearly 11% at 3,993 crores, but the estimate was 4,019 crores. The EBITDA loss that they have clocked is about 726 crores versus 554 crores last time. The estimate loss was 535 crores. So the street was expecting losses to narrow. Losses have widened. They've seen a net loss of 799 crores. The estimate was 620 crores. So same on both segments. In terms of segment-wise performance, revenues for food delivery were up 3.8%. GOV, which is something that is very closely watched for this category of companies, Swiggy and Zomato, gross order value was 3.4% Q-on-Q increase. Bolt now contributes to 9% of total revenue. I thought that was fantastic in just such a short period of time. Quick commerce revenue is up about 18%. Gross order value growth in quick commerce was 15.5%. Average order value rose 7% Q-on-Q. They've maintained guidance of doubling dark stores and raising dark store size by March 2025. But they have underperformed as compared to Zomato's 27% growth Q-on-Q. Going out revenues have also grown about 12.5%. Their supply chain and distribution revenues up 16.5%. Other things to just look at very quickly. Instamart's adjusted EBITDA margins fell 420 basis point Q-on-Q. Their dark store additions have accelerated, hurting profitability. So that may be taken into account by the street, because if you have to compete in this space, you have to add more dark stores. I'm just going to read out one or two notes on Swiggy. UBS has maintained a buy, by the way, at 510. They're saying better food delivery, but quick commerce underperforms peers. So that's key, because it's all become about quick commerce right now and delivering everything in 10 minutes. Yesterday, Zepto says it will deliver test drives for Skoda cars in 10 minutes. So it's going to the next level. They say competition in Q-commerce space is intense and margin pressure will continue. Macquarie, meanwhile, has maintained an underperform with a target price of 325. So that's a bit of a pain point. They say that in Q3, quick commerce economics have meaningfully been challenged, and they have reported a wider than expected headline net loss dragged by Instamart. In food delivery, they see a clearer path to achieve the company's margin guidance. So tough one for Swiggy over there. Sagility India is the next one on my list. It's a thumbs up on Sagility, and we're going to be speaking to the company in a bit, so stay tuned for that as well. The revenue is up 15.3% at 1,453 crores, a tad below estimates, but definitely a bump up. EBITDA up nearly 51% at 392 crores. This is a beat on estimates at 325 crores. Margins at 27% versus 20.6%. Big bump up in margins. The estimate was 21.8%. Net profits at 217 crores versus 70.5 crores. So a big jump there as well. In constant currency growth, revenue was up 15.3% year on year, 9% quarter on quarter. They have talked about their recent acquisitions. Broadpath, this has strengthened the position among top 10 largest health plans in the US. So Sagility is the other one to watch out for. Cummins is the third. Cummins India, thumbs up on the results. Revenue PAT has beaten market expectations. EBITDA margins, though, have missed street estimates. Overall revenue growth has been led by both domestic and exports as well. Domestic sales were up 18% at 2577 crores. Export sales is what's really boosted, up 43% year-on-year at 464 crores. Just look at the core numbers very quickly. Revenue up nearly 22% at 3096, beat on estimates. EBITDA up 10.14%. This was tad below, or I would say in line with estimates really. Margins at 19.3% versus 21.34%, so a bit of a downtick over there. Net profits, though, were up 12% at 588 crores. The estimate was 452 crores. And of course, there's an interim dividend of 18 rupees per share. They do say there is uncertainty in different regions globally, which leads to an overall subdued outlook. This might be a bit of a bummer, even though the numbers overall look good. They expect recovery in export demand and remain cautiously optimistic about demand going ahead. So Cummins is one thing to watch out for as well. Those are my first top three.
Absolutely. All right. So my first stock is actually thumbs down. It's in the paint space, Kansai Nerolac. Okay, I must admit the rating, I was initially contemplating putting a different rating, but then in the context of what you've seen on Asian Paints, the commentary on the volumes going forward, this seems to be playing out for Kansai as well. The revenue is up or just about flat actually at 1,922, in line with the expectations. The EBITDA has declined about 3.5%, 3.7%. The margins have actually contracted, but less than anticipated. It was pegged at 11.5%, come in at 12.2%. The PAT number is actually significantly higher, but this is largely on account of an exceptional item. There was a sale of a land parcel to the extent of 629 crore rupees, and that has padded up the bottom line. The bottom line is coming at 681 crore rupees. If it wasn't for that, actually, it would have missed. What is Macquarie saying on Kansai Nerolac? They've maintained a neutral with a target price of 255. And what they're saying is that the margin was a beat. The chief executive officer is changing. What they're saying is that the decorative sales segment was down about 3 to 4% in the quarter, and it was actually better in terms of performance versus Asian Paints. The concern, however, is a weak performance in international subsidiaries. Now, why am I saying it's similar to Asian Paints? Because ultimately the problems are the same. The outlook on growth is going to be a concern for this company, as it is for the rest of the sector as well. Let's move to the thumbs ups. Skipper is a thumbs up. It's a very solid set of numbers that came through for this company. A 40+ increase in the top line, and the EBITDA margin has also expanded to the extent of 15 basis points, but it's still significant. The EBITDA has risen by as much as 44%, and a very solid number in terms of PAT growth, up as much as 76%, coming at 36 crore rupees. Don't be surprised if this stock gets a big thumbs up at the start in trade today. The third one is in a related space as well. It's in the transmission and distribution space. GE Vernova T&D, the numbers were good. Revenue increased as much as 28%, came in at 1,074 crore rupees. This is more or less actually in line. It's just marginally below the consensus estimates. EBITDA is up very strong. In fact, it's risen as much as 86%. The margins have expanded quite considerably, coming in line with expectations at 16.7%. And what an expansion it is compared with 11.5% in the comparable quarter, and a strong growth in the PAT as well. That is coming at 143 crore rupees, marginally above estimates. But what you need to focus on is that the order backlog is at a record high. It is up 1.8x. And come in at 10,780 crore rupees. And in fact, 85% of the orders are coming in from domestic customers. The mix also on the revenue front is largely domestic, 78% compared with 22% for exports. And for the 9 months, the order intake is up as much as 1.75x at 7,871. So very strong numbers for both GE Vernova T&D and Skipper as well. Neeraj.
Interesting. Okay. So that's, a set of 6 stocks which could react. I have 3 more just very quickly before we move on to the next topics. VRL Logistics seemed good because the revenues were okay, 12%. So nothing too dramatic and almost in line with estimates. But look at the margin performance. Margins at 20.2 versus 12.8. The estimated was 16. So they estimated an uptick, and it's come even better than estimated. And net profit at 59 crores, therefore, versus 13.7 crores. The estimates were 38 crores. This one could do really well. I mean, it could well have been the stock of the day if the revenue numbers were, northwards of 20%. So revenue is a bit okay. Margin performance, terrific. Similarly, Avalon Tech. This one came into focus about a couple of quarters back when the stock price really shot up. Now it's living up to its numbers, I think. Revenue is up 31% at 281 crores versus 2114. The estimates were 283, so in line. Net margins at 12.3 versus 7.7. Again, solid margin expansion. The estimates were 11.3. They've come in at 12.3. And net profit thereby at 23.9 versus estimated 19. Solid show by Avalon. I would suspect that the stock could do well. The one which will not do well is Sula Vineyards. That's the third one on my radar. And by the way, we could have chosen many others, right? There is some very good brokerage notes, etc. But Sula deserves a mention simply because now it's consistently disappointing. So revenues down, margins contract quite significantly out there for Sula. And net profit down 34%. I would suspect this and quarter four would be key quarters for wine tourism as well. And despite that, not quite doing well. I would suspect Sula Vineyards would see some correction. So these guys are my top three.
Very interesting. And there are, of course, a lot more besides that in the way of earnings, right? And one, of course, is Cognizant, and or rather the IT pack on the back of Cognizant. Let's talk about this, and in fact we've got Rucha joining in to talk about why this is significant from the context of the IT pack. Rucha?
Thanks, Alex. Good morning. So Cognizant reported its December quarter numbers. A CC revenue growth came in at 6.7% year over year, operating margin at 15.7%. But what is important for Indian IT companies is the guidance which they have given. Well, in terms of the first quarter of CY25, that is the March quarter, they've given a revenue growth guidance of 6.5% to 8% in YOY in CC terms. And in terms of operating margin guidance for the whole of FY25, they have given 15.5 to 17.7%. In terms of revenue growth guidance for the full CY25, they have given a guidance of 3.5% to 6%. Now let's look at what Infosys had guided. In terms of revenue growth for FY25, they had guided for 4.5% to 5% in constant currency growth. So if you have a look at the guidance which Cognizant gave, it's a tad above the guidance range which Infosys had given. Let's look at what HCL Technologies had given. In terms of revenue growth, they again had given a similar kind of range, 4.5% to 5% in constant currency terms. So if you have a look at Cognizant numbers, the guidance implies a positive uptick for Indian IT companies. But in terms of the December quarter performance, where CC revenue growth was at 6.7% for Cognizant, the same was at 6.1% for Infosys, so largely around the same range. And for HCL Technologies, it was 4.1%. So much of a gap in terms of what Cognizant reported in its December numbers versus what Infosys and HCL Technologies reported. But the guidance implies a positive outlook for Indian IT companies going ahead.
Just one quick follow-up. Which are the companies, I mean, I don't know if you have it at the back of your hand, but which are the companies that are most aligned to what Cognizant does within the Indian landscape? I mean, just trying to understand, if Cognizant is saying the outlook is positive, are there any other the Indian IT companies which are most aligned to Cognizant's business model, if you will?
So Neeraj, largely the top tier IT companies, Infosys, TCS, all of these top 5 companies, except for Tech Mahindra, because Tech Mahindra has largely communications exposure. So these top companies, because they have higher BFSI exposure and higher exposure to US clientele base, these will largely align on the similar levels as Cognizant. And why have I picked Infosys and HCL Technologies? Because these are the only 2 top tier companies which give out their FY25 guidance.
Noted. Rucha, thanks so much for putting this into perspective. Appreciate this. So watch out for some of the IT names, maybe not a TechM, but some of the others, including HCL Tech for sure. Ties in with what Jeffries was saying, right, about IT as well. So let's wait and watch what IT does. But by the way, just before we hit that break, some key things to watch out for. Stocks, that we marked a few. Here's the top list from our side on NDTV Profit's watch list. Agility amongst the key ones. Operating profit up 67% should help. We are at logistics. Freight hikes drive PAT up 4x and a splendid margin expansion. Redington, strong results, beat estimates. Watch out for this one. Skipper too. PAT up 70, profit after tax that is up 76% on strong order wins. And DLF, Jefferies sees a 24% upside. More importantly, CLSA has upgraded it to a high conviction outperform.
Okay, not so great would also be Swiggy, but before that, Afcon's infra, Jefferies sees a 24% upside. Swiggy, their net losses have widened, and more importantly, their quick commerce has underperformed competition. Gujarat Gas has seen a fall in margins as costs rise, and Sula Vineyard, weak results, contract in margins. So those are some of the stocks on the downside. We'll take a very short break. Let's take a look at the implied open before we get into that break. And on the other side, we get you top trading strategies, the stocks you should watch out for, and so much more. 37 points up is what we're expected to open at this point.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है.
Okay, well, thanks for staying tuned to us. And you know, before we pick up, guys, it's important to kind of put this into perspective, right? That what is it that, what happens if the MPC is dovish, or what happens when the MPC is not too dovish? And we'll talk about this tomorrow on air for sure. The whole day will be about MPC, but important from a trader's perspective, because it might well be a trade only for today, right? Now, in my assessment, that it seems to be a given that the MPC will be dovish, considering the policy decisions that they've already taken. The only cliffhanger is, what if they do not announce a rate cut? There's a bet between me and Sajid about whether they will or no. And
I've piled on to that as well.
Yes, so I've bet that they will. But if they don't announce, if they announce enough liquidity measures, but say that we are waiting for a rate cut, maybe due to the Fed or otherwise, whether they speak about it openly or no, what happens then? And I believe that there could be a knee-jerk reaction on the banks at least, because I think a 25 basis points is now nearly plastered in. I don't know how you guys think about it.
No, completely. The commentary that I'm hearing is 25 basis points, take care, but what about the next few policies? Is it going to be enough to do 25 basis points? A best case scenario, one of the best case scenarios being talked about by a lot of agencies is 50 basis point rate cut on the optimistic side. Oh. That's on the optimistic side. Maybe, broken up over time. Yeah. But yeah, I think Governor will deliver, but more than even the liquidity, his tone, how is he seeing the economy? How is he seeing global threats and headwinds? Will become very, very crucial.
The first time we're going to be hearing him as well, which is going to be absolutely incredible to watch. And you can catch that right here on NDTV Profit. Just a reminder, 10 a.m. is when it starts, by the way. And we've got lots to talk about before that. Let's talk about banks and IT though. Neeraj mentioned this very briefly. It has to do with a Jefferies note, and what they're saying is that this might be confluence of factors that results in these two sectors firing together, not something that happens very often. Harsh joining in to tell you why that is. Harsh, morning, take it away.
Well, yes, it's curious because a 25 basis point rate cut could bode well for banks and could bode well for IT. And why IT? Because rupee depreciation may start to kick through. So those are two factors at play. What Jeffries fascinatingly suggests is that 70% of the times these indices in the last 15 years have moved in opposite directions. And therefore, this could well be a period in the 25 to 30% bracket when both of these indices actually outperform. And therefore, they are very positive with regard to both. Liquidity push with regard to banks should help numbers on the banking front. And when it comes to IT, a lower or a rate cut could well mean that rupee will continue to be under pressure and could aid the numbers with regard to IT as well, and all export oriented sectors, but IT in particular, and that's what they've suggested as part of their note.
Okay, this is a point which Neeraj mentioned earlier as well, but so many earnings to focus on this morning, and Varsha is joining us with other big earnings that we need to look at. Gujarat Gas among them. Redington has also reported, so has CMS Infosystems. Yes, Rucha?
Thank you, Tamanna.
Varsha, sorry, Varsha. My bad.
That's fine. Let me start with Gujarat Gas, wherein they've given a weak set of numbers. The EBITDA decline that you're seeing, this is reflecting higher costs. This is on the back of higher costs that the company has seen. While if you see the revenue was up 9%. Now they've reported highest ever CNG volume, that is 12%. Increase year on year that they've seen, and they've added over 38,200 new domestic customers and commissioned 5 new CNG stations. Then on my list is Redington, wherein good set of numbers actually. If you see the strong execution across business segments and geographies drove their performance. The cloud business, however, grew 42% year on year, and they've seen strong growth when it comes to UAE, which grew 24%, and India, which grew 18%. And they're seeing the signs of recovery in Saudi Arabia and Turkey. Last on my list is CMS Infosystem, wherein a weak set of numbers. Now revenue deferred due to slower order execution. This is the reason we are seeing revenue down, which is almost 7%. And they've given this FY25 outlook as well, wherein they're expecting revenue to be within 1 to 2% of lower range of guidance. And this is on the back of slowdown in consumption and delay in contract rollout. Now FY25, according to them, is a consolidation year on the back of strong 20% plus revenue CAGR that is seen over FY21 and 24. So FY25 may not be overall good for this company. Okay.
So FY25 outlook is looking tough. I would say a mixed bag on results. Wouldn't go as far as to say that many positive. I would say many negative as well. But the outlook may be improving now from what we're hearing on the ground. Let's get that take from Neerav Asher, actually, Head Equity Research Analyst at Latin Manharlal, joining us this morning. Neerav, very good morning to you. Let's start right off the bat. First, with the expectations ahead of policy, is today becoming very, very crucial to set your positions in anticipation of what could be a positive outcome from the policy tomorrow?
Yeah, good morning and thank you for the invite. I think very true. We are at a very crucial juncture. I think the expectations of a rate cut are quite positive and quite high at this point of time. And I think it's high time that the rate cut come so that it boosts the economy. And the various sectors of the economy boost industrial growth, especially in the light of the fact that we've seen a slowdown in the economy during the last 3 quarters. So I think definitely a rate cut would augur well for the economy.
Okay. Okay, let's see if that were to happen. The Bank Nifty has been positioning itself for that, and let's get in Nilesh Jain's view on that as well. He's Head of Technical and Derivatives Research at Centrum Broking. Nilesh, good morning. And the Bank Nifty withstood some bit of sideways movement by the larger markets yesterday, Nilesh. I wonder, I'm starting over the bank nifty, we'll get to the nifty as well, whether you can give the comment there. But if somebody were to be long the bank nifty ahead of the MPC decision, would you recommend staying long until the end of day today, or would you recommend booking profits here?
Very good morning to Neeraj. Good morning, everyone. So yesterday we have seen an outperformance, and some profit taking at high levels was seen in the Nifty and Bank Nifty both. But yes, the comfort is coming in the Bank Nifty. Reason being, it has sustained yesterday's gap up move, and it is also sustaining well above psychological mark of 50,000. So looks like it is heading towards 50,800 to 51,000. So that's the immediate target that one can keep an eye on, and we are advising to stay put, keep a stop loss below 50,000 in the spot levels as long as it trades above that. There are high possibility in a day or two we may see Bank Nifty moving towards 51,000. So that's the 200-day moving average as well. Now coming to Nifty, comparatively we have seen some underperformance yesterday on the back of profit taking. It is facing resistance at the 23,800 mark. So I would rather wait for a breakout about 23,800 before buying Nifty, and then probably we may see Nifty moving towards 24,000 as well. So undertone and structure no doubt looks positive, but advisable to buy on a breakout, or better wait for some dip towards 23,650 that can be bought within with keeping a stop loss below 20,600. So structure wise, Bank Nifty looks strong.
All right, let's talk about your pick as well today. Nilesh, how confident are you in picking buys today? Are you splitting it, or are you picking buys?
So the focus is definitely on the buy side. Ambuja Cement is something that is looking strong. If you look at the cement pack as a whole, ACC, Ambuja, Ultratech, JK Cement, in fact, all these stocks are looking strong on the chart. So on the back of that, we may see a follow-up move in Ambuja Cement, a move towards 535, 540, something that we are expecting, with keeping a stop loss below 511. Ambuja Cement can be bought, and upside target would be 538. Apart from that, another stock that is looking positive is Tata Power. So Tata Power is gradually moving higher. 380 is a breakout zone, but we are preempting that it is likely to move towards 390 to 400. These are the positional target. With a stop loss below 355, Tata Power can also be bought. And another stock that is on our radar is Piramal Enterprise. So within NBFC space, ahead of RBI policy, we may see a follow-up move to continue. So Piramal is something that is looking attractive for upside target of 1,075. Stop loss can be placed below 1,030.
Tata Power, of course, posting its numbers yesterday. It was a beat on the EBITDA and the PAT side, on the profit side. Let's talk about earnings though, and we've got 6 Nifty 50 companies that will be reporting numbers. You might have got that actually on the bottom of the screen, but let me read out the companies for you. There's Bharti Airtel from the telecom space, certainly something to watch. Britannia Industries, as well as ITC and Trent, because that is something that you want to focus on when we're talking about the consumption story and how that plays out. Trent, by the way, has lost ground in the recent past. It was flat yesterday, but it lost ground day before yesterday. You've also got ITC, or rather you've got Hero MotoCorp and State Bank of India. Hero MotoCorp from the two-wheeler space. And you want to watch for the commentary on motorcycle sales going forward, because that's going to give you an indicator of how the consumption in the rural market is going to play out. And State Bank of India, of course, you've seen a lot of public sector banks report numbers, and the asset quality has been a very positive surprise for a lot of them. Let's see how State Bank of India comes out with that. We've got Mahima joining in to talk about another consumption play, and we spoke about it briefly. Swiggy, it was on Tamanna's list. It was a thumbs down. But what are brokerages talking about after the results? Mahima, what are they saying?
Right, so I'll start with UBS. They've maintained buy with a target price of 510. What they're saying is that Q3 was better in terms of food delivery, but quick commerce has underperformed its peers. Competition in quick commerce space is intense, and margin pressures will continue in the next few quarters as well, is what the brokerage is saying. The next one is Macquarie on Swiggy. They've maintained underperform with a target price of 325. In terms of Q3 numbers, they're saying quick commerce economics meaningfully are challenged now. They've reported a wider than expected headline net loss, which was dragged by Instamart. In food delivery, they are seeing a clearer path to achieve the company's margin guidance, but they see challenged economics in quick commerce, slower growth in food delivery, and stretched valuations, which is why they've given underperform as a rating. however, they've also given a line with respect to Zomato as well. They said that they underperform on both Zomato and Swiggy as a platform, but they continue to prefer Zomato over Swiggy. Last one on my list is JP Morgan. They've maintained overweight with a target price of 620. So this is completely in contrast to what Macquarie has to say. They've said that food delivery was solid in terms of performance. Quick commerce displayed no growth, which is kind of concerning, and any correction in the stock will be an attractive entry point for Swiggy, is what the brokerage is saying. So this is the overall view as to how brokerages are reading Q3 numbers for Swiggy.
Brokerage reports are not actually that negative if you go to see. And let me get Nirav's point of view on this. Losses are widening because more dark stores are being set up, very simply put. And they cannot be in this business without setting up more dark stores. I mean, competition now is promising test drives of cars in 10 minutes. Some might say that it's, do you really need this as a society? That's a different issue for a different day. But Swiggy financially needs to do this. Is that what the street will also watch when seeing these widening net losses?
Well, yes, because I think a lot of money seems to be going in the expansion-related initiatives, and we've seen the impact of that. We've seen the platform GOV, gross order value, go up by 38%. The food delivery business has solidified its presence, and it's grown by around 19%. The quick commerce is facing some headwinds. There are some challenges over there because the competitive intensity has gone up quite a bit. But I think the dark stores expansion is something which is eating into the contribution margin, and I think that has led to the EBITDA losses widening at this point of time. But I think overall the outlook looks positive if the company were to be in a position to navigate these headwinds over the next couple of quarters.
Okay, I don't know if we've had enough data for a technical call on this, but let me get Shrikant Chauhan off the bat. Shrikant, since we're talking about Swiggy and Zomato, let me ask you both if you're looking at it before we get to you on indices, etc.
Good morning, Tamanna. Good morning, everyone. Say for Swiggy and Zomato, I think both the stocks have fallen to their extreme levels. But Zomato, I feel it is going to remain in a range between 250 and maybe 200 on the downside. So in case if there is any correction, then only we should look for adding these stocks. Otherwise, at these levels, there is no point in buying the stock. I'm not expecting any rally sort of activity because it is like completely overbought sort of stocks, and a lot of people have this position. So maybe it will take some time to move higher. But Swiggy, I think it is very close to its crucial levels of around 400, 420. And from here again, there is a possibility that the stock can move higher because everyone was waiting for the results. And after the result, and already the way there was fall in the stock, I am of the view that the overall result is now is discounted in the price, and today's correction will be an opportunity for medium to long-term investors to invest in. So around these levels, the stock is attractive to buy for with a short-term to medium-term view. And Zomato, I think it is better if there is any rally, then we should look for reducing some positions.
Let's get your index calls this morning, Shrikant. Are you feeling bullish on the bank nifty ahead of the policy?
Yeah, I think the overall performance of the market is really good. It is showing a lot of like broad-based sort of activity, and whenever there is such type of activity, I'm to say whenever the market is remain in uptrend and it crosses previous swing high without any major efforts, it clearly indicates that we are heading higher to the next major levels like 24,000 or maybe 24,200, where the market has spent maximum time in the past. So broadly, I am expecting market to move towards those levels. But in case if there is any correction because of any reason, we should look for adding long positions close to 23,650 or 550 levels. Broadly, we can keep stop loss at 23,500. So buy on dips should be the strategy for indices. Bank Nifty also, there also I'm expecting some gains in banks because our bond yield, India's bond yield is also now close to 6.65, 6.66 levels, which indicates that a higher possibility of rate cut in the RBI meeting, and it will help large banks like Axis Bank as well as HDFC Bank. So these stocks should do well. And after the, I think, Cognizant's result, IT stocks should also come into the momentum.
Okay, let's talk about your picks then this morning. What are you focused on, Shrikant?
Yes, from the IT space, we like LTIM, LTI Mindtree, which is currently around some 6,050, 6,020 sort of levels. There I'm expecting stock to move towards the levels of 6,200. We can keep stop loss at 5,950 for the same. It is forming some bullish consolidation formation, so it's a buy at current levels. And we also like from the pharma space, Alivus, that is Glenmark Life Sciences, which is currently around some 1200, 1220 sort of levels. And there we have a target of 1330. We can keep stop loss at 1180. So pharma as well as IT, this stock should be on the watch list.
All right. Thanks, Shrikant, for that view. Pull up AFCONs. This is something that you should watch. It was up and about in trade yesterday. 8.6% higher, 465 was a close at the end of trade yesterday, and Jefferies has initiated a buy rating with a target of 580, so a considerable upside from this point as well. Harsh is joining in to tell you what they're saying and why they have initiated with a buy. Harsh?
Well, 25% upside is what Jefferies is penciling in on this one, initiating coverage and therefore stock well in focus. They're calling this a play on the infra space, yes, but also the only credible alternative to a possible Larsen and Toubro. They are saying that it largely operates in the same segments, and I'll call out those segments for you. Road, rail, water, irrigation and marine. Hydrocarbon is also an area of expertise. Defense is not, and therefore also adds a little bit of ESG to the whole mix, which L&T does not offer as much. Now, in terms of diversification, it's well diversified and has a good track record with regard to execution, good cash flows and solid balance sheet. All of those add up very well. They are expecting a 72% CAGR on the profit after tax for this company over the FY24 to 27 period. So very strong. They are also expecting margins to go from around 10.3% currently or FY24 to 11.1%. So margins will also get better as efficiency improves. All of this to lead to this 25% upside. Very, very constructive, Jefferies.
Also, the other stock to watch this morning, and though numbers will come middle of the day, is State Bank of India, Harsh. What is the street expecting from SBI earnings? Since we're focusing so much on the banking pack today, important to get that perspective.
Well, it will be interesting to see where margins lie on this one, because you likely see some bit of margin tapering, but SBI has insulated itself to a large extent with regard to margin decline. But over the last quarter or two, we've seen that erode slightly. Whether the margins continue to erode will be something that everyone will watch out for, and commentary around what to expect as well with regard to that number going forward. The other piece will be on asset quality. Of course, agri, it's seasonally a quarter where agri pressure does come, and therefore you might see a bit of an uptick with regard to provisioning and slippages. But nonetheless, you will expect solid asset quality to come through for SBI even now. Corporate growth and how that's kicking through will also be a key. How the pipeline is evolving with regard to corporate will be a key. But you're expecting some bit of taper on a sequential basis on the profit after tax. You're expecting NII of around 42,500 crore, operating profit around 27,500 crore, slight bit of taper even on the operating profit side of things. Provisions will see a bit of an uptick, as I did mention, and profit after tax is expected around 16,500 crore. If I adjust for the one-offs in Q3 FY24, that number will see a rise of 15% YOY. Otherwise, there was a 7,000 crore one-off at that point, and therefore the number anomaly will be large, and hence I've taken this kind of normalized growth for perspective. OPEX visibility, operational efficiency kicking through will be other factors which we'll have to look out for, and growth commentary as well, of course.
Just very quickly, because you mentioned margin as the top point to watch, what is the range that would be comfortable or a decent number, and what would be a disappointment?
Maybe anything between 3 to 5 basis point decline over the last quarter would well be a solid number to watch. A 3.14% was the margin number last quarter. anything between 3 to 5 basis points is something I believe the street would still very well digest. Anything more than 5 basis points would likely be a disappointment as per whatever reports I've been reading.
Okay, so that's the State Bank of India story. I mean, let me get Nilesh Jain on this on charts. Are you liking State Bank of India, any of the other public sector banks that you would look at this morning?
See, within PSU banking space, yesterday we have seen some bit of underperformance within SBI. So State Bank of India, for the timing, I would rather wait for a breakout above 780. So it's an avoid at current level, buy only if it breaks above 780 for the target of 800 plus. But at present, within PSU banking space, Canara Bank is something that is looking attractive. And we may see a follow-up towards 98 to 100. So that is looking attractive. It can be bought at current level, can also be added on declines with a stop loss below 93.5. Apart from that, Bank of Baroda is another stock within PSU banking space that is also showing strength. And we may see a strong rebound towards 225 to 230. With a stop loss below 212, Bank of Baroda can also be bought.
Some mid-caps have come out with good numbers as well today. And just while we wait for a breaking news, Nirav Asher, very quickly, have you looked at the numbers of a VRL Logistics or an Avalon or a GE Vernova TND?
We've seen the numbers of GE Vernova, and I think because we like the entire transformer space, I think a very strong set of numbers, but of course valuations running far ahead. I think on a 22 rupees earnings, we have the stock going at 1700 levels. So I think on a PE multiple, it's very difficult to justify this kind of valuation. But I think the order book is quite strong in this particular space. But I think we would be inclined to still go with the Hitachi Energy. That gives us much more comfort as far as this space is concerned.
Interesting, particularly because if you look at the price performance over the last 3 months in the context of the broader markets, this is a company or a stock that has gained 1%. And certainly the valuations are not cheap. On to an NDTV Profit exclusive now. This is what we were telling you about. There's a regulatory change in the offing in the way that companies will have to report on environmental, social and governance norms and meeting them. We've got Charu, who's broken this exclusive story, joining in to tell you about the key details here. Charu, what would this entail?
Hi, so currently SEBI has a committee that deals with ESG disclosures, and it has been mulling on changing them in a way that they are more aligned with the global standards. Currently for our ESG disclosures, we refer to business sustainability and responsibility measures. However, we are hearing from our sources that the committee has been mulling to make it more aligned with the international disclosures. What we are also hearing that there will be the incorporation of the S1 and S2 provisions that are there in IFSR, which are international provisions. So these deals with sustainability and climate related disclosures. So the committee is discussing and trying to see if these can be incorporated in India's ESG norms. So this is currently in a discussion phase only, and before something comes out, there will be a proper consensus and debate and discussion in which all the stakeholders will be included, including the smaller players. And we have also heard that Shakti Foundation was onboarded by the committee to help it in its research related purposes. Apart from this, for the verification committee which will be verifying the disclosure norms, there has been some discussion about tweaking its accreditation related measures. For example, it will now have to be accredited by a government body. Now there is some information regarding that as well. However, once again I would like to mention to the viewers that this is still in a discussion phase. This is what the SEBI committee has been mulling, and there will be a consensus taken from all the industry stakeholders, including the smaller players, and it will be seen if it is going to be benefiting by getting aligned with the global measures, and then only a step will be taken.
Okay. All right. I mean, it would be interesting to see if there is any cost impact to align with global ESG norms. So that's something that we should definitely pursue. But thank you, Charu, for those details. That's the NDTV Profit exclusive this morning that you're seeing. We're taking a very short break. We're back with the pre-open. Take a look at implied open, still opening in the green, but no fireworks expected this morning, which is not necessarily a bad thing. We'll be back in just a minute.
वो भी अच्छा ट्रिगर हो सकता है।
All right, welcome back. You're watching India Market Open, and we've already given you some perspective on the stocks that you should watch out for on the back of earnings and several other developments. But I want to understand, Shrikant, how you're playing this entire conversation since the budget about consumption, because we've kind of flip-flopped and we've kind of tried to gauge what the implication would be, and there are a lot of theories playing out. But from a technical standpoint, the stocks that you're focused on in this space, there's been a bit of a seesaw in some of them, right? So are you making long bets in any of them?
Yeah, I think this space is definitely going to remain under limelight, and a lot of focus will remain there. But yes, in that we need to be very, very selective, because like all the consumption related stocks are not going to perform, because most of these stocks are really under pressure. And I think there we are going to see furthermore selling if there is any rally because of this particular news flow. So broadly, we are bullish on capital market related stocks like HDFC AMC or Nippon AMC, CAMS. There we are expecting further more activity. We are of the view that lot share will come in share market or in SIPs. Also, apart from that, we are expecting a few more spending will come for travel and tourism. So there also we are bullish on stocks like Indian Hotels or few other hotel names like Lemon Tree, or maybe even I can say East India Hotel. Indigo should do well, because there we are expecting furthermore spending. So these are the stocks on which we are going to focus. We are not specifically going to focus on consumer durables or maybe consumer staples.
Okay, well, you know, the pre-open rates, as they start coming in, watch out for reactions, and these are early numbers, but watch out for an Avalon Tech, watch out for VRL, watch out for Sagility, watch out for G Vernova TND, and we might see reactions on a bunch of those. So Avalon looks like will start off higher. G TND, Vernova TND looks like will start off higher too. I wonder if VRL Logistics is showing a similar thing. 7%, okay, doesn't have the 5% circuit. And these names will change, of course. Sagility is the other one, and Aarti Pharma was the other one. I mean, I think decent numbers by both. Sagility 5%. I'm striking it gold right now, guys. You want me to say something else?
Skipper.
Okay, Skipper. Let's see if that also is starting off.
Achha, Swiggy bhi dekh lo, since you're striking gold. Let's
okay,
see.
No, but
bad.
Swiggy, the numbers seemed a bit iffy.
Yeah. I mean, no, we're still striking gold in terms of having called it right.
Yeah, this
there
is
we are.
Still early days. Let's see how it settles, though, right?
Yeah, but
the initial
gives you a small brief of at least the market will not be happy with it, and it shouldn't be.
Yeah.
So I saw some commentary on Swiggy, and one of them was that this is the cost of 10-minute delivery. It's going to cost you. I mean, and if you recall, when we were speaking to Blue Star, one of his peeves was now, because of this change in consumption habit, people are expecting ACs also quicker, not in 10 minutes, thankfully, but no one wants to wait a day for an AC and 2 days for the technician to come and put it up, and that's the trend, but there's a price to pay for it.
What struck me, and I wrote this down because I wanted to make the point when you said Swiggy, right, and it was on your list, there were a few comments from Page Industries that talked about changing trends in consumption, where they're saying athleisure is a segment that is still doing well. Why? Because people are buying this on quick commerce. They've shifted from buying it from the stores, and they want even these products very quickly.
I have done it. I have actually done it.
But you may not have, just one small point, you may not have done it with an intention that you want it in 10 minutes, right? You want it today.
But it's convenient.
It's convenient, but not necessarily 10 minutes. My question is only this, that 2 years later, when these guys start charging an arm and a leg for 10 minutes.
I may still. Because you calculate the cost of getting into a mode of transport, the time it takes you braving traffic, finding parking, going to the store, seeing many options, might not getting what you want in stock in that specific store, standing in the line to pay the bill, driving back.
Yeah.
Yes.
Especially if you don't like to shop.
I will pay an arm and a leg.
If you don't like to go out and shop, I guess that's it.
I'll settle for 1 day delivery on Amazon instead of paying a premium on 10-minute delivery.
But see, and the other thing that I noted was what Adit Palicha said, and there was a clarification that he had to put out, or they had to
that
put
I'm not
out,
selling a car.
that they're not selling a car in 10 minutes. It's probably not going to have been possible anyway, because you can't pay more than 10 lakh on a credit card. Maybe very few that have that. But having said that, what he said, not yet.
Anything,
right?
anything.
I don't know what's going to happen.
Yeah, okay. But it comes at a cost is the point that we were talking about on Swiggy. But big brokerage call of the day, CLSA has upgraded. Actually, they've underlined their upgrade on DLF once again with a target price of 975. Harsh, why is CLSA so excited about DLF?
High conviction outperform, 27+% upside, certainly doesn't look like something that's going to go away very quickly. Very strong in terms of what they're expecting. One, valuation is what they're focused in on, and what they're penciling in here is last year DLF stock had gone from trading at around a 15% discount or rather 15% premium to NAV to now a 20% discount, and therefore one of the biggest positives with regard to or the biggest points or reasons that they highlight for this high conviction outperform is the valuation discount that now it trades at. The pre-sales trailing 12 months continues to grow well. They're expecting good momentum through maybe 4 levers. One, adequate new launches in the pipeline over the next 8 to 9 quarters. Unsold inventory remains healthy. Strong business moats that DLF has, especially in that Delhi NCR region, and healthy balance sheet. All of those 4 should trigger a strong sales outlook is what they are suggesting, and therefore that -1 standard deviation to 15-year average, what currently DLF trades at, is unjustified is what they call it, giving it a target price of 975. They're saying that some of the assumptions could well surprise on the upside rather than the downside, even their own assumptions, and a very, very strong GDV and a strong cash flow that you will see from rentals and yields also going up. All of this to aid DLF into the next 3 to 4 years.
You know, thanks Harsh for that. And high conviction outperformed is good to see in premium real estate. Nirav Asher, if you had to buy a real estate stock, would it be an NCR-led DLF or some other NCR stocks? Would it be South India stocks, or would it be the Mumbai-based real estate companies?
Well, it would be a combination of both, and I think we've discussed earlier also how we like DLF, how we prefer DLF, and some of the reasons have been already outlined over here. But I think one particular reason, they've got a very strong response to their Dahlias project, which is a premium real estate project, and I think DLF has always enjoyed the patronage of NRI buyers who have contributed substantially to DLF's projects. I mean, a very, very strong contribution. In some cases, I think 50-55% of the projects have been lapped up by NRIs. So I think this continues to be a very, very strong trend which we have been observing. And the ticket size obviously has to be on the higher side. And the second point, as you mentioned, was about the rental. I think the commercial leasing rental business is picking up in a strong way. And third factor is the deleveraging of the balance sheet and the cleanup of the balance sheet. I think all these factors are going to aid DLF in a strong way. And as far as the other stock is concerned, I think we continue to like Godrej Properties, which is now becoming a pan-India player in the real estate space.
I'm reminded of a conversation we had yesterday with Hiren Ved. Or was the day before? We had a conversation this week with Hiren Ved, and we asked him, what do you think people are going to spend the savings from the tax cuts on? And his bet was on real estate, and continued to be bullish on premium real estate. I thought that was quite an interesting take. While everyone has their own version of what people will spend on, clearly quick commerce is not necessarily there, or it costs the companies too much to deliver. Shrikant, I want to get your take on a DLF or Godrej Properties, both mentioned by Nirav, or is there anything else in that space that you're finding exciting right now?
Yeah, I think, see, all these real estate stocks are really showing a lot of strain. They are recovering from their lows. But in this space, we like DLF, we like Suntech as well as Macrotech, that is Lodha Developer. So these three stocks are showing a lot of strength in terms of their overall relative performance with other stocks in the same basket. For Lodha, we are of the view that the next level to watch out for will be 1350, and it is going to remain in a range. See, I'm not expecting any like a spectacular rally sort of trend in these real estate stocks, but yes, gradual upward activity is not ruled out, and the strategy should be to and buy on dips. For DLF, we have a target of 850. For Centec, we have target close to 550, 560, and for Macrotech 1350. So these are the targets on which we are banking. But if there is any correction, then certainly we should look for adding them.
So watch out. I mean, Zinka Logistics came out with numbers yesterday which looked okay, and VRL Logistics is really reacting to its numbers. 14% higher for VRL on the back of that margin expansion. Now, Shrikant Chauhan, logistics is not a pocket that has been fancied now for a number of quarters or years maybe, but very strong performance by VRL. If you can pull up the charts for us and tell us what do you think of that. Coupled with that, a view on Zinka Logistics. Morgan Stanley came out with a note and is saying that they are constructive there, post the numbers. Do you like any of the logistic plays, particularly these two?
See, for VRL Logistic, technically, if we see the overall price pattern, then it is not that encouraging. But yes, what I can see is that these stocks are completely highly oversold, and they are very close to their long-term support levels. Like the stock has spent a lot of time during the year 2015 to 2020 below the levels of 450, 460. And now again, it is coming back to the same levels, or it is at the same levels. So from here, we could see some bounce back, but broadly, the technical pattern is not that encouraging. But yes, from the logistics space, we like Aegis Logistic, which is currently trading around some 790, 795. The business is altogether into some other like areas of the logistic part, but this stock is showing a lot of strength, and I am of the view that this stock should move towards the levels of 1,000 again.
Okay, let's take a look at what has been buzzing in the pre-open session. Pre-open session has now ended, and on the upside for the Nifty. So that's a good sign, staying above the 23,761 mark. It's been a good week in that sense. Just some stocks that I want to get your view on, Shrikant, very quickly. Look at a Kansai Nerolac this morning on the back of numbers. DLF we spoke about, you gave your view, but even a Cummings, a Reddington, any of those that you think are poised for a breakout, or what you are spotting after the pre-open session?
I think from all these stocks, if I have to choose any one, then Cummins India looks really a strong bet to buy for. It was down on the back of fear that the stock may again underperform before the result. But from the parent guidance from the parent and the overall performance in the result, I am of the view that this stock should do really well. I am expecting the stock to again come back to the levels of 3,500. Even though it is opening higher by 4-5%, it's a buy. And if there is any correction, then certainly we should look for adding this stock, because from the overall this capital goods and engineering space, we like this particular stock. It is doing really much better as compared to other stocks.
Is a gotten a little patchy. Yeah. Hey guys, but on connection, no connection to this, but I'm just saying, somebody just reminded me, the Swiggy 90-day anchor lock-in opens in the next 1 or 2 days.
Yes.
And therefore, people who are wanting to buy the dip, please be mindful. If you're trading it, then once the anchor lock-in opens, the stock might see a bit of a pummeling as well.
Yeah, there is a whole host of companies whose anchor lock-in opens up in the next couple of days. So between the end of this week and next week, keep that in mind as well. That also becomes a very, very important factor to watch out, including for Swiggy. So I mean, that could be one of the reasons. In fact, shares worth 80,000 crores will be exiting their IPO lock-in by the end of Feb. So you are going to see, and this is 32 newly listed companies, so you're going to see a lot of excess supply in the market there. Nirav, anything you've spotted after the pre-open session?
Well, I think we like a couple of companies, but they've already come out with numbers. I think SRF is looking quite good, and Eicher Motors, especially after the monthly sales numbers. I think we like these two companies from a medium to long term perspective.
Okay. Shrikant, if I had to pin you down for one top trade, and considering that, I mean, it could have been VRL, but VRL is starting off 14, right? I don't know if it was VRL or no. So I'm saying post pre-open rates at those prices, if you had to bet on one stock for the day today, which one would that be?
The reason is because food is.
Okay, I think that line is patchy. We'll just try. What we'll try and do is while we open the market, maybe our producers can just get the line sorted with Shrikant Chauhan. It'll be important to get his post-open comments going. But 11 seconds left for the markets to kick-start today. In the last few days, we've got a bit of gold on our screen. Maybe that is helping the markets too. So let's wait and watch if the markets start off okay this morning. The penultimate day to the MPC decision, 0.25%. Not bad. Not quite what Dow did, but something which the S&P probably ended up doing. Nifty IT though, doing very strong post the Cognizant numbers. I think the read-through is largely positive for a clutch of IT names. Mid caps 0.25%, small caps 0.25%. Let's get the heat map up on the screen as the index flattens out completely. What's doing well? IT, Wipro, then the Bajaj twins. I mean, Bajaj Finance is in a zone of its own. I mean, there is a return to NBFC quality, and how in the eyes of the street. But Infi TCS and HCL Tech also there. Tech Mahindra, interestingly, is 1.4% higher. I remember Rucha saying that TechM doesn't have quite the linearity in the model. I mean, it's not quite aligned in the same way that Cognizant is per se. But yeah, right now the rising tide is carrying all boats. Even Stevens for the breadth. What's not doing well? Shriram Finance comes off. Apollo Hospitals. M&M. Interesting. 14 Feb as well. All 9 variants come up for booking. They've chosen Valentine's Day. And consumption taking a bit of a stick. Trend ahead of the numbers, Tamanna, also looking slightly weak. But what has Bajaj Finance done in the last one quarter is exciting. I tell you one guess, Parag Thakkar, who came in a table thumping buy, must be a really happy man.
Maybe his conviction works. Remember, ICICI is also on his list. Bajaj Finance, a story of how a good idea is something that the street is looking forward to. Neeraj is talking about gifting M&M a car for Valentine's Day. You're setting the bar high there. But let's pull up the broader markets before we get into the details, because spot of green there completely flat on the mid cap 150, while the Nifty also just barely holding on. But at these levels, if you're holding on, you're not getting a big sell down. That is good enough. Small cap 250 doing slightly better. Let's pull up the sectoral heat map just for a second. IT is the story. Bond yields coming off. Cognizant is the big factor then. We had a report from our colleague Rucha this morning talking about the Cognizant guidance that has come in. Oil and gas also looking fairly decent. Remember, crude prices have come down quite sharply overnight because of global factors. What's in the red? FMCG, consumer durables, but not massively, I would say. Healthcare, they're also taking a beating, but fair bit of green on the screen, which is good news right now for the market ahead of the very, very crucial monetary policy. I just want to pull up for you specific stocks that we're tracking this morning, and let's start with results impacts that we're seeing. T&D, order wins first. I'm going with results impact. T&D, Cummins, Reddington, Kansai, some of those coming in. Good set of numbers. Cummins working out. Reddington also about 5% up. I want to see what's happening to Kansai, Nerolac, InfoEdge, VRL, all of them. Kansai Nerolac about 4% up. Street is liking the numbers that they're seeing. InfoEdge also about 2.5% up. VRL Logistics is a stock of the morning, something on Neeraj's watch list, 18% up nearly in opening trade. Meanwhile, on the downside, I want to see what's happening to Swiggy when you open. Remember, anchor lock-in comes off in a couple of days. Losses have widened. Is the cost of 10-minute delivery 5% down on open on Swiggy. CLSA has given an outperform conviction on DLF. It was on our brokerage radar, 2.5% up this morning. In terms of order wins, Welspun Corp, Azad Engineering, those are some that you should watch out for. Nothing much for Welspun Corp. Azad Engineering flying this morning 4% up. But so many earnings coming up. So let's just take a look at some of these nifty companies, but we'll focus on it for you. SBI will report today. The stock is up. Trent continues its losing spree, but at least has been contained to some extent. Bharti Airtel also in the red. The others that we should look at is ITC and Hero among other stocks which will report, including Britannia. So not a bad start to the morning at all, Alex, and quite a few winners there.
No doubt, and also on the back of earnings, pull up something like an Aarti Pharma Labs. This is a pharmaceuticals and nutraceuticals manufacturer. Not very large, 6,700 crore market capitalization, but the stock is up 16% on the back of numbers. Not Aarti Drugs, I'm talking about Aarti Pharma Labs, which is in fact a 6,700 crore market cap company. Any chance you have a view on this, Nirav? It's something that you've tracked, and what would you say about the numbers if you've looked at it?
No, unfortunately, we've not seen the numbers.
Okay. Shrikant, I'll come to you then. If you can pull up the chart and see whether or not this pop today is something to be built on.
I think, see, all these pharma stocks which are related to the CDMO business, they are going to do well, and that is what that we are seeing right now in the market. We are seeing good amount of buying strength or maybe interest in Divi's Laboratories, Aarti Pharma, Piramal Pharma. There are like number of companies which are like into this business. But in that, if we see the Aarti Pharma, then it is really showing a lot of strength. There was like correction, but now again it is coming back, and the overall performance of the stock is suggesting us that again the stock can move to the levels of at least 770, 775 sort of levels. We also like Divi's Laboratories. See, technically the stock is showing strength, and again we could see the levels of maybe 64, 6500 sort of levels. But I think this pharma stocks, and especially from the CDMO space, the stocks from the CDMO space should do well. That's the overall.
I want Nirav's view on Kansai Nerolac, because the numbers, they weren't spectacular if you think about it. Flat revenue in the Q3, and while the margins were eroded, they were better than expected. I guess to a certain extent that is what the street is focused on, 12.2% margin as opposed to a sub 12% expectation. But Nirav, are you positive on this? Would you buy as certain other people are doing today?
Well, one thing about the paint-related stocks, of course, Asian Paints did disappoint. But as far as Kansai Nerolac is concerned, I think the stock has an exposure to automotive categories and industrial side, and I think it's more focused towards these areas. And it's been a stable performer, and the stock has been beaten down from the 320 levels to 240, 245 levels. It's got a very strong balance sheet, cash-rich balance sheet, and yesterday, of course, they have reported an extraordinary gain also on the sale of land. So I think it's business as usual for Kansai Nerolac. They continue to maintain consistency in their performance. So I think the stock should see some upward revision from the current levels, but nothing to suggest that there's going to be a runaway rally. I think it will stabilize at the 300, 310 levels from here.
Okay, a few other movers this morning. I just keen to know your view on Trent, Nirav. Trent will report today. State Bank of India will report today. Trent has had a pretty tough time. Would you build a position on Trent right now? The whole Zudio story, do you think is losing luster, or much more to go there?
I think today's key monitorable will be the performance of Zudio and how the company is, what kind of commentary is coming with respect to the Star Bazaar performance, etc., and the new initiatives like Lab Diamonds, etc. But I think definitely challenging times as far as Trent is concerned. How they are able to maintain their growth is something that the market will want to see at this point of time.
Okay. Well, Avalon was very good. Abbott, the stock came out with results yesterday, was up 6%, is up 4.5% today as well. last month for Abbott in FNO, so bear that in mind as well. Some positions might be there, but it's very interesting as to what's happening with some of the pharma names, as we said. Now, blockbuster results. I don't know if Shrikant is there with us. Shrikant, if you are, and if the feed is okay. Shrikant, I would love to know, one, your top call for the morning if you haven't given it already after the open rates. And two, from the pharmaceutical pack, identify something for us. Alex asked you about Aarti Pharma. We're just looking at all the CDMO companies, Divi's, Laurus, Ami Organics doing very well. So pharmaceuticals or healthcare as a bucket has done really well. What within pharmaceuticals looks the most promising chart?
Yeah, I think even for Abbott, we are bullish based on technical formation because the way the stock has again corrected back to its long-term support, and whenever we saw and we see deeper correction in Abbott, we see equal amount of rally in next few months. So this time also after correcting to the levels of 24,000, the stock is bouncing back, and based on the overall performance. In terms of its averages and other parameters, I'm of the view that the stock is going to surpass its previous high. So that's the view, and even at this level, it's a buy. That's my view. But yes, the view should be to buy with a medium to long term because, with a trading perspective, it is highly volatile stock. So it is better to stay away from taking any short term bets. But yes, if there is a long term view, then certainly we should look for buying. From the pharmaceutical space, all this CDMO space, I'm to say related stocks are really doing well, and they should do well. That's the view. So in that, we like Aarti Pharma, we like Divi's, but we also like few hospitals. So yes, we should focus on pharma companies, but also I think we need to focus more on hospitals. There we are expecting very strong returns in next maybe few months or years. So if there is a long-term view, then look for adding Apollo Hospital, NH, Global Health. These are the stocks where we should focus. I think all these stocks are consolidating and rallying. So whenever there is a correction, we are seeing sideways consolidation, and whenever there is any specific development, we see rally in the stock. So it's very clearly indicating us that these are the long-term stories to buy and hold.
Okay, that's a good story to buy this morning that we should look at. Pharma, definitely, and Neeraj, you spoke about CDMO this morning as well. That is working. The other set of stocks that is showing some very, very interesting moves, I would say, and one which catches my eye is also Metropolis. Metropolis about 3.5% up. Numbers were so, brokerage is not so hot on it, but Nirav Street has other thoughts in mind. What did you think of Metropolis?
Well, I think it's been a stable set of numbers, and margin trajectory has been stable. So I think going forward, definitely it can be a defensive play at best.
Shrikant, is this something you're tracking, a Metropolis?
Yeah, it is on our radar, and after hitting the levels of 1800, now it is again bouncing back. There is specific news flow based on its technical formation. Also, it is indicating us that whatever the negative has to come, that has already now priced in, and now from here the stock again can move back to the levels of maybe 2100 or 2200 sort of levels. So at these levels, it's a very great risk reward ratio for any investors as well as traders to buy for.
Neerav, we haven't spoken to you about Sula. The numbers came through yesterday. The stock is under a bit of pressure. The earnings weren't fantastic, and so from that perspective, what do you make of the prospects going forward? Would you buy into this right now?
Well, I would avoid the stock at the moment because the stock has been a rank disappointment. I think we've been waiting for the last 4-5 quarters, but I think the performance has been deteriorating. Initially, we had some news flow that the number of tourists who were visiting the facility had gone down because the roads in Nasik were under construction and all sorts of things. Now, of course, we have the urban consumption story, which is slowing down, and that has impacted the performance. I think the margins have also deteriorated. So I think we'll wait for some more clarity from the management to understand, because, of course, this is a peak season. We have the grape season, which has started, and obviously it seems to be good. But then the winery performance has not been that great. So I think we'll wait for more clarity. But I think it's an avoid at this point of time.
Okay, so not that I am an absolute expert in this space, Nirav, but I'm also wondering if the access to other brands from companies that are not listed at similar price points is also having a bearing. And I'm not talking about the revenue from people going to their vineyards. I'm talking about what is available in stores. Neeraj, you're a connoisseur, no?
No.
We'll have to speak to someone who is.
Wine connoisseur, yeah. But so I think, I don't know. So they've got distribution in place for sure. But I think the premiumization strategy, it will be very selective because, I'm just saying, I'm actually a big advocate for buying stuff made in India.
Yes.
On a lot of things, if not all. Okay. But on wine, yes, Sula Rasa is a great wine, but there are some really high quality wines, and if you indulge once a month, maybe you take that little bit of a liberty on a low cost product like this to look outside too. And stuff like that.
The wine space has not been able to do what the whiskey space or some of the
India
other
is also not a country for wine.
You have to grow the grape of that.
Imagine
quality.
beer hasn't done what the rest of the world has done in India.
Yeah.
India is such a predominant whiskey country. I don't drink whiskey, right? But India is such a predominantly whiskey drinking country that. But as our colleague Anil says, that the world is moving to white spirits. So I don't know if both wine and whiskey will suffer in the medium term.
Yeah. No, but Sula having a tough time. All right, a lot of results will be in focus this morning, and Hero MotoCorp is also going to announce its quarterly numbers. Puneet is joining us to tell us what to expect.
Well, thanks for that. So, it's going to be a flattish to a mild weak quarter for something like in Hero MotoCorp. Revenue is expected to just rise 6% at 10,234 crores. EBITDA again expected to come in at roughly 14.2% in terms of EBITDA margins. That's a 20 basis point increase from the same time last year, but it will be a key number to watch out for because Bajaj Auto had mentioned that the 100cc space has seen a lot of discounting with the Splendor available for as low as 65,000. So it could have done a lot of discounting or sale at a very lower price, and if the margin number will be something to watch out for. It's also expected that the electric vehicle business, which is still loss making, will also have an impact on margins, so that will be something to watch out for. Profits again expected to rise just 6% at 1136 crores. In this particular quarter, sales have been almost flattish at 14.6 lakh units. And it's one of the bigger quarters. It contributes roughly about 30 to 35% of the overall sales. Another key update I think for me will be to watch out on the CEO change. So Mr. Niranjan Gupta, who was the CEO, has stepped down, on the 31st of January 2025, and it's a key negative according to me because he was the one who was driving the premiumization strategy. He just launched 4 new models in the Bharat Mobility Expo, so it's not a good shade to come in, the person who's launched the models is not available to drive the growth. And this year, FY26 was one of the bigger years for Hero with the premium launches. So I think there are multiple things to watch out for, and I think management commentary will be something to watch out for. The con call is actually scheduled tomorrow in the market hours at 10:30 a.m. But overall, it's going to be a tough quarter for something like in Hero MotoCorp.
Definitely something that we are keeping an eye on, especially the management change. Remember, the stock took a huge knock because of that management change, but then it seems to have come back from those levels. So what the commentary from the management says becomes important. Just keeping it with the auto space for a few minutes, and FADA data is out this morning. January total vehicle sales, retail sales have been up 6.63%. Passenger vehicle sales have been up 15% year on year. Commercial vehicle sales have been up 8%, and two-wheeler has been up 4.2%. In fact, the overall auto retail grew by about 6.6% and aligns with FADA's earlier survey of flat to moderately positive January. CS Vigneshwar, President of FADA, joining us now on NDTV Profit to speak about the numbers coming in. On ground, what we are hearing, Mr. Vigneshwar, is that there is a marked improvement so far in January. Is that what your numbers are also telling us today?
Yes, there's been a decent month of January. At least we have started off the calendar year with something positive. A lot of things actually helped us out there. The marriage season also is going strong, so that's helped us out. We also saw some of these registrations being pushed from December to January, which we also suspected in when we gave our last press release in December, because December was a little bit lower than expected. It has actually come true. When we saw the first week of January, when we observed how the registrations happened, then our suspicions were true because a lot of registrations happened in the first week. Usually, this doesn't happen that way, but it also means that the market is strong, and we also saw that the stock days also come down a bit, which means that the retail is quite strong, and we have seen one of the highest ever numbers in passenger vehicles. So it gives us immense confidence to go forward, looking forward to a much more positive.
Let's go back to that.
retail.
Let's go back to that. You said we've seen the highest ever numbers in passenger vehicles, retail passenger vehicles.
It is one of the highest ever. The highest ever was during Diwali. It happened the highest, but it is quite strong. We also predict that the budget and the tax waivers for income tax for anyone at 12 lakhs would also help here. Apart from that, we also believe that there's a very strong auto show which happened where a lot of new releases have happened. And because of that, there would be a very strong showing going forward.
Mr. Vigneshwar, I'm wondering in the four-wheeler space, can you help me understand if you splice the segments, what are the pockets that are doing well? Because you talk about a Dzire that has been launched by Maruti Suzuki, which is a revamped one, right? And it's getting a lot of interest in the pre-booking space as well. And I'm wondering what kind of implications that has for the wider space, because you had a gravitation towards the SUVs, which is an old story. But will people move back to a small sedan?
The SUV story is here to stay. I don't think it's going to go away. And it's not only a story in India, it's a story throughout the world where SUVs are gaining more prominence and their market share is also going up. Whilst the small car segment, whether it's a hatchback or even a sedan segment does exist, perhaps the growth stories may not be great there because today the customer wants SUVs. But there is also a niche market which exists, and sometimes the niche market could also be in large numbers for a sedan or also for a small car segment. For many years, for many quarters, we've been having a lot of headwinds in the small car entry level segment. But we have seen that in the last couple of months, those things improve. We've been having better small car entry level sales happening. And with Dzire, which is slightly above the entry level segment, if the refresh Dzire would certainly bring in a lot of interest because it's a very well-known name in the automotive segment.
Well understood. Okay, Mr. Vigneshwar, we'll leave it at that. Thank you so much for this quick update, and I'm hoping that some of the good months continue in the times to come as well. I'll tell you where the good times continued or good times happened. Either of the, you can take your pick. Is V-Mart Retail. Very strong quarter. And Anand Agarwal, the CFO of the company, Johnson, right now to talk about the quarter gone by and the outlook ahead. To my mind, at least, Anand, the quarter seems strong. Now, one or two estimates would have thought that is it marginally below, if you will, based on the heightened expectations. But I thought the numbers look very strong. Now, my question is, how did you judge the quarter? Was it on account of festive season, or are there linear trends which make you believe that the good times might continue?
Hi, good morning. I think
this is Neeraj here, Anand. Thank you for joining in.
Hi, Neeraj. So I believe it's a mix of three things. Number one is definitely it's a good festive period, a good winter Diwali. Although winters were slightly delayed, but definitely I think winters played a good part in quarter three always is a good growth quarter for us. Second is, I think we've been doing a lot of changes internally in terms of how we operate, and that is a lot of work which has already gone in the last 1.5 years. And the results of that are now beginning to, come up. So a large part of what we are seeing in terms of the numbers, which is an outcome, is the hard work that the team has put in the last 1.5 years. And I think the good times should continue to roll. And I think we have not yet completed what all that we have started. And the third part also is that there is some amount of tailwind in the rural markets. There had been a lot of latency, if I say, in the last 2-3 years post-COVID, But in the last 9 months to 12 months, we have been seeing some amount of recovery, especially in the tier 2, tier 3 segments, in the rural segments, also with the bout of monsoon, which had been quite favorable this year. So my guess is that we should look at even better performance going forward. I still remain cautiously optimistic, but I think in terms of what we have been trying to do and what we look ahead in terms of what all we have planned, I think there is still some good room for growth ahead.
Okay. You've now had what 4 or 5 quarters of what let's for lack of a better word term it a recovery, right? Now my question is, when I hear you speak about better times ahead, there is also a base effect that comes into play. You had some very good growth on the margins and thereby consequently on the bottom line in Q3 at least that I saw. Do you expect a good trend of growth on operational metrics and margins for a better part of 2025, or will the base effect come into play?
There will definitely be some challenges in terms of the base effect. The last year definitely had the growth was on the back of slightly lower, smaller numbers in the previous year. But I think the momentum that we have created for ourselves in terms of the operational efficiency should still, give us some more growth. We are still optimistic on mid to high single-digit growth in the coming quarters. I'm not seeing this as a one-off. There is definitely going to be a base impact. There's definitely going to be pressure on margins as well. So operating leverage is not something that is easy to come by. It requires a lot of discipline, etc. And it's not something, which we can just aspire and win. So there's a lot of work which will get into it, but we are still hopeful that we should be able to keep this momentum going.
Mr. Agarwal, and good morning, Tamanna here. Great to speak with you on NDTV Profit, and we hope to hear more from V-Mart going forward as well. I'm just wondering, when right now for traditional brick and mortar retail, quick commerce has become the biggest problem, and especially discount pricing. What is the strategy here that is working? And then of course I'll come to more details on LimeRoad numbers, etc. But just want to get this broad thought from you.
So quick commerce definitely is a market disruptor for almost all parts of retail, and we are seeing increasingly more new categories getting added there. And we also have our strategy around how we want to address that growing segment of the market. But at the same time, quick commerce still remains largely a very urban and a tier 1 phenomena. We are largely more present in tier 2, tier 3 markets where the customers still have not really taken up even to online e-commerce. So there is a small segment which gets into the online e-commerce, but there's a very, very large segment which still gets into, brick and mortar retail. And that is something that is an area that we've really, played our cards reasonably well. The added part also is that this part of the market still remains very largely unorganized. So even with all the players, all the kinds of retailers that you see in the market, combined, if we combine all of them, we still do not occupy more than 20% of the organized retail space. So there's a lot of headroom for growth in terms of all the formats. I'm not writing off quick commerce for value apparel retail. We still want to play that game, but I still believe that in the markets where we operate, we have larger room to grow in the organized to unorganized conversion.
So your conversion rate has also come down a bit. Any expectations on that? And a quick word, because we're just short on time today and we hope for a longer conversation in March. But a quick word on LimeRoad. LimeRoad profitability, are you on the path to it? Losses have reduced significantly?
It's been a 7th straight quarter of reduction in LimeRoad losses. Yeah. It's a calculated and a thought out strategy on what is our strength in which we want to play on LimeRoad. So LimeRoad is a e-commerce marketplace, but we have positioned it more as a omni enabler for the V-Mart brands and the customer base. And that is where the traction is going to lead to. So increasingly, we are reducing our dependence on external or inorganic customer acquisition and increasing our attention to providing more ease to the customers who walk into V-Mart stores to find products online. And that's the strategy around which we will keep playing and thereby keep reducing our losses. It should turn, break even or maybe not so profitable, but still, just around there in the next couple of years.
Okay. Okay, well, Mr. Agarwal, like we said, slight paucity of time today, but we look forward to having a slightly longer conversation with you in March to understand the trends that are impacting the Indian consumer and your business as well. Thank you so much for speaking to us today. Really appreciate it.
Thank you.
That's the view from V-Mart Retail. Very strong quarter, hoping for good times to continue, and very strong quarter for yet another company, Sagility. Ramesh Gopalan, Managing Director and Group CEO of Sagility India, joins in, and after a quarter wherein they expanded margins from 20% to 27%. That's a serious expansion. Mr. Gopalan, you must be a happy person, because not only has the top line done well, but you've delivered some exceptional operational metrics here, much better than anticipated. What went behind this quarter?
Neeraj, good morning. Yes, we had a tremendous quarter in Q3. There were a couple of reasons, right? One, organically, we've been doing very well over the last several quarters. We've been growing across our client portfolio, and that growth largely continued in this quarter as well. But also, like we've mentioned in the past, our business has seasonality to it. And the second half of the year is typically in the US healthcare segment is what's called the open enrollment season. So that's the time when people renew their insurances, they buy or new membership comes into every health plan. And so that's the time that our clients expect us to handle more volumes. And so there is a seasonal spike to the business in the second half of the year, right? So both these impacts were the organic growth that we've seen in the other quarters, plus the seasonal nature of this business were the reasons for the exceptional performance. On the margin front, the additional tailwind that we had was also from Forex, right? So as you know, the currency in a couple of our geographies depreciated against the US dollar. And since all of our revenues are in the US healthcare segment, the tailwind in the Forex also helped our margins.
Mr. Gopalan, good morning. Tamanna here, and great to speak with you. I mean, this is a company which has now so much interest on it. I'm just wondering, because you talked about seasonality, what is next quarter also looking like, or the current Q4 looking like for you on Sagility, and any impact at all of new dispensation in the United States that you see on your prime US healthcare portfolio?
Morning, Tamanna. Yeah, so look, our broad growth for the year, we've given generic guidance on low to mid-teens growth. That is something that we hope to achieve for the overall year. Specifically, like I said, depending on where currency is and so on, there may be ups and downs on the margin depending on the currency impact. But our steady state numbers are low to mid-teen growths and EBITDA in the range of 24-25%. And that guidance broadly stays for the year. In terms of your other question, it's still too early to predict what's likely to happen. We are watching it closely. But so far, whatever we've heard and seen, there is no real impact to our business thus far.
Got it. I have one final question. What's the outlook ahead? The revenue now, I mean, the margin performance is exceptional. You've done some cost savings. Does this stay for the Q4 in a seasonally strong quarter, Q4 as well, I presume? And
yeah, I mean,
what's the outlook? Sorry, yeah, please continue.
No, the open enrollment continues into early part of Q4. So there is some impact of it. So like I said, the broad guidance for the year that we've given, we will continue to achieve that is what we hope, which is low to mid-teens growth. The other thing I also wanted to highlight is we just closed an acquisition, a company called BroadPath. And so that was signed and closed end of January. So that will also get into our portfolio. And that's a company that adds almost 70 million to our top line on an annual basis. And it was an acquisition all funded by internal cash.
So does BroadPath also boost margins? Can you give us some picture on margins? I mean, you've had a healthy quarter. Is this the sustainable level that you're aiming for?
BroadPath was a EPS accretive acquisition, right? Having said that, BroadPath organically their margins are lower than where Sagility is today, and so we hope to create synergies both on the revenue front as well as on reduction of cost, and so we will improve those margins over the next 2 to 3 years. But
Mr. Gopalan, lest it seem like a numbers-focused conversation, we look forward to a longer conversation, but today slightly pressed for time. I have a quick 30-second request from you for an answer.
Sure.
Brokerages that have come out with reports post your numbers forecast a near 50% PAT CAGR over the next 3 years, including FY25. Are these reasonable estimates? Quick 30-second answer, please, sir.
Yes, our debt levels are continuing to come down, right? So that's one of the reasons why the PAT growth will be much higher than the revenue and EBITDA growth.
Got it. Mr. Gopalan, like I said, would love to understand more about BroadPath and what it does for Sagility and some more color on the overall business. Today slightly pressed for time, but would urge our team will place a request, would love to speak forth to you post maybe 15th of Feb or early March.
Look forward to that.
Thank you so much and congratulations on a strong quarter. Well, Tamanna, 2 strong quarters, 2 strong results, and now the third one may be a bit sluggish.
Yeah, I think this is the conversation that the street wants to watch. Sagility, meanwhile, on a 5% circuit, but we're talking about Swiggy. Quickly pull up the counter before we get to the conversation with Rohit Kapoor. Was this expected because of the extent of investment this company needs to make in dark stores? That's one of the questions my colleague Mihika has asked Rohit Kapoor. Listen in.
I think we are not guided by what competition is doing here. We have our own path, and in Q3 of FY25, if you see, we had 705 dark stores, totaling up to roughly 2.5 million square feet. Just in terms of January, we have added almost like 86 new stores, and we remain on track to have a total square footage of almost 4 million square feet by March 25, which is now about a couple of months away.
Got it. Your advertisement expenses have gone up 40% on a quarter-on-quarter basis. Why is it that? Is it because of competition? And how much have discounts increased by? And what's the outlook for discounts going ahead?
Look, I think if you think about quick commerce especially, we are looking at, and the guidance on the categories is north of like 80% growth rate. You can read various analyst reports and they'll give a similar guidance. So we are looking at a category which would potentially be $40, $50, $60 billion range, right? And there, right now, the focus is to expand and marketing or advertisement and reaching out to consumers, connecting with them, establishing the brand in many new geographies is very much a part of what the overall investment cycle is, right? In terms of discounts, I think they remain fairly range bound. I don't see them any different from any category that you see growing or expanding in India.
Got it. Coming to your Q3 numbers, we have seen net losses widen to almost 800 crores. When do you expect the company to turn profitable, and what will be the levers to take the company to that profitability path?
Yeah. So Mika, it's very important to sort of parse the results into 3 distinct parts, where 2 businesses, for example, if you look at food, we have expanded our EBITDA margin from 1.6% to 2.5%. That's a 90 basis point expansion in EBITDA margins in just 1 quarter. In Dine Out also, we've broken even in December for that business. So 2 out of the 3 largest categories that we operate in are actually EBITDA break-even. The investment cycle is largely in quick commerce, where again the opportunity is large, and we will continue to invest in that area. From what we are striving to is getting to a company level EBITDA break-even, adjusted EBITDA break-even by October OND 25, and within that, quick commerce getting to a contribution level break-even.
Got it. And there's been a slowdown in monthly transacting users in food delivery. Do you think that the company might be losing market share?
I don't know why you asked that question, because you should look at our growth rate and the other growth rates available in the market. I don't think that's a factually correct statement. I do not comment on market share, but I think you should do your own work and you'll figure out that that's not correct. In terms of overall growth, I think we have always believed that, or not always, last few quarters we believe that the market will trend to between a 18 to 22% kind of a growth rate, and roughly about 1.5 times the growth rate that you're seeing in the base food services, market services category. 2-3 reasons. One is that the penetration levels that you see in India remain secularly very underpenetrated, whether it is restaurants per 1,000 population or the amount of ordering in people do. Compared to any global benchmark or even emerging economy benchmarks, we are not at the same levels. Second is the innovation and the pace that we have in this category and what we are doing. It equals the very best globally. I think if you and you know, my son studies in the US. If you ask him and many people who come here, they are quite amazed at the level of service delivery which happens in food delivery in India. Third is the budget which just went by. I think that's not trivial because we had the Honorable FM present one of the most remarkable budgets in recent times, and the tax cuts which are there go slightly straight to the TG that we cater to. And some of that, it's very hard to say exactly what happens because of that, but it is a very logical conclusion to say that some significant part of that money in hand will flow into consumption, and we are right there in the middle of the consumption economy. So there is green shoots, there are always headwinds quarter on quarter somewhat, but there is, I think we are at a very early stage of evolution of a category.
Got it. You know, you spoke about innovation, so I want to talk about your 3 recent developments: Ping, Swiggy One, and Swiggy Sports. Could you give us more details on the, you know, what the future plan is with these 3 developments?
I think Ping is very recent. It's in the services economy, and it's actually a very new attempt to connect emerging professionals and established professionals with consumers in the space. So there'll be a time to speak more about it. On Swiggy Sports, let me clarify that there is no active plan to get into sports. Our very specific endeavor is to look at pickleball, and pickleball is one of the fastest growing sports in the world, and we believe that from a brand marketing standpoint, pickleball connects quite closely to a certain consumer base we like and we want to serve in a bigger way. Just as a fun aside, we also have one of the most iconic cricketers of India, Rishabh Pant, who has joined in as a co-owner, and we jointly co-own the Mumbai pickleball team, which is called Mumbai Pickle Power. On one, I think I believe you're referring to the launch of Black, which is an offering targeted at a certain percentage of our consumers who are high frequency, exhibit certain characteristics, and the main offering there is there are multiple things. There are several things which come as benefits part of the Black package, but I think the most important one is express delivery, which is faster than the platform delivery, and also there's a on-time guarantee where if the order does not reach within promised time plus X minutes, you do get a coupon which is redeemable on the next purchase. We'll develop this offering because we're already seeing very strong response from whoever we have rolled out the offering to.
Yeah. I want a clarification on, Snack 10-minute delivery will be a new app, but Bolt is still integrated in the Swiggy app. So, one, why the separate app? And does this mean that eventually the company will have different apps for maybe an Instamart and a Genie too? And, you might see a shift from an integrated app strategy to a cost per user, every separate app for separate offerings.
So, Mika, I think you asked many questions in the one sentence, so let me go step by step. Yeah. I think Bolt is definitely our big bet in terms of the quick delivery space, where it is a marketplace where you get your favorite brands and a bunch of our restaurant partners are partnering there to come together to offer 10-minute delivery. In terms of the Instamart, by the way, there is already a separate app. The shortcut to the Instamart app as a separate app existed for quite some time, and we recently launched a separate app. The reason is very simple, that quick commerce as a category is turning out to be way larger than many categories in India, including expected to cross food delivery as well. And if there are consumers who are looking to transact first time, and especially newer geographies that we are entering on quick commerce, we want to give them an option to do so. It doesn't take away from the integrated app strategy, because a lot of consumers like the fact that multiple services are on one app, and we are very comfortable letting that stay and letting that evolve in that original direction.
So,
yeah.
So basically, the company will not be, moving away from the integrated app strategy, right?
Correct.
Got it. And my last question to you, you mentioned how, the quick delivery is, a big bolt. To what extent do you think you'll be able to scale the 10-minute delivery segment?
It's already scaled. It's already touching almost 10% of order contribution are present in 450 plus cities. This has happened in less than almost 100 days of launch. So I think the traction is clearly visible. It is being accepted well by consumers. It's accepted well by restaurant partners who are seeing this as a vehicle on which they can also innovate, right? And I think that's the way we see it, that we put out something which is quite unique. It's actually, to the best of my knowledge, at this scale, the first in the world kind of an offering for our consumers, and restaurant partners are also innovating in their own space to come and ride on this chassis and platform that we've created.
the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
I love करेला, बैंगन.
I love करेला.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget.
I present the budget for 25-26. That there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है. जब मैं था तब हरी नहीं, जब हरी है मैं ना ही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Welcome back. You're watching Ask Profit, and in case you're tuning in for the first time, this is a show that gets you answers to all of your stock-related questions. To that end, you can call us on the number at the bottom of your screen, which is a landline number, or you can message us on that WhatsApp number that is on the top of the screen. The first question on this side of the break is from Akhilesh, who's writing in from Ajmer in Rajasthan, and he's got a question about Hindustan Aeronautics, which he's bought at a price of 3,907. He's got 163 shares. Kush, it's interesting. He's saying he's just waiting for a small target of 4,250. Nothing too much to ask for. Is that something that you expect to happen very quickly on the charts?
I'm afraid not. I'm afraid not. Although I must say that he's being very realistic in his expectations and very realistic in his targets, and that is also perhaps a rare thing to find in the market like this. But uh, look, the stock has made a double bottom formation around the 3,500 mark. You're seeing a bit of a bump, but the 20-day moving average seems to be acting as a resistance. Around this price itself, around the 38, 38.50 mark. If and when that is taken out, I think 400, 4,000, I'm sorry, it's pretty much on the cards as the next target, 39.75. So, I'm rounding it off to 4,000. But not sure because, the stock had a bit of a resistance. In any case, since the loss on this one is not too deep, my suggestion would be to continue holding on to this one with the stop loss near the 3,700 mark and give himself a shot at 4,000.
Okay, shot at 4,000, not 4,200 plus. All right, but it pays to, at this juncture in this market, to keep your expectations under control. Manoj from Delhi is calling in asking about signed DLM. Good morning, Manoj. How can we help you today?
Hey, hi sir. I have a question regarding signed DLM, and I bought it last July at a price of 820, and I keep on averaging this stock, and right now I am at a loss of 35,000 close to, and I bought 142 shares at a price of 712.48 after averaging, and right now I am at a loss, so I'm not sure what I should do. I should hold it because since last July I'm already holding it.
Help me understand. So you've got a substantial holding, and what I'm trying to understand, Manoj, is this one of the only stocks that you own, or is this a small part of your portfolio?
Yeah, it is just a small part of the portfolio. Okay. So it is among the. I have 20 stocks in my portfolio, okay. And it is.
Okay, so point well made. Let me go across to Shahina on the fundamentals. Shahina, I can't recall exactly, and I haven't been able to pull up the numbers, but if I remember correctly, this stock reacted immediately after earnings, and it wasn't a good set of numbers, if I'm not mistaken. Would you say that you should hold on though, and where would you put the stop loss?
Yeah, it's a small cap and EMS space, which is very interesting for the signed DLM to be, for an investor to continue to hold for the long term. In the current year, it was expected actually. They had certain acquisitions they made last year, because of which the write-offs continue on and will continue even for the next quarter. So if you're a short-term investor, I don't think you can look forward to see any jump up in turnover, profits, etc. But I think FY26 is when you're likely to see the earnings accretive. All the additions, everything will come in force, and it will be earnings accretive. They've got a number of new logos that they have added on, all of which will start reflecting into the year going forward. If you look at the long-term basis, like say 3 years down the line, then the valuations at current levels look quite decent. So I would say you can continue to hold, and maybe in fact, in my view, over the next quarter, not right away, you could also in the next couple of months look to average it out, because I think FY26 is going to be a very interesting year.
Okay. All right, hope that answers your question. The next question we're taking is on a company called Carraro India, and it is a company that was incorporated in 1997 from what I can see on the screen, and it is a manufacturer of axles and transmission systems for agricultural tractors and construction vehicles. The question is from Ravi Chandran, who's writing in from Bengaluru, and he's bought at a price of 535, which is not too far from the current market price. He's saying that he wants to hold for about 2 years. That's the interpretation that I have. So is it something that you've tracked, Shaina, and on the fundamentals, would you hold on?
Yeah, again, this is a new listing. I don't really track new listings that closely.
Okay, fair point. So, but let me ask you this then. In the automotive space and in the specific pocket that he's looking to play on, which is an automotive ancillary company that is catering to the commercial vehicle space and the agri equipment space, that is the tractor space. What looks attractive to you?
Well, you could look on declines at Sona BMW. I think that looks interesting. Minda Corp also is another stock that looks pretty interesting in terms of the opportunity as well as the new products that they are actually adding on to their portfolio. Also in the EV space, so I would look at those two if you're looking at auto and space.
Okay, all right. So, no specific view on Carraro, but then we've given you, or Shahina has given you, I shouldn't take credit for that, Shahina has given you some ideas on what you can invest in. Sudhakar is calling us from Hyderabad. Sudhakar, hi, good morning. How can we help you today?
Good morning, sir.
Please go ahead.
I have got Capital Point Lab.
Okay.
At 1990, I had been accumulating over last 2 months. In fact, I'm a long-term investor. I had been holding Ready Labs for the last 20 years. That's why I got some crazy towards pharmaceutical sector.
Right.
Can I, how is it technically and fundamentally, sir? Can I know about this, sir?
Sir, you're putting me in a tough position because I've promised people that I'll take only one or the other. So, which one would you want, technical or fundamental?
I would like to have my view on Capital Point.
I get that, sir, but you have to choose either technical or fundamental.
Okay, technically, I would like to have the...
Okay, all right, Kush. So, he's in the green. 2,179 is the current market price. 1,990 is the buy price. I don't think he's in a hurry to sell. So, from that perspective, what is the upside potential that you see on the charts?
Well, it's not a bad buy. 1,700, 1,800 thereabouts is where the stock has made a double bottom. After a brief round of recovery, the stock is seeing, or rather fall, the stock is seeing a goodish bit of recovery. This is one that I would continue to hold, albeit with my buying price as my trailing stop loss now. On the upside, the first level that I'm looking at is actually 2,300. Once that is taken out, you're looking at a 2,475 kind of a move as well. The stock is starting to show signs of a bottom formation in place, where the volumes on the downside are thinning, and on the days when the stock is higher, you're seeing a good delivery markup jump in volumes. So as I said, for targets of 2,300, 2,475, continue to hold Capital Point. In fact, you could actually go ahead and accumulate also some, as I always prefer, buying on the higher side than averaging on the lower side.
Okay, all right. Federal Bank, I'm coming back to you on this one. Kush, this is a question from Shailesh, and Shailesh has bought 5,000 shares and he's bought at a price of 183 rupees per share. He's wondering whether it will reach 192 by the end of the month. And there is a pretty long duration for that to play out, or break below the 178 mark. Specific questions and specific levels that he's looked at.
I actually love this. I love the clarity that he has in terms of his entry, his exit points both on the downside and the upside. So kudos on that. 178, 179. I think he's decided that as a stop loss. So continue holding on to this one with that as a stop loss. 192 seems a bit of a stretch. The reason being that most of the, as I said, stocks that are in the banking space have moved, but this has not participated, and that's not a good sign. Also, there are multiple averages converging near the 180 to 189 zone, so that could act as a bit of a resistance. So the 190 mark, that could act as a bit of a resistance. So any move closer to 188, I would take as an opportunity to exit partially and maybe then continue holding on the rest for 192. But yes, the level that is decided on the downside, 178, that acts as a stop loss. But 188 is the first pit stop where I would offload some of these, some of the quantity.
All right, so that's a comprehensive view on Federal Bank. Sundara is calling us from Tirupati. Hi, Sundara, how can we help you today?
Yeah, hi, good morning.
Good morning.
Actually, I would like to know about that Adidas stock, IRTA. I bought this stock 7 months ago.
Okay.
And shares at the 260 price.
Okay.
So now, can I hold or it means it's getting continuously down and it's been consolidating zone only.
Yes.
So I would like to know that further, sir.
Yeah, no, it's an understandable question, considering that you bought at elevated levels, Sundara. There's no hiding from that. But what is the time frame that you had? Did you have a long-term view?
I need this at least 1 or 2 months. Can I expect any moves for this one?
Okay, 1 or 2 months is a very short time frame, I must point that out, and a lot of factors can play out. But let me still go back to Kush on this one. Kush, do you have enough data on this one? 260 is the buy price, and what would you say is the upside potential at this stage?
So, Alex, I have rather sufficient data, but I'm afraid it's not looking so pretty. The weekly charts for this one suggest a descending triangle, and that's not a good pattern where the base actually is coming close to the 183 to 185 zone, which indicates that a breakdown below this level could actually take the stock much lower, perhaps even as low as 165, 170. So I would be very cautious on this one. I'm not sure if in the 1 or 2 month time frame that he's looking at, he will be able to see his buying price also. Nonetheless, keep a very tight stop loss near the 185 to 183 zone. If that is breached, I think you're better off exiting, even if it is, a bit of a loss. So apologies for being the bearer of bad news on this one, but that's the kind of setup that the stock has.
Yeah, and I mean, I'd prefer the truth to anything else, even if you are a bearer of bad news. We've got the next caller, Vishwas from Bengaluru, is calling us. Vishwas, good morning. How can we help you today?
Hi, good morning. I'm Vishwas from Bangalore, as you said. So I have Tata Steel shares of quantity 282, and I have bought it at a price of 122. So I just want to know the upside potential of this stock for short term and near term, and for long term.
Oh, okay, short term, near term, and long term. Okay, Kush, then you've got your work cut out for you on the charts. What would you suggest are the key levels to watch out for?
Well, from a short-term perspective, I think the stock will, perhaps meet resistance around the 135 mark. From a medium-term perspective, I think 150 is the level to watch for. But I think from a long-term perspective, this stock is actually entering a good accumulation zone. You're seeing a good amount of base formation and a recovery underway. So anywhere from about 12 to 18 months or beyond, I think the stock has the potential to hit 160 and higher levels. So there you go. I hope I've answered for all the three time frames that you were looking for.
Did indeed. We've got Gayatri who's writing in and asking about ABB, and this is a stock that is seeing quite wild gyrations over the course of the last couple of weeks. Of course, the numbers came out, if I remember correctly, last week. I think I'm right. And the stock reacted very positively. The order book standing at over 18,000 crore rupees and looks very, very strong. And the numbers for the quarter also were pretty good. The question is, would you buy right now for the short term relatively for 1 year? And I know that it's a short term, but I'm still going to go across to you, Shaina, on the fundamentals, because this is a stock that a lot of people have tracked. And the question is, are the valuations too stretched for there to be considerable upside over the next 1 year?
I would believe the valuations are extremely stretched. If you're looking at the short-term period, they are getting, good valuations because of the parentage, the MNC parentage that they have. I would say if you want to add, you can only you should do that at lower levels. I would say, somewhere close to about 5,400, 5,450 would be better levels to add it.
Okay, all right. So that's a view on ABB. A lot of these stocks, by the way, have done incredibly well, but be wary, be cautious about the valuations. Shweta is calling us from Gurgaon. Hi, Shweta. How can we help you today?
Yeah, hi. I have a query regarding share. I have 31 shares at the price of 586.
Okay, can I confirm that you're... Yeah, Senoris. Right. Sorry, I was going to tell you that.
Pharma.
Okay. Yeah. What is the time frame that you have, Shweta?
I bought it for short-term gain only on the day of its IPO opening.
Okay.
So today, it is doing well. Shall I hold it for some more time because there is good volume on the share today?
So because it's something that you bought in IPO, and I don't think there's going to be enough in the way of data. I'm going to have to go across to Shahina on this one. Shahina, would you suggest booking out at this juncture? It's a very small profit. Would you book?
Well, I would say it is very small also in terms of turnover and profits. It's a small cap. So I have no clue. I will pass the question.
Okay. Unfortunately, Shweta, I cannot give you a view on this one because we don't have enough data to give you a technical view. But is there any other stock that you want to know about?
Yeah, actually.
Please go
ahead. Okay, I have this Bharat Electronics, BEL share. I have 71 shares, bought at an average price of 289.
Okay.
Yeah.
And you have a long-term view on this one?
Long-term, long-term I want to hold. What should be my target price on this?
Understood. Okay, so let me go to you on this one then. BEL on the long-term fundamentals. What's the view here, Shaina?
Yeah, so I think it's a good hold at current levels. Please hold it for the longer term. Don't book profits or losses in the shorter term. I would say hold it for a target of close to about 320, but hold it for maybe 2 to 3 years. There is actually a very strong order book that the company has. Which is more than three times their current order book is more than three times their current turnover. They're getting very good orders going forward, so continue to hold. It's a good stock to hold in your portfolio.
Okay. The next question is a shorter term question, and this one's for you, Kush. Tushar is writing in from Mumbai, and he's asking about Network 18, which he's bought at levels of 77 rupees, 550 shares, and he's looking to hold for a maximum of 3 to 4 months. So he's incurring a loss right now. What should his strategy be?
So again, a very mild kind of a recovery, not something meaningful and very volume backed. So I would have a bit of a caution on the recovery. The buying price is fairly high, 77. So with a stop loss around the 48 mark, I will continue to hold. But I would actually look for exit opportunities closer to the 58 mark as the first level, and then perhaps 65. That is if at all the stock actually gets there. So better strategy would be to start with a stop loss at 48 and keep trailing your stop loss higher. From a near-term perspective, 1 to 2 months, maybe a little higher. Perhaps 65 is the best, that I see the stock headed to, unless, something dramatically positive comes out.
Okay. All right. The next one is coming in from Satya. He's writing in from Hyderabad. Another banking stock that is being asked about. Canara Bank is the name of the counter. 113 is a buy price and has been holding for the last 4 months. Can they continue to hold or add another 1,000 at the current levels for the long term? And this is for a period of 2 years. So incurring a loss right now, but willing to hold and willing to add, in fact. Is this the best prospect according to you in the space, Shaina, on the fundamentals?
Yeah, actually, Canada Bank has done pretty well even in terms of numbers. They are doing better going forward in terms of the balance sheet quality also improving. I would say yes, you can hold, and you can hold. You could look to add, but add at slightly lower levels. For the short term, looks like there is a correction going on. I would say if you want to add, you can add close to about 85, 90 levels. That should be decent, and hold it for the medium to longer term.
Okay. All right. We've got our next caller. We've got Kashyap calling us from Andhra Pradesh. Hi, Kashyap. Morning. How can we help you today?
Yes, sir. Very good morning, sir.
Good morning. Please go ahead.
I'm a big fan of Mr. Kush. Yeah, the way he smiles and answers the queries. We are getting very happy by seeing him every day. Sir, my question is regarding Keynes Technologies. I have 28 shares with me. My average price is 3,617 rupees, sir. Now I'm at the profit of 12,748 rupees.
19,000, right? 19,800.
12,000, sir. 12,748 rupees, actually.
Okay. You should actually go and look at the price again, sir, because you have a profit of nearly 20,000 rupees. Anyway, what is the point? Sir. What is the question?
Yeah, my point is, can I accumulate more, or can I exit and go for another Genser Technologies like that?
Okay. And your time frame is less than 1 year?
Yeah, I'm a long-term base. Actually, I'm looking for long-term.
Long-term. All right. So more than 1 year. What's the prospect? He's making profits, Kush, and he's also very appreciative of your smile. Why don't you give us one and give us your answer as well?
Thank you so much, Kashyap. I'm sure Alex would also agree. And you've made my day, his too, because his show. So, but thank you so much for thanks so much for those kind words. Always make it a part to smile no matter what the market does, right? So, again, made my day. I think for the stock, as far as Keynes Tech goes, the prospects don't look too bright, even from a year's perspective right now, because as China would concur, the stock is still overvalued on fundamentals, but it's actually slipped below the 200-day moving average, which is not a very healthy sign for any stock. Recovery, is fizzling out. Since you are in a profit, I'm sure a significant portion of that has been wiped out. But nonetheless, there is profit. Not a bad idea to perhaps exit Keynes Tech at the moment. And since you were so sweet, I'll take up your second question as well. Alex normally doesn't allow, but Gensol Engineering, that too is actually seeing a bit of a drubbing. There is a bottom formation attempt at place, but I wouldn't venture a preemptive trade just yet. What you could do is actually wait for this one. If the stock actually moves above 750, that's when this recovery will be confirmed and you can go ahead and buy. So don't buy right now. Buy it slightly higher, but once you have a confirmation that yes, the recovery is well underway.
Okay, viewers, don't take this as a reason to compliment Kush and get him to answer more questions. That's not how it works on this program. Larsen and Toubro is the name of the counter that we're talking about next, and in fact, Kundan has bought at a price of 3,100. Should he hold or sell? It's interesting, and I know that he's not specified a time frame, but he's in the green and he's making a decent profit. China, on the fundamentals, it actually did pretty well. It did really well, if I remember correctly. And the expectation is that the capex push in the new year, and I know that the numbers overall were less than perhaps the street was expecting from the center, but a lot of people have pointed out that you should look at the center plus the states plus the PSU. So it's not like the capex story is going away. Would you hold on to this?
Yeah, you can hold, and at dips declines you could also add, because as you mentioned, while the capex was the amount that they have projected was a bit disappointing, but having said that, we are going to see a pickup, because in the first couple of months the capex was not as good as one would have estimated because of elections, etc. But now it is picking up, and L&T is fundamentally a good stock to have in your portfolio. You could hold at current levels, but if you want to add, you can add it at dips. You could add it close to about 3,230 types, and then hold it for the medium to long term with a target of 3,800.
Okay, hold with a target of 3,800. Any view, Kush, very quick view on Sun Pharma Advanced Research, and this is a question from Nagaraj. He's bought at levels of 300, I think. Any view?
The stock could actually see a rebound from the oversold territories, but overall, I think the pressure on this stock could very well persist for some more time going forward. If you have a position, then your stop loss comes in very close to the 140, 145 kind of zone. But other than that, I think the stock could actually remain under pressure for some time. Perhaps you'll see a dead cat bounce, but that should be about it.
Okay. Please suggest a solution for Heritage Foods and Style Bazaar. I'm going to choose one of the two. Satya from Trishur is asking, Heritage Foods is seeing a decline of 20% on his buy price. What should he do? He's got a 1-year time frame. Shaina, any advice that you have for him?
I personally hold also on the stock. I've recommended it in the past, and I believe in terms of valuations, it's extremely attractive if you look at any parameters, especially if you look at the market cap, turnover to market cap. They have done pretty well in terms of their numbers. They're adding new products. So I would say hold on. And in fact, I would say you could also take this opportunity to average.
Take the opportunity to add, in fact, is the view on Heritage Foods. It's time to hit the rapid fire segment, and this, remember, Shaina and Kush, is where we throw as many questions as possible at you over the course of 2 minutes. Do answer as quickly as you can. Vatek Wabag is the name of the counter, and we've got a question from Madan, who's writing from Hyderabad. He's looking to hold for the next 3 months to see some profits. He's holding at levels of 1550. Should he continue to hold, Kush?
Continue to hold, stop loss at 1280.
Skipper results came out overnight, or rather last evening. We've got Sunita who's holding at levels of 490 rupees a piece. Would you suggest holding or should you exit China?
Hold. It's a hold.
Hold. All right. Shrikant wants to know about Birla Soft, and he's got at price of 450. He's looking to hold for 5 years. Would you suggest a hold, China?
It's a hold.
Okay. Map My India, this is the name of the counter, and Vijeen wants to know, he bought at levels of essentially CE Info Systems, right? So 2,155 is the buy price, so losing considerable ground. View for 2 years. Shahina, what's the view?
I would say you can look to switch.
To what?
Maybe you can look to switch in some IT stock. I would say like TCS looks good.
Kfin Tech is the name of the counter. We've got Parthsarthi who's writing in from Hyderabad. Would you buy right now, Kush?
Yes, the stop loss on this one is slightly deep, close to the 1150 mark, and on the upside you're looking at 1350 and 1450, just to round it off. Yes, okay. I would buy.
Tata Consumer, pull that up quickly, Kush, if you can. This is a question coming from Eldo, who's writing from Cochin. He's bought at a price of 1,010. Would you sell or hold?
Exit.
Exit. Okay, give me enough time to pull this up as well. IRCTC bought at a price of 868. Would you hold or sell, Shaina?
It's a hold.
All right. All right. So you both answered too quickly for even me. Posing a challenge for me also to pull up the questions. Thank you so much to the both of you for joining in, for answering all the questions that you did answer today. Pleasure having you. All right, that brings us to the end of this edition of Ask Profit. It's been an incredible pleasure bringing you this program, and hopefully this has been useful to you. Do stay tuned, lots more coming up on NDTV Profit.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research. shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. We're taking a look at Niva Bupa today. This is the health insurance company which announced its earnings just a few days ago, and we've seen some volatility come through, and we thought that would be a good idea to take this one up, especially given that we had the opportunity to talk to the management as well. Now, in terms of health insurance, it's the third largest player. It's only smaller than New India Assurance, which is of course the largest, followed by Star Healthcare. But it is the fastest growing health insurer in the country at the moment. And at the moment it does offer various health insurance solutions, which would include to individuals, group, personal, accident, as well as travel insurance. Well, moving on, as far as its network is concerned, that stands at about, a little less than 10,300 odd hospitals at the moment. Even in terms of its distribution network, it has that involves individual agents, corporate agents along with brokers, and an in-house digital channel that includes partnerships with major banks and financial institutions. And this is just gives you an idea about what the company does and how it's come through. Do remember that Niva Bupa has very recently listed on the exchanges. It's only been a few months, and we will have a lot more in terms of earnings coming through, which will give us a better idea of the long-term trend, as well as, of course, the outlook is something that the management will also talk about going in. But, as far as this particular health insurer is concerned, at the moment, it's working with about 210 physical branches, and it has presence across 22 states and 4 union territories. Even in terms of the way things have panned out for its ticket size, as you can see on your screen there, we've seen a gradual up move, a gradual improvement here. And back in FY22, a ticket size of around 22,000 rupees per, whatever the policy or whatever plan that the insuree was going to take, and that has gradually moved up to nearly 29,000. So that's something to keep in mind. But what we usually do is that we consider all companies and we take a look at the past in terms of how it's done. So that would include the income statement, the balance sheet, the ratios, the market share. Of course, in this case, we'll talk about some of your key metrics which actually are a little bit more pertinent to the insurance sector. Besides that, moving beyond, we also talk about the shareholding, valuations, as well as street coverage, along with what street credentials it does show. But joining me to take us through some of these aspects, of course, I also have with me Harsh, who's going to perhaps elucidate a lot of the other factors that we are going to talk about. So Harsh, thank you for joining in. But let me just start by taking a look at the top line, the income statement particularly. Now, there are two parameters that we look at when it comes to insurers, health insurers specifically. In this case, we talk about premium earned, and we've seen about a 47% CAGR over the span of about 3 years. So it's moved to around 3,811 crores back in FY24, and this was from about 1,752 odd crores back in FY22. Similarly, it became a profitable company in this course, while it had made a net loss in FY22, and that has turned into a profit of around 82 odd crores. But Harsh, thanks for joining in. I reckon it would be a better idea to judge the company also on the various other metrics in the insurance space. So why don't you take us through that?
Yeah, ratios first, Agam. Let's look at how the ratios have moved over the last 2 to 3 years. Talking about claims first, the claims ratio has come off from 62%. FY23 was a year in which the claims ratio really fell, 54%. Thereafter, we've seen a little bit of normalization. 59% is where the claims ratio is. Also understand that competition has ramped up in a very solid fashion over the last 2 to 3 years as well. And that's the other reason why that claims ratio has seen a bit of a bump up. When you're also looking at expenses of management, which will add up to understand where the combined goes, expenses of management are tapering down. So as growth is picking up, your expenses of management ratio is coming down, and both of these signify that costs as a ratio to top line is tapering, which allows companies within the health insurance space to start becoming profitable. So as they scale, profitability starts to get clocked in. And you'll see therefore the combined falling from that 107 mark to around 99. But we've started to see a bit of a spike in 9 months. So let's look at the 9-month figure now and compare that with 9 months last year as well as FY24 full year. And we're starting to see claims rise up a wee bit because obviously competition has increased. And you're also seeing expenses of management go down though by just a wee bit. And what you'll see on the larger trend is the combined going up quite sharply as a result of the claims ratio going up. Right. So combined has started to climb. How quickly can that fall is a question which obviously we'll address with management.
Right, Harsh, just to follow up for those who are relatively new to the insurance sector, what is the combined ratio? What is that a combination of?
It's a combination of expenses of management along with the claims.
And is that a summation?
Yes.
Okay.
So your claims is generally the claims which are paid out by an insurer.
Right.
A consumer would file for a claim, whether it's health insurance, whether it's fire, etc. And that claim amount which is paid out is basically the claims ratio.
Right. Okay, so perfect. So, well, simple enough there as far as these key ratios are concerned. But I'll talk about the market share, and the market share has also seen an improvement here. What we are seeing is, well, at least at the end of the 9 months of FY25, the market share coming in at around 9.6%. Do remember that this is the third largest health insurer at the moment, so its market share is not expected to be super large. And New India Assurance is a significantly larger peer. In fact, it's a giant if you consider the other two, health insurers, or rather, general insurers from the space. But they have gained market share over the course of the last few years. And it's just moved up as well from the mark of around 7.02% in FY22. But Harsh, what can you tell us about renewal rates here?
Yeah, renewal rates also getting better, Agam, as it's grown. And that's a key positive because you would want your customers to stay with you. And that's exactly what a renewal rate actually is. And therefore, the key positive here is that the customers are staying back, but when you're looking at the 9-month trend for FY25, you're starting to see some bit of taper on that ratio. And therefore, is it a concern? Well, we'll have to wait and watch. But of course, over the last 3 years, when you're looking at data versus 9 months, you're still seeing a decent kind of or a healthy kind of clip that it's going in at, which is at 87.8% of policies are getting renewed, which is very, very large chunk, right? So positive overall in that sense. But your renewal rates over the course of the last 2 to 3 years haven't gone up significantly, which is what you would want to see for a smaller company with a faster growth clip, which hasn't really happened, which is why we're giving this a bit of a thumbs down on that count.
Okay, fair enough. So that's as far as the renewal rate's concerned, but let's move beyond just the financial statements, and I'm going to talk about the shareholding pattern. It seems like it's a well-held company because promoters firstly hold more than half of the stake here, 56% to be precise. You have reasonably high institutional holding as well. well, I wouldn't say high, but you have reasonable amount of institutional holdings. About 9% from FIIs and DIs hold another 10% here, which gives you a balance of around 25% held by the retail investors or the investors outstanding. Overall, it does seem like a pretty stable, steady, shareholding pattern, considering 75% is held, by promoters and institutions, which is why we'll give this a thumbs up. But I reckon, Harsh, perhaps the most important question, how does this stack up in terms of valuations with respect to its peers?
Yes, very, very expensive, Agam. Recently IPO'd, and in comparison to its peers, which is Star Health, which has a 33% stake in the retail health insurance market in India, and ICICI Lombard, which also has roughly a 3% stake within the health insurance market. Now, ICICI Lombard is not a pure play health insurer, so therefore may not be the exact comparable, but I'm going to take it nonetheless because it's venturing into health insurance in a very, very fast manner. And they're growing their health insurance, especially on the retail front, at a very, very fast clip, very similar to Niva Bupa. But it has a third of Niva Bupa's share, and it's well larger than Niva Bupa in that sense in terms of market capitalization. And Niva Bupa currently at 157 times price to earnings, and I've taken trailing 12 months purely because lack of estimates doesn't allow me to take 1 year forward, but this is as per Bloomberg. As per the Bloomberg terminal, 157 is the number for Niva Bupa's price to earnings, Star Health at 30 times and Lombard at 47 times. In fact, Niva Bupa IPO'd also at an expensive valuation, so not really just the trailing 12 months, but its IPO itself has happened at a higher valuation. Of course, as growth starts to come through, we'll have to wait and see as to how quickly profits will come through. And what we've seen over the last 2 years is a loss of 18 crore has actually turned into a profit of 81 crore. And therefore, the potential for profitability is quite high. But for the moment, you're trailing 12-month P at 157 times.
Right. So, well, we must remember that, firstly, as Harsh mentioned, Niva Bupa is just listed back in mid-November. So, it's been less than 3 months since it has been out on the exchanges and become a public company. That said, and considering that, we just have one analyst on the street who tracks the particular company right now. And that analyst has an upside of around 9%. I wouldn't want to reach too much into it, which is why we're going to give this a neutral stance. But street credentials, how has the company done since listing?
Well, yeah, so, when you're looking at street cred, it's a bit of a mixed bag. You're looking at a 1 month of just 2%, 2 months of 15% negative returns because the stock saw a bit of a spike in the month of December. But since listing, it's just given about a 9% return, and even the IPO price didn't leave too much on the table for investors, just 9% from the IPO price as well. So, honestly, not much to say here, because it's recently listed, but just about a 9% return from IPO price as well as from listing day. We'll give it a neutral because it seems like there was not much left for investors, at least basis the last 3 month performance.
Yeah, and I would say that largely moved in tandem with the benchmarks that Niva Bupa would probably be a part of at some point in time, the small cap and the mid cap indices. So a neutral rating is a fair one to give. But let's take a look at how we are rating the company as a whole, considering all the parameters that we've spoken about. So when it comes to your top line and your bottom line growth, it's certainly a thumbs up, but ratios are mixed at the moment, as explained by Harsh. And market share, of course, we've seen an improvement here. On the other hand, renewal rate gets a thumbs down for now. And moving beyond that, we have a thumbs up for shareholding. Valuations, on the other hand, looking very, very stretched at this point in time. Street coverage and street credentials looking at a neutral rating. So that's as far as the overall rating is concerned. That is about a 4.5 out of 8. So, well, I'd reckon that, at this point in time, given the kind of valuations that it's trading at, despite the fact that what it has done so far, this does look like a pretty reasonable rating to give this particular company. And I'm sure that much will be spoken about over the next few quarters in terms of what we can expect. But let's before we get in the management, also take you through the key strengths, weaknesses, opportunities and threats. So Harsh, do you want to take on the strengths and weaknesses?
Yeah, let me do that, in fact, Agam. So first off, with regard to strengths, the base number is still relatively quite low. It's the third largest, but at the same time it does pure play retail health and health in particular, and therefore your base is quite low, allowing it to grow more quickly in comparison to peers. You're also seeing that it's accumulating market share at a very, very fast clip. From 7% to 9.5% in a matter of 2.5 odd years is no joke. And therefore, it's able to penetrate the market fairly quickly and starting to gain market share in a very, very robust fashion. So those are two strengths for you. Weaknesses, it's a relatively smaller player in comparison, and it has a larger focus on health. It doesn't provide other insurance services. A Lombard does motor, it does fire, and therefore in case of a cyclical slowdown in health insurance, it's able to switch on other engines to ensure that growth doesn't suffer in a big way. Whereas for Niva Bupa, that's a bit of a miss, because health is predominantly what it does.
Okay, so those are your strengths and weaknesses. I'll very quickly take you through the opportunities and threats. In terms of an opportunity, it's one for the entire sector, a very large unaddressed market. We're still waking up to the prospects and the advantages of transferring risks using insurance as a nation. So it certainly is a big opportunity. There's also now another opportunity to underwrite profitable growth. But if you move on, consider the threats. Lombard intends to go big on health insurance, and this is a significant player in the general insurance space. So we're certainly going to see a lot more coming in, hearing about what ICICI Lombard does. But and of course, we've spoken about the combined ratio as well. It needs to at least hold up, if not improve. But these are some of the aspects that we're going to talk about. And in fact, on that note, let me get in Krishnan Ramachandran. He's the MD and CEO of Niva Bupa Health Insurance. Mr. Krishnan, thank you so much for joining in. Let's start by taking a look at the combined ratio. And the reason why we want to talk about it is because it does impact your profitability at the end of the day. If you could walk us through the journey of how things have panned out so far and where you see it going over the course of the next 1 to 2 years.
I think one context or preface I need to give is that in October, which is in Q3, the regulator effected an accounting change. So, for all companies on long-term policies, there's been an accounting change as far as long-term policy accounting is concerned. But for the sake of comparison, what I'll do is I will indicate combined, on historical accounting basis, so you get a sense of the trajectory as well. So FY24, Agam, we closed our combined ratio at 98.8%. And 9 months FY25, our combined ratio stands at 100.9%. In terms of trajectory, which is to the question that you asked, on this accounting basis, the steady state trajectory that, we would like to get to is about 95 or between 95 and 96% combined. So that's the steady state, maybe 2 to 3 years out is, where we expect our combined ratios on this basis to get to. Just to sort of round off, the performance for the 9 months gone by, again, on a like-to-like basis, Agam, we grew at 30.2%, a GWP of 5,011 crores, and a profit after tax of 7.4 crores. For the 9-month period, and the same number 9 months last year was a loss of 75 odd crores.
Right, so let's take the 9 months as a base from here on. So what can you tell us about growth as well as the kind of trajectory that you expect the company to take on over the course of the next few quarters and years?
So the way we look at it as a company, Agam, is we want to make sure, and indeed one of our strategic pillars is to build a granular, growth-oriented and profitable health insurance franchise. And the way we measure and benchmark our performance is relative to the broader health insurance market. So we definitely want to grow 10 points more than where the market is from a growth standpoint. So that gives you a sense of what you can expect from us from a growth trajectory standpoint.
Right.
That's one. And I think the other KPI I would draw your attention to is, I use the word granular. So specifically, what's been the movement in our retail market share? So 9 months last year, our retail market share was 9%. That has improved to 9.6% in the 9 months of this financial year.
Right, so since we are talking about revenues, so also wanted an idea about the current pricing environment with the kind of products that you guys have right now, with the products that you guys are likely to put out over the course of the next few quarters as well. Does that change quite a bit? What is it right now? What does it look like going forward?
No, look, I would say that no operator should be in a position where they can comfortably raise rates, because then you're not in a competitive market. I think ultimately all of us strive to do, to provide the best deal for policyholders relative to our competition and give policyholders a reason to buy. So it is a competitive market in India. Having said that, I think customers are willing to pay for a superior proposition. In our case, the idea is to make sure that we are building products that are customized to customer segments, and we follow what we call a health partner strategy, which is, it's not just about financial risk protection but also taking care of the healthcare journeys of our customers. So I think that's the value prop that we offer to our customers. It is a competitive market, and our process of price revision is making sure that we are always providing value to our policyholders, making sure that we are competitive, and of course making sure that our products are sustainable in the long run. And typically what that means is we tend to increase rates by high single digit, maybe 8-9% annually to combat medical inflation.
So also including in terms of market share, of course, you have significant market share already at this point in time, considering the position at which you are at. But we do see more competition coming in, some very large players, having ambitious plans in the health insurance space. So based on that, can you give us an idea about where we can see market share coming through over the next few quarters too?
Look, it's a function of many assumptions, but you can reasonably assume that our market share will continue to improve, given what I've stated, that we want to grow about 10 percentage points faster than market, Agam.
Right, so and the final question I have for you is on product innovation. Now, we have new players driving innovation at this point in time. Do you foresee more disruptive products at lower prices impacting profitability going ahead?
So I think one point I would like to make with some pride, Agam, is the fact, or specifically on the topic of product innovation, I do believe we've established a very strong track record of innovation in the Indian market. And if you look at the axis that we use to develop products, we do use fairly sophisticated segmentation variables, including health status, age, income. So for example, we have products for people living with chronic conditions. We have products for senior citizens. We've launched a very, very successful product called Aspire for people who are millennials, a segment that's historically not buying health insurance. And we've launched products that have gone on to become bestsellers for the affluent and mass affluent segments, Reassure 2.0 or our Reassure bouquet of products. But I think the broader point I want to make is increasingly, our strategy is aligned with what our majority shareholder Bupa does globally, which is to not just focus on product and product features, but to sell propositions to customers. And what I mean by that is today, if you go to our customer app, our customers, have access to integrated healthcare journeys. So whether you want to consult a doctor 3 a.m. in the morning, get home diagnostics done, get prescription drugs delivered to your house, order physiotherapy services, emergency medical ambulance. So the entire spectrum of healthcare is what Bupa does globally, what they call the Blue Hour strategy. We have replicated that very meaningfully in India, and this is what we offer to our customers. Hey, when you buy Niva Bupa, you're not just buying a bundle of features, but you're buying a bundle of health services as well. Some of these are paid for by the product, but many of these are customer paid, and our reason to win is, we have negotiated and partnered very deeply with a variety of ecosystem participants to make these available to our customers, in a single window, so to speak.
Yeah.
So more and more, it's about high-touch, tangible healthcare services, in addition to low-frequency but high-severity health insurance hospitalization events. And I think this is fundamentally, what we believe will give us the right to differentiate and the right to win and to keep customers in the marketplace.
Okay, sir, Mr. Krishnan, we leave it at that. Thank you so much for joining us and taking us through, what we have seen as well as what we can expect going forward. We wish you the best. But on that note, that is all the time that we have on this edition of KYC. But stay tuned to NDTV Profit for more news and updates.
And the reason for the success of the restaurant this magnitude, because people felt bhai ka jigar hai, business nahi hai. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for President Trump, Prime Minister Modi, ya Shah Rukh Khan?
मेरा दिल जिसके पास है शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
Like आप करेला, बैंगन ऐसा?
I love करेलास.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims?
You're watching NDTV Profit. Sula Vineyards is in focus on the back of Q3 earnings. Now, in terms of the numbers, revenue was down by about 0.4%, EBITDA was down 26%, margins have come down to 26.5 from 35.4, and net profit was down around 34%. But you know, to discuss as to how the quarter has gone by and how things are shaping up overall for Sula Vineyards, we're joined by Mr. Rajiv Samant, who's the CEO of Sula Vineyards, who joins us now. Welcome to the show, Rajiv. My first question to you.
Thanks, Mahima.
My first question to you, Rajiv, is that, what is kind of not working right now, because revenues have gone down. Even your own brands have, seen an uptick of hardly 1% this quarter. What is it that's exactly not working, and what's the way forward from here?
So, the last 6 or so months, we've had a perfect storm. But I just want to point out that Q3, before that, we had reached an all-time high in terms of margin. And I had pointed out even then that everything was aligned, all the stars were aligned at that time. And that was going to be a kind of margin that we weren't going to see again. So that was something I had maintained back then. Yeah. This time, unfortunately, there's been a perfect storm. Yes, sales have not grown in the manner that we would have liked in FY25, that's for sure. Expenses, on the other hand, are sticky. Things like grapes, we have long-term contracts in there, manufacturing expenses. So, that has hit margin. But I do see better things ahead, better sales growth, and definitely a bounce back in margins. However, not to the level of 35%. Those days, that day is not happening. But perhaps, a couple 100 basis points bounce back in margins, definitely on the cards.
Got it. So 100 basis points means you'll be around 27-28%, and that will continue to be the roadmap for margins going ahead in FY26 and 27 as well?
Yeah, look, I don't like to give specific guidance, but that's a pretty good guess, and that's what we are aiming at.
All right. With respect to the wine tourism, it has grown almost 12% this quarter. But what's the outlook like, and what are the strategies in place? How are you planning to scale that up going forward? Because I believe this quarter was kind of impacted, like we were discussing before also, that the Nasik road construction kind of hampered that. But despite that, it was a decent growth this quarter. But what's the way ahead for wine tourism?
It was a very decent growth. I would like to point out that the month of December was our highest ever in terms of revenues for a single month. Plus, we've just had a very successful Sula Fest after 5 years, bringing that back. For various reasons, we had stopped it for 5 years, but it was India's only sold-out music festival this year, as per Book My Show, our ticketing partners. So something we are extremely happy about. 12,000 fest attendees. This time, for the first time, we didn't serve any hard liquor. It was only wine and beer, and not a single person complained. So yes, numbers were impacted by the bad state of the highway, etc. I'm very pleased to say that the highway is in great shape right now. I just came back myself a couple of days ago. It's taking less than 4 hours back and forth. So we do expect a bounce back there. But things are looking pretty good on the wine tourism front. Visitor numbers went down, but the per spend was up almost 10% per visitor spend. That's exactly what we want to see. Ultimately, we can't keep building out. At its peak, we had close to 4 lakh visitors in a single year. That's something we can't really sustain. So we are happy with a number that's closer to 3.5 lakh, but with a significantly higher spend. That's exactly what we're doing. We have one more resort coming up that's going to be coming up in FY26, first half of FY26, that's going to add 30% to our number of keys. And we have a number of projects going on to boost this all-important sector for us.
All right, Mr. Samant, with respect to the premium sector, premium segment overall has grown by around 5.6 odd %, which had been, a double-digit growth in the past few quarters. Now, I want to understand that is premiumization slowing down, or is this only on account of a higher base?
So premiumization for us had reached an all-time high. So today around 75% of our revenues come from our premium wines, what we call elite and premium, which is unprecedented. Just 3 or 4 years ago, we were more like 65%. So I have said and maintained that at 75%, it's probably going to be harder for us to continue to outperform in premium. And, having said that, perhaps our lower priced wines were we lost focus on those a little bit over the last couple of years. But we've realized that those are the entry-level wines for a lot of our consumers. 400-500 rupees is what they want to spend. So everybody is not able to go for a bottle of 1,000 rupee plus wine. So we are going to be focusing on that. And that's where we also plan to build out our distribution in some of these other states where there's hardly any wine consumption. We'll probably have to lead with that. So I don't think we'll see more than 75% moving forward. Probably you're going to see equal growth at both levels.
Got it. Mr. Samant, there's one thing that I came across in your investor presentation as well. You'd mentioned that revenue growth was subdued due to the wine industrial promotion scheme credit was lower by 4.7 crore. Can you give more context with respect to that? And going forward also, do you expect this to be on the lower end only?
No, we don't expect that going forward. This has been a year of correction for that. When Maharashtra renewed the scheme, which promotes local grape growing and local winemaking, they put a cap per unit. And Sula was the main company that did get affected by this. However, having said that, we have expanded our number of units. So in a couple of months, we'll be back to full eligibility in terms of the scheme. So this month and also going forward, the month of January and February are basically the months that were impacted when the cap came into effect. But we've done everything in place that in FY26, we will bounce back and we will not have that limit. We will have the number of units. We will get our total eligible VAT refund, and it's really going to make a difference. In this quarter, we've lost about 250 basis points of EBITDA margin just due to that.
Got it. With respect to expansion plans, Mr. Samant, what are your expansion plans going ahead? And if you have any, how will they be funded?
Well, so I just talked a little bit about our tourism, which is so important for us. We have about 4 different projects in development right now, new tasting rooms, new restaurants, a new resort. So that's something that we are very excited about. This is totally through internal accruals and a little bit of bank debt. And then we have some very interesting opportunities in Karnataka, just outside Bangalore. We hope to do a mini Sula Fest down there within the next 1 year. That's something we're working on to boost our presence there even more. Bangalore is asking for it. Sula Fest has been a fantastic success this past weekend. 12,000 extremely happy attendees. India's only sold out music festival of that size this year. And we had our attendees had a great time. So we want to roll that out in a few more places as well.
Right. So no expansion plan with respect to wine production, right? I mean, I want to understand as to where your capacity utilizations right now stand.
Well, we already have put in place a big new low-cost cellar for our low-cost wines. That's going to bring down the cost base of those low-cost wines. So that's added about 20% to our production capacity already, and that's just opened for this harvest. So right now, we've just completed that project. No new project for the next couple of years. However, that cellar, we will be putting in more storage vessels. We've only probably filled about half of it at this point. So that is going on. But that was the main project of the last year.
Right. Mr. Samant, one last question, on the entire wine industry aspect. I heard somebody saying that few years from now, India is going to be a white spirits industry, which might, impact wine as well as whiskey. Do you think that, that is true? Because, your marketing spends have also gone up in terms of, YY basis, and which means that probably, you'll have to put in more efforts to promote wine going ahead as well. What is your view with respect to an a wholesome outlook with respect to the wine industry in India?
Look, I'm very positive on this. All of us are very positive. Look, when you have an upward trend, it's not that it's a consistent and constant upward trend. You're going to have spurts, and then you're going to have plateaus. So right now, we've had a spurt over the years, 21, 22, 23, and now, in the last 1 year, we've hit a plateau. I certainly hope that we'll see the growth spurt again. I don't know who this expert is who said that India is going to become a white spirits country. I have my own thoughts on that. It still is fortress whiskey. And I think that that's going to remain for a long time in India. So that's the fortress that we keep trying to breach. We're making inroads, but it's going to take its time.
All right. So that's, of course, Mahima speaking with the management of Sula Vineyards. Rajiv Samant, who's the CEO there, talking about the company's Q3 earnings as well as more. But let's quickly look at where markets are at. Of course, that stock under pressure, 4% lower. And the texture of the market not looking too positive either. A third of a percent lower on the Nifty 50. But if I exclude that first half hour of trade, we've traded in a very tight band of just about 50 points. In fact, less than 50 points. And therefore, we've kind of stabilized in the way in which we're operating, where we've clocked a low of roughly 23,594. We're around 20 points up from those lows and a very, very tight band in which we're trading in. So that's the one thing that really stood out for me. The second is that you're looking at the broader markets also largely on the decline. So when you're looking at the Nifty mid cap, 150 down 0.7. The Nifty small cap 250 absolutely flat, but slight positive bias, but more choppy in relative terms to the other two. Let's look at the advanced decline as well. I'd be curious to know how the breadth is shaping up for the day. 1:1, it's an even keel on the breadth front. Let's talk about sectors. A tenth of a percent lower on the Nifty Bank. You're seeing the Nifty Auto also down around 0.5% thereabouts. FMCG is down nearly 1%, so that's one pocket where there's pressure, along with metals and realty, if I can add those two quickly. What's doing okay? The Nifty Pharma and the IT index. So the defensive seem to be holding up fairly okay. That's how the texture is really shaping up. I'm going to quickly move on. Swiggy. Swiggy has announced their quarterly earnings as well. The loss much larger than what the street was penciling in. 799 crore is the loss number. Mahima joining us with some perspective. Mahima, the losses were wider. One would have anticipated a wider loss, but despite that, even it's lower even than expectations. What's management commentary on this, and give us more perspective?
Swiggy might start, with a downtick today in terms of the earnings. The net loss widened and it's a miss on all fronts. Revenue is up around 11% for the company. EBITDA loss is also widened to 726 crores versus 554 crores, which was expected to be around 535 crores. Net loss, as you rightly mentioned, is at 800 crores versus 626 crores in the last quarter, which was expected to be around 620 odd crores. Now, in terms of segment-wise performance, food delivery revenue was up 3.8%. Gross order value growth QOQ was around 3.4%. Bolt now contributes 9% to its total revenues. Quick commerce revenue was up 17%. Gross order value was up by around 5.5% QOQ. Average order value rose by around 7% QOQ, and they've maintained the guidance of doubling their dark stores and raising the dark store size also by March 25. But it is underperformed in terms of compared to Zomato's 27% growth QOQ. The next one is going out business, where revenue grew by 12.5% and supply chain and distribution revenue grew by around 16.5%. In terms of other highlights, the Instamart's adjusted EBITDA margin fell by around 420 basis points. Dark store additions have accelerated in the second half of the quarter, which is kind of hurting the profitability for Swiggy. And EBITDA break-even will be achieved by Q3 FY26 for the consolidated business, is what the management has said. And for Instamart, the EBITDA break-even will not come until Q3 FY27. So this is the overall view as to how Q3 has panned out for Swiggy.
Okay, thank you so much for that perspective, Mahima. I'm going to switch focus though from Swiggy and quick commerce to M&M. New vehicles both on delivery and price. Some more perspective. Puneet's here with that.
Definitely, it's a big announcement. Now, let me just give some context. So the two models were launched back in November, and the company had already announced the price range specifically. So the lowest price variant of something like a BE6E was expected to be somewhere around 18.9 lakhs, and the higher end was 26.9 lakhs. The difference is now that they've announced all prices of all variants as well as a delivery schedule expectations as well. So for BE6, let me just start off with that. So it's there are 5 variants in this model. So specifically for the BE6, they start from mid-March of 2025 and go all the way up to August of 2025. It's visible on your screen right now, the XCV9E. So let's talk about that as well. It starts from 21.9, goes all the way up to 30.9 lakhs. Delivery schedule again starts from mid-March and goes all the way up to August of 2025. The one key notable here is that the higher priced variant of both the models will launch first in mid-March, and then subsequently it will go in that order itself. So the premium model prices will come first, and the most base variant essentially will come in August of 2025. Was essentially important to note that you will get 3 full quarters in FY26 with both these models available in the market for purchase. So they will be building an order book next year as well. And we just looked at some of the key aspects. So like, of course, the February 14th is when the order bookings start, and they have a dedicated facility in Chakan, Pune, which they recently inaugurated as well before the launch of these vehicles, and they've invested roughly 4,500 crores. But Nuvama is estimating that they'll be able to sell almost 48,000 electric vehicles in this particular year of FY26, and that's a big number because you already have roughly selling about 40,000 to 50,000 vehicles a month. So it's a growth already panned out. They also estimate that this will increase to almost 1 lakh units in the next year itself for FY27. So they'll be able to double that ramp up very quickly. What's interesting is on UBS, they mentioned that this market in which the BE6 operates, there's roughly a 44,000 units per month market, and 50% of that is priced about 22 lakhs. So it could essentially have them, they don't have to create the market, it's already there. So any kind of, rumors about it being premium priced have just gone out of the window basis on this data. UBS also finally mentioned that roughly 45% of the sales, roughly about 42,000 units are sold at about 30 lakh price range. And out of that, roughly 45% is above 30 lakhs. So that could also benefit the XCV9E. So overall, it's a very interesting juncture where the stock is. The earnings are also expected tomorrow. So some more commentary is expected there as well as to, what has been the initial conversation. But that's on Mahindra as well. And just if I can just address those numbers on the bottom of your screen, Harsh, as well, if that's okay, on Uno Minda, margins have come in just bang in line of estimates of about 11%. Net profits also up at 20% of 233 crores. And I also have the estimates here with me. So just wanted to address that aspect as well. So it was expected to be around 225 crores of net profit. It's come in at 233, so it's a beat there. Revenues come in at 4,184 versus estimates of about 4,085 crores. So again, a beat on that aspect as well. So it's a decent set of numbers from Uno Minda. We'll see more in the presentation once it's uploaded. But EBITDA coming in at 457 is bang in line with estimates of 455 as well. So just thought I'll address that as well while talking about the auto space as a whole.
No, awesome. Thank you so much for that, Puneet. Always great getting perspective straight from the analyst, even though stock is behaving in a choppy fashion. Absolutely in line set of numbers is Puneet's assessment, but thanks so much for that. But while we're talking earnings, I also want to quickly cover State Bank of India. Earnings to come out later today. Margins will be the crucial factor now. Can they hold on to that margin number is the big question. If they do, it'll be impressive. If they give up a few basis points or 0.05 odd percent, maybe the street will be a little more accommodative to them, but anything more, you might see pressure. Operating profit expected to rise, but your profit after tax on a normalized basis also expected to go up, but to fall on a QOQ basis. So you likely see a bit of a fall both on operating profit as well as profit after tax. Advances growth expected to be healthy, nearly 3%, maybe 2.5 to 3%. Any upside could well be a positive. Deposits also expected to grow around 2 odd percent, 9% YOY or 10% YOY maybe is what the deposit number is expected to grow by. Asset quality will be in focus. NPA ratios will likely trend downward, and that's a big positive in this market. Provisions will see a bit of an uptick on a sequential basis because you have, of course, a little bit of agri due to seasonality, which may just dent that provision number a little bit, but I wouldn't read too much into it if it's below the 5,000 crore mark. But let's talk about Aarti Pharma Labs. Stock was on an absolute tear in the morning. Profits have jumped 40%, margins have expanded, but the stock has cooled off a little bit since then. Currently trading 6% higher, was nearly 15% higher. Varsha is here with more perspective with 1, the results, and 2, the stock performance.
Thank you, Harsh. So if you see, yeah, good set of numbers actually. The EBITDA margin that you're seeing, so it was 24% this year versus 21% last year. This is on the back of, you know, the change in the better product mix, I would say, and also companies also focusing on regulated markets. This is also one of the reasons why EBITDA margin is on the upward trajectory. Even in Q2 as well, company had a good EBITDA margin. But you know, the Aarti Pharma Lab is actually not a story of 1 year, it's a story of 2 to 3 years. For the next 2 to 3 years, as company is, you know, focusing on CDMO projects. So currently if I were to talk about the revenue contribution, the xanthine derivatives, which is used in your bronchitis, contributed almost 45% to the turnover, while API intermediates contributes almost, you know, 51%, and CDMO contributes 3 to 4%. Company wants to take this, you know, in a single to high digit growth in next few years. And in CDMO, they are currently working with 19 customers on 55 projects, with 28 in the commercial stage and 27 at the various development stages. Management had maintained EBITDA growth guidance of 10 to 12% for FY25 and long-term goal of 15% annual growth in subsequent years.
Okay, thank you so much, Varsha, for that perspective. Stock up 6% on the back of that. Also, we're in thick of earnings, and therefore I'm going to focus more on that. Trent set to report Q3 numbers today, and the stock is volatile, very volatile in fact. Stock had fallen, we saw a bit of a recovery, now we've again seen a bit of a fall. Stock turned green for a wee bit after turning around and again shifting towards the red. But Mahima joins us to tell us what the street is penciling in from this nifty major.
Right, so in terms of the number expectations from a standalone basis, revenue may rise around 40%, EBITDA may rise 30%, margins may fall a tad bit by about 20 basis points, and net profit may rise by around 51%. But in terms of Q3, it might be a sub 50% growth, which has been the case in the past few quarters, except for the last quarter. Westside to continue to deliver steady show, Star Bazaar to face the brunt of competition from quick commerce and e-commerce, and rise in market share of Studio is something that we can expect. In terms of key things to watch out for, store additions in Westside and Star Bazaar, competition from online players, as well as competition from small, that is tier 2 and tier 3 retail players. We have seen that V2 retail, V-Mart retail, Vishal Mega Mart have come out with great set of earnings. So we'll have to see as to how that has kind of impacted Trent. So this is the overall view as to how Q3 can pan out for Trent.
Okay, last off, we have thanks so much for that, Mahima. Great perspective, and we'll of course watch out for those numbers. Going to be super crucial, and will likely determine the way in which the stock moves over the next day or two. But now on to another piece of news. Jeet Adani, son of the Adani Group chairman Gautam Adani, is set to marry Diva Jaimin Shah on Friday, February the 7th in Ahmedabad. This wedding, though, is anything but ordinary. Let's look at how the wedding is said to be a celebration of change and impact.
और जीत की जो शादी है बहुत ट्रेडिशनल तरह से, बहुत सिंपल और ट्रेडिशनल वे पे होने वाली है.
Resolution.
All right, so we'll of course have or give you more updates on that celebration over the next day or so. But Jeet Adani, along with Anupam Mittal, aims to drive innovation and inclusion through Shark Tank, Divyang Special. Here's a look at what's in store.
As far as Jeet Adani is concerned, giving back to society means empowering entrepreneurs who are working to make a difference in the life of Divyangjan. Gautam Adani's son and director of Adani Airport Holdings, Jeet is partnering with Shark Tank India to support entrepreneurs who are building solutions for Divyangjan in a special episode.
There are so many people who are dependent. उनको भी हम independent कैसे बनाएं? And specifically अनाथ आश्रम में. I connected that with the first time I ever visited Mitti Cafe.
Social impact and entrepreneurship go hand in hand. And across the Adani Group, a new goal has been set. 5% of all hirings will be from the Divyang community.
Besides just dollars and rupees, it's actually about people. We need more entrepreneurs who think about social impact.
And now, Jeet Adani is stepping up as a mentor on Shark Tank India, ready to guide and support startups. Entries for this special initiative are open till February 15, because true innovation is about creating opportunities for everyone.
We know the company you invest in. What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. Well, hello and welcome to NDTV Profit. You're watching Profit Buzzers. With me is Hiral. But let's have a quick look at the markets. Well, definitely a volatile day for markets. If we can have a look at the Nifty 50 index, we'll see that it's down about 0.4% in the red. Sensex down at similar levels, but IT is something which is holding up well on the back of Cognizant's fourth quarter CY24 results, pardon me about that. Nifty banking is also down about 0.2%. But let's have a quick look at the sectoral heat map as well, if you can pull that up. As I mentioned, IT is in the green, but well, down in the red is Nifty Realty, Nifty FMCG in metals, energy PSU banks as well. What's holding up is Nifty IT and pharma. Let's have a quick look at the advance and decline ratio as well. Well, definitely more in the favor of declines. 1.01:1 is the kind of advanced decline ratio. Largely we can say equal on both the sides over here. But let's also have a quick look at the constituents of the Nifty 50 index. If we can pull that up, we'll see that down in the red we have the likes of Titan down about 2%, ONGC as well, Shriram Finance, all pulling the index down. But what is holding up is Infosys, Cipla, Axis Bank as well. So kind of mixed cues from all the sectors over here. Bharti Airtel is trading down in the red ahead of its results post market today. Let's quickly pull up the Nifty IT index also and see how are the constituents faring in trade. Well, of course, up in the red we have Infosys, which is doing well. But if we can have a look at the other constituents as well, we see that most of the mid-cap names are the ones which are pulling the index up. Persistent, Coforge, the highest gaining names over here. Down in the red we have TCS, Emphasis as well. But Hiral, talk to us more about how the broader markets are also doing.
Absolutely. Let's just quickly pull up the mid-cap and the small-cap index, absolutely under pressure, trading nearly at the day's lowest levels with regards to mid-cap 150. And if you see the small-cap 250 as well, that has seen some bit of a recovery from the day's lows of 16,039. We've seen a recovery of almost 150 points coming in there. Individual stocks, Glaxo, let's pull up that one on the screens. 8 to 9% up move coming in on that one. Aarti Pharma Labs on the back of earnings, smart up moves coming on that stock as well. You have R Power, Greaves Cotton and Spandana, which are seeing some strong moves in terms of broader markets. What's losing in today's session? MTNL. The kind of up move that it saw in the last couple of trading sessions, it's seeing profit booking today. Red Tape is under pressure. Vakrangi remains under pressure. CCL reacting to numbers as well with cuts of really 4 to 4.5% coming in there. So that's individual stocks. Let's quickly pull up a Reddington on the screens as well. Reddington, the numbers have been strong with regards to where the third quarter goes. The stock is also now at the day's highest levels with gains of 4.5% coming in there. But the key question is, will this momentum continue from here on? To answer us, we have Ramesh Natarajan, CEO of Reddington, joining in. Ramesh, good afternoon and welcome to the show, and congratulations for the strong set of numbers that have been reported this time around. Firstly, what has led to the growth and is it sustainable?
Hi, Hiral. This is actually Hariharan, the group CEO. Ramesh could not join in because he's unwell today. Happy to be here. Good morning and good afternoon. Q3 was our strongest quarter ever with revenues of 26,764 crores and 400 crores of profit with 1.5% PAT. Very good growth rates as well. Largely, it was the back of good value business, a good demand, and many large deals in India and UAE. The mobility momentum continued this quarter. And actually all the businesses and most of the geographies pulled in. So it is almost a near perfect execution and a good market environment. So combination of things, I think, pulled in. It is the best quarter ever for Reddington.
Okay, well, congratulations on that. But I want to know more about the kind of outlook for the coming year. I mean, on an overall basis, other companies are pretty much bullish about the sector as a whole reviving. But what's Reddington particularly looking forward to in FY26?
So a variety of things. So I think the cloud business is continuing to grow and do very well. And we are taking advantage of that with the Cloud Solutions Group as well as the server storage software, etc., which we sell into the overall cloud space. Outside of that, we are quite bullish about all the AI products that are going to be shipping next year, AI-enabled smartphones, AI-enabled PCs. Some of them we already saw coming in last year, but the real heavy metal and breakthroughs and the products that are going to deliver on ROI will come in into the year. So we see AI gadgets and AI PCs and smartphones picking up the next year or so. So those are two enabling technologies for us that will make a difference. Also in India particularly, the premiumization, there is a set of customers, we call it the India One, as part of the India 1, 2, 3, that are buying premium products, so premium phones, premium PCs, etc. We see a growth in that. And last but not the least, there are other things like GCCs. India is enabling a lot of GCCs to be set up here. We see a lot of consumption of technology, cloud and AI, and we see all of those driving factors for our growth.
Okay, so Hariharan, if you could help me understand, PAT and revenue, the highest growth is what we've seen, I think, on a quarterly basis, right? And in the absolute terms as well. Is this the run rate, do you think, that you will be able to sustain with? Or do you think this is going to be a one-off? How are you looking at it?
I think this quarter everything worked, to be fair. Market conditions were great and we executed well as well. We do see the market bullish in all of the geographies we operate in. India, UAE and Saudi are the three markets that account for 70% of our business. And all three markets promise to have double-digit growth. I think if we execute well, we do see this trajectory continuing. Clearly, on OPEX and some of the other factors, we have right-sized some of our investments that continues to drive our profit growth as well. So I think we've got our act together to be able to sustain a revenue and a profit growth hanging together. We will make some investments going forward on digital platforms and cloud platforms and trying to extract more business out of the value space and cloud. But having said that, this is the trajectory we would like to see and we are planning for.
Okay. Another question I have for you is with regards to the regions. There has been a sustained momentum that you're seeing with regards to where Africa goes. How is Saudi Arabia and Turkey panning out? You've mentioned you're seeing signs of recovery, but if you could quantify that for us in terms of the growth you had seen earlier at your peak, how far are you from there?
So Saudi grew 31% for us last year, the entire year. And the first 2 quarters of this year was subdued because of the reprioritization of investments. This quarter came back somewhat with a 7% growth. We have been in, we have a large team, does a really good job. We do $1.5 billion of business in Saudi. And we were with some of the ministers in Saudi recently, and we see definitely the IT market coming back. And with the Vision 2030 plan, they have a lot of plans and a lot of investments. We have a LEAP event the coming week where all the CEOs of tech companies are there. So clearly it's an area where a lot of investment is going in and we are bullish about it. Turkey, on the back of high inflation, high interest rates, saw a decline in the market size in the last 2 quarters, almost between 15 and 20%. But this quarter, it has come back somewhat. It's still a 5% decline. But we think the Turkish market will be more flattish going forward in the next year. May not be a growth, but may not be a decline either. So we want to take advantage of the best we can. In the Turkish market, we've done very well on software. That continues to be a good story and good growth, largely consumption on cloud and software from corporates and government. But the PC market and the smartphone market will be somewhat flat and subdued.
Okay. Actually, I'm very intrigued about the kind of cloud growth that you had mentioned, Mr. Hariharan. I understand that cloud is really doing well, but that ideally contributes to a smaller portion of your revenue. So do you expect more revenue to come in from the cloud business, number one? Another question is also with respect to your renewable energy. Stellar kind of growth is what I can see over here.
Okay, so the way we define our business units today, we have something called a CSG, which is the Cloud Solutions Group, which is only 4% of our business. That's largely the business we work on with hyperscalers. We do have within Technology Solutions Group a large chunk of software, If I add that together with the CSG, it's almost 17-18% of the total size, which all comes from the cloud area we focus on. Definitely, we see more growth in all of that. So we've been getting about 40 to 50% growth in the last couple of quarters on the cloud area. So the software area and the technology solutions group will get that kind of growth as well. So that expects to be becoming larger. Now, question about solar. There was a business model change. We were working on solar for rooftops, and a lot of the components for that we were importing. But with the ALMM, the regulatory change that happened in the environment, we're now focusing more with local producers and providers. We've reconstructed our strategy around the Surya Shakti program from the PM's office. And we are creating a franchise model. We're very excited about this, and we have a lot of EPCs, engineering procurement contractors, signing up as franchisees with us. And we believe we'll take advantage of this program and grow the solar business again, mostly focus on the rooftops and a little bit on solar parks.
Okay, one last question. I was a little bit, intrigued about the renewable energy. Well, it has grown in terms of rest of the world, but in Singapore, India and South Asia, it has actually de-grown. So can you give us some perspective specifically with respect to this vertical?
I'm not sure if you're referring to the same numbers, but we don't have the renewable energy piece is only in India right now, and we are starting in East Africa. It's the beginning. I'm wondering if you're talking about the logistics business. If it's the ProConnect business you're referring to, that's the logistics business. So that is growing in both the India and the Middle East Africa theaters. The Middle East Africa has grown about 20%, but in India it's growing at around 4% for us. Clearly, we're getting our focus and value proposition right there. But with regards to the renewable energy business, it's clearly there in India right now, and we're starting in East Africa.
No, Mr. Hariharan. So yeah, fair point about logistics. But my particular question with respect to was with respect to renewable energy itself. But I think you've addressed that, and it was lovely speaking to you. And all the best for your upcoming quarters. We'll definitely look forward to talking with you very soon. Thank you, Mr. Hariharan.
Thank you so much for having me.
Thank you so much. So, Hiral, I mean, Redington, pretty good numbers. What do you think about this one?
Yeah, I mean, a strong quarter this time around, but sustenance is going to be, because as the management also clearly said that everything was in their favor in the third quarter. Execution is going to be key. If they continue to execute at similar rates, probably they will see this kind of a number. And if you add it up as well, I was just looking at few of their past numbers. 26,700 is the sales number, and in terms of the profitability number, we've looked at around the net profit of around 400 odd crores this time around, right?
Right.
So 800 odd crores in the second half is what you could see, because the previous two we've seen a total of say around 500 odd crores. So a good growth number that could come in terms of FY25 as a year. So it's going to be an interesting move to watch out for. But the other aspect from here on that we need to consider is what's happening with gold. Interesting moves in terms of gold. In fact, if you see today's gold rate itself, I think we're hovering somewhere around that 86,200 to 86,400 mark. A sharp uptick that's happened in the last couple of trading sessions. The spot gold prices are up almost 35% in the last 1 year. Now, clearly outperformed versus equity. So is gold a better opportunity for investment versus equities right now? Joining us to discuss more is Kunal Shah, Head Commodities Research at Nirmal Bang. Kunal, good afternoon and welcome to the show. What's happening with regards to gold prices? Because silver is remaining stable at the moment. It's gold which is actually probably dancing around.
Well, to start with, two superpowers of the world are fighting in a very passive way. They are putting tariff on each other, and so far there is no talk between them. So the likelihood of they doing a diplomatic, they come to a diplomatic solution is very high. But whether they will be able to find a big solution out of it, God knows. Whether they'll be coming to the general consensus in that, God knows. So there are a lot of uncertainties. So what has been happening after Donald Trump gave a breather to Canada and Mexico for 1 month for the negotiation? China, nothing has come up. China has also come up with a retaliation tariff on the US, and they are doing a probe on Google, they are doing probe on Apple. So this trade war is resulting into a major economic uncertainties. What will happen in future? What if the tariffs are not removed? Then in that scenario, what will happen to inflation? And if the inflation is going to shoot up quite sharply, then gold prices should follow. That is the first narrative. Second narrative is central bank, who have been the key demand drivers of gold from last 3 years. There is no reason existing right now that will lead central bank to again go back to the US and invest in the US bonds. It's not going to happen. So after this tariffs and sanctions and whatever is going on, no central banks, at least in the east, is they are not going to buy gold. And the dominance of east is clearly seen vis-a-vis what is happening in the west. So east is getting powerful and powerful. So there is a shift of economic power which is taking place. This kind of event generally takes place in 200 years, once in a 200 years. So after UK, US, and now China, dictating the entire east and having showing a major threat to US. So this kind of scenario, this kind of time, everyone would like to get a hold of gold. Gold is a super hedge. Gold is your only insurance if any turmoil takes place in the broader financial market, or if there's a turmoil in the broader bond market. So we remain quite upbeat about the outlook.
Right. So, Kunal, there's this one chart that Deepak Shenoy had put out, and this was with regards to the 10-year return of gold, which is adjusted for inflation, clearly beats Nifty returns. And this is happening after a long time. What does this actually mean if you look at the rolling return rates, the rolling real returns versus Nifty?
Yes. So if you see in today's time, gold is not generating any cash, but at the same time, gold is providing a store of value to everyone. So gold has justified its role that it is a store of value and it is an alternate currency in a time when major currencies are seeing a sharp devaluation in their own value. There is a sharp depreciation in some of the currencies. And in this kind of scenario where the US can freeze your foreign exchange reserve, that's what happened to Russia. Each and every central bank are of the view that why to invest in any other instrument of US. And so everyone, irrespective of the price, so even at today, gold at $2,800, if some of the other central bank wants to diversify their foreign exchange reserve, well, they'll put their money. Obviously, gold. So price doesn't remain a lot of difference here. Price doesn't make a lot of difference. So if they buy gold at 2,800 and if gold goes down by 5%, it's not going to make any significant difference to them. So that's the reason gold prices have moved up. A small bit of correction can take place if the US-China talks proceed and come up with some positive result. But eventually, this trade war, these sanctions, uncertainty over the fixed income market, bond market, all these things will continue to drive gold prices.
Okay, Kunal, interesting chart over there and analysis. My question to you is about the correlation, as Hiral asked, but extending the question further. Historically, we've seen a negative correlation, but over the last 1 year, we could see both gold and equity rising. So my essential question to you is, do you think that historic correlation is now futile and cannot be referred to while estimating the kind of returns gold might give over the next 2 to 3 years?
Yeah, post 2020, all these historical correlations have gone for a toss. Gold prices last 2 years have moved up when the dollar was strong. Gold prices have moved up when the interest rates were moving up. Gold prices made new high last year when interest rates were at highest levels in the US. So all these traditional theories and equations have gone for total toss. And we believe once this kind of money printing which has taken place, and the monetary debasement that has taken place, I don't think so that we can see this scenario when dollar index is 112 and gold also makes new all-time high. So it's a very good question. And I see those old traditional equations are time being not working from last 3 years. And going forward in next 1 or 2 years also, I'm not expecting them to work.
Okay, one quick question, Kunal. Gold or silver, which one will be your top pick?
See, intrinsic value, silver has a lot of value in it. So I am recommending to buy both, but the alpha can be generated in silver prices. So silver at these rate also can give a better returns, percentage returns, because it is a higher volatility, it is a higher beta. So I would say somebody who is a risk averse, they should go for silver, and who is a little conservative, they should go for gold.
Right, so Kunal, what are charts indicating, or fundamentally, what's the target that you think someone should look at, not short term, but from a long term perspective, say 6 to 8 months, or even from a year's perspective, what's that number?
So we have we had a target of $3,000, 3,000, and second target was $3,050. The pace of gold's rally in last 1.5 months, already in 1 month and 5 days of February, gold price are up by 10%. So I was expecting gold to give 15% return. Already it is in 35 days, it has given a return of 10%. So I'm expecting still gold to go up. The present gold spot prices are at $28.55. I expect it to test $3,000 by the end of the year.
Right, $3,000 in terms of gold by the end of the year is what Kunal is expecting. Thank you so much for joining us on the show and sharing the view. So this is going to be an interesting move from here on, a good hedge strategy that Kunal has been alluding to vis-a-vis what's happening in the equity market as well. But 15% return, it's already gone up 10% from what they were expecting. So now $3,000 is what you're looking at. But moving on, earnings are in focus. Couple of companies that have reported numbers. You have Aarti Pharma, Sula, CMS Infosystems, all of these that we should be watching out for. In fact, you have Aarti, which is up around 6.5%, but the other two have been trading under pressure. Varsha gets us more. Varsha, what are you picking up, and what is impacting these numbers?
Thank you for that. So let me start with Aarti Pharma Labs, wherein actually a good set of numbers. If you see, revenue was up 20%. The highlighting point is EBITDA margin. Margin were at 24% versus 21% last year. Now this is driven by the better product mix and of course focus on the regulated markets that Aarti Pharma Labs have been doing. But the bigger picture over here is CDMO. So Aarti Pharma Lab is not today's story, but a story of next 2 to 3 years. Wherein, if I were to talk about the revenue contribution, xanthine derivatives, which is used in your bronchitis, contributed almost 45% of the turnover in Q2. API intermediates contributes almost 51%, and CDMO contributes 3%. So they want to increase the CDMO contribution, which will help in revenue as well as in margin. In CDMO, currently they are working with 19 customers on 55 projects, with 28 in the commercial stage and 27 in development stage, and the management is expecting an EBITDA growth of 10 to 12% for FY25 and long-term goal of 15% annual growth in EBITDA in subsequent years. Now the capacity expansion is also a highlighting point for xanthine derivatives of 9,000 metric tons per annum, and they also have a greenfield project for CDMO intermediate which is in progress with commissioning expected by Q4 FY25. For API, which is under pricing pressure, they have positive outlook with new products being commercialized, leading to growth despite the pressure that they are seeing in oncology and respiratory drugs, which is a high margin product. Next on my list is Sula, wherein if you see the Q3 revenue growth was subdued due to slowdown in urban India and also election related disruptions in Maharashtra. There was a wine industrial promotion scheme credit being slower by rupees 4.7 crore, which also impacted revenue, and also higher selling and distribution spend was there when it comes to distribution markets, and the Q3 gross margins were primarily impacted by lower wine industrial promotion scheme credit and higher selling and distribution expenses. And if I were to talk about the fall in EBITDA margin, purchase of stock in trade went up by 50% and marketing expenses by 15%. This was the reason why Sula margins were down.
Thanks, Varsha, for getting us the details. Before we go across to Asta Jain and Osho Krishnan, let me quickly address trend. The profit number has come in at 469 crores versus an estimate of around 500 or little above 5. So the profit number is below what the street was estimating. The revenue number is also at around 4,500 odd crores. Yeah, so a miss of almost around 50 crores in terms of where the profit number goes. And if you see in terms of the revenue number, that is also slightly lower to the tune of almost 100 odd crores. 4,535 crores is what the top line number has come in at, and the estimates were slightly higher on that front. Apart from that, let me see the other income portion. Other income is at around 56 crores versus the 76 crores, so not a major portion in terms of where the other income is concerned. If you talk about where the push-up has come in, so your occupancy cost, including rent, that has come in at around 389 crores versus a 285 crores, so that's the number we should be watching out for. And your other expenses have gone up as well at around 500 odd crores versus a 369 crore. Let's quickly look at what the margin number should be looking at, because that's going to be interesting to watch out for this time around. We don't see any exceptional that is coming in on this number, but clearly a miss in terms of the top line as well as the bottom line. That's what the initial numbers are telling us. Very quickly, let me actually head across to Asta. Asta, your view on the trend numbers. The stock is slightly trying to move to the positive, but as per estimates, it's a slight bit of a beat. It's slight bit of a miss in terms of the top line, bottom line, and the EBITDA number, because the margins have come in at 18.5 versus an estimate of 18.6. So a slight miss across parameters.
Hi, good afternoon. Yes, I think it was a miss, especially on the top line and bottom line front. Now, what need to be seen, yes, we were expecting margin of around 18.6% and it has come at around 18.5%. So now the gross margins need to be seen. The other points which we really need to see is their same store sales growth as well as revenue per square feet. So per store. So this all factors we need to see, because on the main line of items in the P&L, that is top line and bottom line, the numbers seems to be missed, because we were expecting it to post the industry leading growth, and on that basis also we have seen a sharp rise in these stock prices in past few days. But I think going ahead, if there is a miss in the bottom line and top line, definitely it will be going to impact the stock price momentum. So right now, prima facie numbers does not seem to be in line with what we were estimating, but we want to really see in detail the other parameters.
Okay, so in terms of the, yeah, absolutely. We just have the initial 4 numbers that we have. We'll try getting Mahima as well, who tracks the space pretty closely. But very quickly, Osho, how are you looking at a trend in terms of charts? Because that stock was absolutely beaten down over the last couple of trading sessions. So are you seeing any value emerge? Because right now, basis the numbers, not a really, not a great show, but what would you have to say?
Very good afternoon to both of you. Well, firstly, looking at the technical developments in this counter. So this counter has been into a corrective phase after a very long period. And also looking at the recent technical developments, it has been hovering below the 200 simple moving average. So until it crosses the zone of 6200 on a decisive manner, I'm expecting that the counter can see some kind of sideways to bearish momentum, or maybe sideways to negative momentum in the coming period. On the lower end, 5350 is a very strong support. On the higher end, 6200 will be the resistance for the counter. So until we see a decisive breakthrough from the mentioned range, till that time it is expected to hover within the range, with any high rise or any pullback to be seen as selling opportunity for the time being.
Okay, Asta, we see that the stock had been beaten down, especially before the budget. But my question to you is about the valuation. This one has really been off the board with respect to the kind of stock price movement, and a lot more concerns around valuations. So can you give us your perspective on the kind of number in which analysts have valued Trent at?
So see, valuations are on the higher side, but here there are 2-3 factors. First of all, like for like sales growth, which we are always looking keenly on. That is LFL growth. So now we are assuming like for like sales growth to be at around 12%. So that is more important parameter, I think, right now. In case if it falls below 12%, then definitely numbers are missed. First thing. Second thing, now this miss on number definitely make the valuations expensive for the trend. So maybe the stock prices can correct more. So prima facie numbers seems to be missed, and I think even LFL growth will definitely, by seeing the numbers, we really need to see that a 12% LFL growth will be there or not, which we feel that it will not be there. I suppose this is my assumption, looking after the top line and bottom line numbers, but still we would like to wait for more details to come in. But yes, if these are the numbers, then definitely valuation seems to be expensive at current point of the time, and stock prices may correct more from here.
Interesting point that the stock prices could correct more, but clearly a 37% uptick in terms of revenue. The EBITDA has seen a growth of around 35% at 838 crores, margins at 18.5 versus a 18.1, net profit up 36% at 469 crores, but across parameters the numbers are below street estimates. In fact, Mahima joins it with further analysis. Mahima, a miss in terms of trend, what are the key highlights that you're picking up?
Right. So, in terms of revenue, it's almost in line with what the estimates were suggesting. However, EBITDA and net profit both are a miss. Margins are almost in line. The expectation was around 18.6, but they've come out at 18.5. Now, in terms of the read-through with respect to the numbers and why we've seen miss in terms of EBITDA and net profit, we're seeing that in terms of the purchase of inventory, that has gone up by 3 times almost, which was 39 crores in 31st December 23, which is now at around 174 crores. In terms of the finance costs, however, this is offsetting, this has been offset by finance costs, because finance costs were 95 crores last December, which have come down to around 36 crores. In terms of the rent, in terms of occupancy, it has gone up a tad bit. That means the net store addition has gone up overall. And with respect to tax expenses also, the current tax has been increased by a tad bit. So with respect to numbers, this is the first read through. We are yet waiting for the overall press release to see as to how each segment has performed. But this is the second quarter where Trent has given a subpar growth of 50%, and this is for Trent from Q4 FY21. The trend has been that the growth has been beyond 50%, but last quarter and this quarter, the growth in terms of revenue has been sub 50%, which is why the street is not taking it very positively. It's down by about 1% as we speak.
Right, the stock is down by a little over 1.5% now as we speak. But what's interesting, Rucha, is from what Astha was saying, that the valuations are not really compelling. There could be some bit of further pressure that could be coming in as well in terms of where the stock price goes. And if you see Trend's long-term performance, if you can just have a 1 month or a 3 month chart as well to understand, or even a 6 month, you'll see the pressure that has been built in. 6 months, it's up around 8 to 9%, but from a peak of almost 8,345, it's actually corrected to levels of 5,670. So the pressure has been strong, valuations are expensive, and there could be further selling pressure that could be coming in. But we will be joined soon by an expert who tracks the space closely to give us more. But let's quickly slip into a short break and we will be right back. Please stay tuned.
जब मैं था तब हरि नहीं, जब हरि है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's
All right, welcome back. You're watching India Market Close here on NDTV Profit. I'm going to quickly take you through numbers coming through because you have State Bank of India's numbers coming in. You've got global NIM at 3.01%. You can see on your screen we have the press conference which was likely to start at 2:30 p.m. Might be a slight delay, but we'll obviously get you a live cut-in of that press conference as and when it starts. But versus the 3.14% number, margins have fallen quite sharply. But I believe that the most important number here, of course, outside of margins, is the other income number, which seems to have really taken a bit of pressure. And I'm just going to try and break this up on a sequential basis. Investment income has gone down by around 3,500 odd crore, and forex income is down by almost 1,000 crore, which is what is creating pressure on non-interest income, which was at 15,271. It's coming at 11,041. The choppiness you're seeing on your screen is likely the street trying to make sense of exactly what is happening here and what does it mean. Can a lower other income be expected going forward as well, or will that be taken more positively, saying that going ahead other income may recover? So that is one big clarification which I believe we'll await for from the presser. Vishy obviously is there and he'll get us some perspective from there as well. But overall, your net interest margin has fallen quite sharply. I have with me Aditya Shah as well as Kush Bora, both of them. But for the moment, Aditya, and great having you on a day like this, Aditya. First off, want to try and understand how should one make sense of SBI's numbers. Margins have come off quite sharply, 3.14 to 3.01. The street still trying to make sense of it as to how SBI ought to respond in terms of stock price. But the other piece is the other income. It's fallen quite sharply sequentially. Is that a concern? Is the margin number a bigger concern? Are there concerns, or is asset quality good being a positive?
Harsh, as simple as that. The only thing that matters I've been repeatedly saying this, that the only thing that matters to an investor is the NPA. The only thing that matters to a trader is the NIM or the NII. It's a good set of numbers. There's no doubt about it. Categorically a good set of numbers at a time when the entire industry is facing unsecured loan slippages. SBI's results have been good. The gross NPAs have tad bit come down. They've maintained asset quality, and that is all you need to look in these results. Look, NIMs, NIIs are a function of a lot of things and beyond the control of management. On a quarter-on-quarter basis, on a year-on-year basis, still they are under control of the management, but on a quarter-on-quarter basis, it is really very difficult. What I was looking and what I was expecting was that the slippages will be in control. Slippages are in control. There's no problem as such. The gross NPAs have also come down on a year-on-year basis as well as quarter-on-quarter basis. And I'm pretty happy with the results per se. Nothing to complain about from my side. Of course, the gross NPA, the other income, all those, the NIMs, the other income will fluctuate here and there. Very, very happy with the results per se.
Right. Aditya, one quick take. Margin contraction, is that a concern at all to you? 13 basis points. This is not something we would expect from an SBI. Just 2 quarters back, they were at 3.3%. Now they're at 3%.
2 quarters out, they will be at 3.3% again.
Okay.
So the point really being here is that is not a deciding factor for the stock price per se, unless and until there is a erosion in NIMs, as HDFC Bank has seen from about 4% to about 3.5%, 3.3%, which is sustained erosion in margin. These are quarterly blips here and there that are going to happen beyond the control of the management per se. And I, as a long-term investor, would advise everybody to ignore these short-term movements in margins unless and until they are permanent erosion in margin per se, which I don't think is the case with SBI. Those margins will fluctuate between 3.3%, not a problem. What is really very interesting to see from the management's commentary is how are they seeing the systemic rise of NPAs within the unsecured side of it. The smaller banks are vacating the space. So is SBI going to come and accelerate the loan growth? If SBI is feeling comfortable in accelerating the loan growth, then that's a real positive. Mind you, ICICI Bank has warned that they will cut back on unsecured loans where they feel that NPAs are rising and they are not able to control the asset quality. So NIM movement is unless permanent is not a problem per se. NPA movement and the future commentary will be something that the stock price will move on.
Okay. Okay. Quickly onto our segment, heard on the street. But 1 second. We have the SBI presser. Let's just cut across to the press conference. Apologies on that. We're still sticking to the SBI story. Let's cut across to the presser. Okay, live visuals there. Yes, asset quality is what Aditya Shah feels is the crucial factor. And provisions have come off sequentially. Aditya, what do you make of the provisions number? Write-backs, large write-backs, is that what's contributing to it?
Harsh, as I said to you, the quality of borrowers that SBI has got is very different from a smaller bank, and the risk on the book of SBI particularly is lower than as compared to risk on a smaller bank per se. So I already had tweeted out this in the morning before the results came in that I expected very strong asset quality from SBI, and you've already seen that from ICICI Bank as well. For that matter, HDFC Bank also, Kotak Bank also, all of the asset qualities of the top banks were really very good as compared to the smaller banks per se. So from my perspective, I'm not too
Aditya,
much
I'm going to interrupt. I'm sorry, I'm going to interrupt. Let's cut across to the SBI presser, get more perspective on the numbers.
Good afternoon. You're able to hear? Okay. So good afternoon, ladies and gentlemen. Thank you for taking the time to join this press meet today, post announcement of Q3 FY25 results of the bank. The results for the third quarter of FY25 highlight continuity, consistency, and SBI's significant long-term strengths. At the outset, I would like to thank all our stakeholders for their support and helping us in creating sustainable value not only for the bank, but also for the economy as a whole. Over the years, SBI has remained focused on strengthening the key components that contribute to the sustainable value. I'll first start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. In 2025, global economy is being driven by a strong US economy, offsetting the weak euro area and China. As per the latest assessment, the IMF projects global growth at 3.3% both in 2025 and 2026, below the historical average of 3.7%. The global inflation has continued to soften and is expected to approach inflation targets for most of the central banks, albeit with a different speed across geographies. However, On the downside, the impact of trade wars on global growth and in turn on inflation remains uncertain at this stage. While the new US administration's tariff decision is so far confined to North America and to some extent on China, the impression of full-scale tariff across all countries has so far not materialized. At the domestic level, India's economic growth is poised to rebound as domestic demand regains strength post the budget announcements, even as global uncertainties remain. CPI inflation has also eased to a 4-month low of 5.2% in December 2024 and will continue to decline as per forecast. As per the latest data, bank credit grew year-on-year by 11.5% and deposits by 10.8%. Coming to SBI, the results for the third quarter for FY25 demonstrate the bank's ability to operate profitably at scale due to our substantial long-term strengths. These advantages stem from our institutionalized framework, which is guided by structured processes and a commitment to fairness for all stakeholders. The net profit for the quarter was 16,891 crores, up by 84.32% year-on-year. At the end of Q3 FY25, our whole bank credit growth was 13.49% year-on-year, with domestic credit growth at 14.06%. Deposit growth was 9.81% year-on-year, while the CD ratio domestic was 68.94%. Importantly, we maintained our stellar asset quality with a slippage ratio of 0.39%, retail personal slippage ratio at 0.32%, credit cost at 0.24%, and PCR continues to be robust at 75% almost. So in terms of the business growth, at the end of Q3 FY25, deposits have crossed 52 trillion with more than 51 crore customers. I think we take pride in serving the range of customers. Our bank serves 1 out of every 3 Indians, and in some way we see that SBI touches every Indian family. The total deposits have grown by 9.81% year-on-year to 52.29 trillion. Term deposits have grown by 13.47% in year-on-year. Our current account deposits have grown by 14.22% year-on-year, and CASA deposits have grown by 4.46%. I'm glad to share that the credit growth continues to be robust across all segments, with all the major segments registering double-digit growth. Our domestic advances have grown by 14% year-on-year, driven by 18% growth in SME, 15% in agriculture, 15% in corporate, and 12% in retail personal segments. Our foreign offices advances have grown by 10.35% year-on-year. The domestic credit deposit ratio was at a healthy 69% at the end of Q3 FY25, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q3 FY25 was 0.39%, while the credit cost for Q3 FY25 stood at 0.24%. The net NPA ratio improved by 11 basis points and stands at 0.53%. We have a well-provided NPA book with PCR of 74.66%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes, and the leadership of the bank across business lines. Our capital adequacy ratio is at 13.03% without considering the plowback of profits and is well above the regulatory requirement. If we include the profits for 9 months FY25, our CAR would be at 14.5%, while the CET1 ratio will be 10.99%. Based on the current profitability and growth profile of the bank, we believe we have sufficient headroom to take care of business growth requirements. I'm happy to share the progress we are making in the digital banking. More than 8.45 crore customers have been registered on YONO, which is pushing forward the digital agenda of the bank. 64% of our regular savings bank accounts were opened through YONO in Q3 FY25. And as far as subsidiaries is concerned, are consistently performing well and continue to create significant value for all the stakeholders. We will continue to nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of 9 months in the FY25. While we are glad about the outcomes in Q3 FY25, we are also mindful of areas of further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings bank deposits by further strengthening our customer outreach and branch expansion. Although the bank's cost base is substantial, it highlights our commitment to compliance and establishment expenses. From this strong position, our goal is to consistently achieve ROE over 15% through the business cycles. Wrapping up my initial comments, I express my gratitude for your ongoing support to the bank. As the bank advances its objectives, it also plays a role in driving the progress and economic development of the ecosystem. We are dedicated to upholding your confidence in us by delivering superior, sustainable returns over the long run. My team and I are now open to taking your questions. Thank you very much.
Thank you very much, sir. We will now move on to media question and answers. To ensure a smooth flow, questions we will take and we will...
Okay, so that's perspective coming in, calling the quarter a steady quarter. Mr. C.S. Sethi, who is the chairman at State Bank of India. Aditya, I'm sure you had a chance to, listen in on what he had to say. Strong words, calling it a steady quarter. My last question to you with regard to SBI. Believe ROAs have peaked at 1.2%, or is there scope for further upside from here on the ROA count?
So Harsh, while he was speaking, I was just going through the results, and I found the slippage ratio at just about 0.28%, which was down quarter on quarter and substantially down year on year. So that confirms to me that asset quality is really very strong. Now the question of ROA, I think we are at peak ROA. I don't think that there is going to be a material expansion on ROAs here. The market valuation for SBI could only go up if SBI is consistently able to show over a period of next, not only 2 quarters, but the next 1 or 2 years, that they will be able to maintain asset quality over a period of time. So that is where the next valuation re-rating for SBI could really happen. But for now, the ROAs have peaked out, and I don't feel that there is any material trigger for re-rating of the stock per se.
Okay. Kush Bora also joining us from kushbora.com. Welcome, Kush. This is a deadly combination having Aditya and you always. So good having both of you. But Kush, quick question. SBI, it's been choppy since since the results have come out. I won't ask you on the result, but I'd ask you on what should a trader do at this point?
Not a bad idea to buy. If you would have bought the dip, that came about, because of the, if I can just call it confusion, I was listening to you and Aditya, then you would have perhaps made a, sweet little profit even in the last 10-15 minutes or so. Right now, if you see the recovery that is underway for SBI has a very beautiful, very clear rising trend line support, and even the dip that came about today was pinpoint at that level. So for me, the 750 mark, close to thereabouts, remains a good stop loss if you want to start accumulating. With a stop loss of 750, you could accumulate, SBI. On the upside, you're looking at targets of 785, perhaps even an 800. So the recovery is well and truly underway at the moment. As long as the support zone of 750 is intact, I think you should continue to hold or add SBI.
Okay. One last question to you, Aditya. You're still positive with regard to SBI. So valuation re-rating to some extent, at what point do you believe that SBI is well priced or fully priced?
Priced right now, well, Harsh. From that perspective, I think 2025 is the year of larger banks, because I am seeing slippages across the small banks within the unsecured loan side is not abating very easily. So I will categorize 2025 as the year of larger banks, including SBI, ICICI, HDFC, Kotak, and Axis. And it could be a year of accumulation for badly beaten down banks, where you get a valuation of 0.8, 0.9 times price to book.
Okay. You should keep your eye out on this one. And what we will also do in the meantime is we'll continue to get you all that's happening as part of the SBI presser, all those flashes at the bottom of your screen. But Kush, markets, what do you make of the Nifty move today? Let's talk the larger index now.
I think you would have been better off booking that partial profit that we spoke of yesterday. So you had this chance to accumulate it again at this lower level. But I think now, but between today and tomorrow, the RBI announcement coming, I think there could be some consolidation. Overall bias does remain positive, but I would actually not take the entire position that I carry on Nifty or Bank Nifty home. So I still maintain that book partial profit view. As I said, most of the 25 bips rate cut, seems to be priced in. If any positive news comes about, that's when you will see some sort of an uptick. But otherwise, markets might consolidate for a day or two. On the whole, I think the trajectory is up. 23,500, 23,300 are the support zones on the Nifty. You can again play for the level of 23,800 and 24,000 on the Nifty. It's just that I wouldn't take a big position before the event. That's the only caveat. That's the only caution. Other than that, the trajectory looks north.
Okay. All right. So positive with regard to Nifty. Now I want to quickly take Trent, because that was the other counter on the Nifty which declared its Q3 numbers largely in line with estimates, but a slight negative bias with regard to the numbers as such. Mahima brings us first off the details before we take views. Mahima.
Right. So with respect to Trent, in terms of key highlights, revenue has been sub growth of 50%, which has been the case last quarter also. Otherwise, since it's Q4 FY21, they've always grown beyond 50% when it comes to revenue. Now, company is looking to upgrade smaller stores to larger formats, and they will focus on store looks with upgradation. This may have a near-term hit on margins, as well as their capex will go up. In terms of the fashion concepts, they registered a high single-digit like-for-like growth, but like-for-like growth at high single digits has come this quarter versus that of double digits earlier. In terms of store opening, they opened 14 new Westside stores and 62 new Zudio stores. They've been opening stores in the same areas for Zudio, and 62 Zudio stores means 10% of the total stores so far have been opened in this quarter. They've registered a volume growth of over 39% in 9 months FY25 is what their presentation says. Now, in terms of the earnings, the revenue was up around 37%, EBITDA was up 34%, margins were at 18.5 versus 18.8, and net profit was up 36%. So basically, revenue was in line, EBITDA and net profit were a slight miss, margins almost in line. In terms of the other updates with respect to the emerging categories, Westside and Star Bazaar, emerging categories now contribute over 20% of their total revenues. Online revenues year to date have grown around 45% for the company and now contribute over 6% of total Westside stores. And Star Bazaar's operating revenue grew by around 25%, and a double-digit like-for-like growth was registered for Star Bazaar. So we'll have to wait for the commentary coming in on Star Bazaar to see as to how quick commerce and e-commerce has affected the company. But overall, this is how Q3 is panned out for Trent.
7% lower on Trent, and I don't even want to get to the fact that from the highs, how much have we fallen, because we would have fallen likely 30% plus, and I'll quickly pull out that number. But while I'm at it, Aditya Shah, sense with regard to Trent now when it comes to Q3 numbers, and what's your outlook on the counter?
Harsh, yesterday I put out a tweet saying that Zudio clothes may be cheap, but the Trent stock is not really cheap. It is one of the most expensive stocks that is trading on the Nifty, and rightly so. So the stock is, Zudio is doing great guns. In my locality, I've got 5 to 7 Zudio stores itself. So I could understand what Mahima was saying, that they are opening up stores within the same locality. However, the stock is really, really very expensive. I don't understand the rationale of the trading of the stock trading at these expensive levels. Even though the stock has corrected about 30 to 40%, still it is really very expensive. And in a quarter, if in future quarters, if the growth slows down, the stock is going to take a massive beating. So anybody who's looking to invest in the stock should stay away. Anybody who's got the stock should continue the ride per se, because the Zudio expansion is going really very good. No new investments in Trent as of now.
Okay. Right. 35% down from the highs of 8100, 8200 in fact, nearly. The 52-week high made is 8345. Wow. So stock has really taken it on the chin from the highs, and it's a fast growing counter. Neeraj, very few counters where you'll see 36% PAT growth, stock down 7%.
Valuations.
And 36% down from the highs.
Yeah, just the valuations. And yeah, trees don't grow to the sky, right? So there's a classic example of this as well. It'll probably happen to some other companies as well over a point of time, because this was priced too much to perfection. But still, a growth number is still looking strong per se. So at some point of time, it will find floors simply because at least it is showing growth. But yeah, for now, certainly wobbly in trade. I wonder if the other retail stocks have followed suit today, Harsh, and it will be interesting to see if a Shoppers Stop or some of the others too are sulking. At this, Avenue Supermart should come up on your screen. Shoppers is down about 2.5%. Avenue Supermart should come up on your screen as well, down about 2.67%. So it's kind of showing into how some of the other smaller, or not smaller really, but the retail players have too. The case for V2 and V-Mart is separate because they've actually shown terrific growth this time around, and they're coming off a low base. So bear that in mind. Aditya Shah is with us, I think. Aditya, a word on whether anything in retail is worth getting into, or is it becoming hyper competitive? I mean, the Zeptos and the Zomatos are kind of eating or breathing down your neck. Margins are lower, etc., etc. Quick commerce, so on and so forth. Anything in retail that is worth it?
So, Neeraj, I've been a fan of Studio, and I think that they are doing a pretty good job. If the valuations were to correct, that is one of the companies. Trent is one of the companies that I will look at. But the entire space is really very expensive, and a classic sign of a bear market would be that even though these companies do 35% revenue growth and profit growth, the market does not really care about it, and the stocks really don't do well. There is a case for a correction after which a floor price could be found, and then the stock could really move on. However, as of now, I would try to avoid all of these companies because you don't know what those what the quick commerce guys could really do. Yesterday, I read that Zepto is now delivering a car in 10 minutes, and I was surprised to read what they are doing. So you don't know what these guys would really come up with.
Okay, thanks for that, Aditya. Many more questions on the other side of this very short break. We also have to take Kush's picks. We'll do that. Also, BTST, STBT calls. Lots to talk about. Stay tuned.
onto the picks. Concord Biotech, the stock's been doing rather well over the last few sessions. Today also we are seeing a bit of an uptick on this one. While the first target of 23.35 has been hit, you could look at it for the second target of 23.85. Stop loss being slightly deep now, 22.35. I've got a short call on APL Apollo. This is a market where you would perhaps want a hedge as well. So on the short side, APL Apollo for targets of 1420 and 1400 with a stop loss around the 1460 mark.
Okay, so those are cautious calls for this afternoon. While we are at it, Aditya, quick question with regard to some of these green power plays. Yesterday, we had one counter which was flying away, Acme Solar, which was flying away on the back of an initiating coverage note by Motilal Oswal, 59% upside, 57 to 59% upside if I recall right. And today KPI green on the back of these very, very strong numbers. Are you playing this theme, and if so, how?
So Harsh, I'm negative these themes per se, because renewable energy per se is a long-term theme, but the valuations across all of these stocks are really very expensive. On top of it, IRA in the US has been put on hold, and we don't really understand how the US administration is going to behave with respect to exports to the US. Mind you, some of the companies like Vare, which is setting up a factory in the US, Premier Energies is also going to set up a factory in the US. These companies will find it really very difficult if tariffs come about. Even though tariffs don't materialize, the threat of tariffs will mean that the market will not like the valuations at which these companies are really trading. So at the moment, I will try to avoid all of these stocks. But of course, these stocks continue to be on our radar, because green energy is the future, and every country in the world will continue to need to invest in green energy per se. For the time being, I would be cautious on these stocks. I will wait. In fact, Vare yesterday on the call itself said that they will want to wait and watch how the entire US market turns out, and then take a call on future investments per se. So similarly, we also need to wait on how US is going to play out, and then take a call on many of these solar related companies.
Hey, we delayed our segment Heard on the Street, but we have Somit joining in now to talk to us about what chatter he's been picking up from dealing rooms. Somit, over to you.
Well, firstly, the stock that I have in focus is Hyundai now. Strong delivery-based buying is what the street is indicating on this counter, and dealers are also saying that this is one of the stock that could be a potential MSCI entry. Now, do remember that the early indications that were given for the MSCI names, Hyundai was not part of that list, but now dealers are indicating that this stock could be a part of the MSCI entrant, and hence Hyundai's first stock that should be in focus. Then there is Shriram Finance and M&M Finance that dealers are focusing more on. Sales desk, a desk of various brokerages have been aggressively pushing this counter. Though the stocks are down, but both the stocks are expected to be the beneficiaries of the RBI rate cut, which could come in tomorrow. And what dealers are also indicating that despite the rate cut, their financials won't be impacted, which could be a scene for few of the NBFCs, but Shriram Finance and M&M Finance don't get impacted that much. Valuations are not that expensive, and hence sales desk of various brokerages have been pushing both these counters ahead of the RBI meet. And lastly is the pharma stocks. Today, I guess Nifty Pharma is the only index that is trading comfortably on the green side. And what we are understanding is that Aurobindo Pharma, Lupin and Glenmark Pharma, these three stocks are specifically on dealers' radar. Strong active buying interest has been seen on all these three counters on both HNI and DI desk. So keep an eye out for Glenmark Pharma, Aurobindo Pharma and Lupin. Aurobindo will be reporting its numbers today. Lupin and Glenmark most likely will come out with their numbers next week.
Okay. Well, Somit, thanks for putting all of this into perspective. Keep an eye out for pharmaceuticals for sure. It's something that we've been talking about for the last 2 days or 3 days on the trade setup too. That bucket of stocks. So the CDMO players have done their bit. Can the pharma companies, pure play pharma companies, which have got a larger presence, also contribute to the quarterly numbers? Remains to be seen. Aditya, I know you're bullish on chemicals. What about the CDMO guys? I mean, the valuations are not that cheap, unlike chemicals, right? But they are delivering growth. Do you like them at all? Any of them?
So, Neeraj, I'm positive the CDMO players, of course, on some of the good CDMO players like Syngene, they are really very expensive. For that matter, DV's Labs is also really very expensive. So, longer term perspective, these are really very strong plays. Within the CDMO space, I like something like a Piramal Pharma or DV's Labs to that extent. Also, these are long stories for about 10 to 15 years, and you need to continue to stay invested. As IT did a outsourcing job in the from 2000 to 2010. Similar trend is playing out within the CDMO space, and companies like Syngene, DV's, Piramal Pharma, to some extent now companies like Dollars Labs also they are coming into the CDMO space and trying to take fruit of this entire trend that is playing out. So positive on this entire sector. Syngene, Piramal Pharma, and DV's Lab will continue to remain one of the top.
So those are some views coming in from the pharma space, and we'll switch across though. Thick of earnings, you have PVR Inox also, which declared numbers. Sanjeev Bijli, Executive Director at PVR Inox, spoke to my colleague Rucha Somaiya, and here's an excerpt of that.
Yes, Q3 has been a good quarter for us. Revenues, as you said, is at about over 1,700 crores. EBITDA is around 258 crores. The margin is still about 15%. We had a very high ATP, high SPH. Both these numbers have been higher than last year. So overall, yes, I think it's been a good quarter. The margins are slightly lower. EBITDA margins are slightly lower than what we had expected because we're still in the process of restructuring our costs. We have saved a lot on costs, fixed expenses and variable expenses. But still, there's a lot of work going on in cost cutting so that we can reach higher margins.
Okay, then what kind of range are you looking forward to?
It's difficult to tell, of course. We're obviously wanting to go above 15% margin. We want to go around 18 to 19% margin. And this obviously will be a result of both higher revenues on which a lot of work is being done and reducing costs.
Okay, and Mr. Pant, if you could highlight on the kind of expenditure also, what could be the kind of margin levers going ahead?
Sure. So, Rucha, as you know, our business is largely content dependent, right? And I'll just give you a brief overview of how the year went by and the quarter went by. So the year was marked by a significantly lower number of Hollywood movies that got released and significantly lower Hindi movies that got released. So the box office in terms of Hindi box office collections was impacted significantly, which was largely made up by the Hindi dubbed portion of movies like Pushpa 2, Kalki, etc., which did really well. So going forward, to your earlier question on what kind of margins can we expect going forward, what we have seen is that pre-pandemic, the business used to deliver about 18% odd margins and occupancies of 32.5% margins. What we have seen is that if we are able to deliver 27.5% occupancy margins, occupancy, our margins should be at the 18% level. So it's a matter of content coming back. This year was largely volatile because of Hollywood and Bollywood. Next year, we see Hollywood ramping up big time. Bollywood lineup also shows a lot of promise. The levers on the cost side would largely be, obviously, rent and CAM are the biggest fixed cost. So reduction in rent and CAM going forward for incremental properties and properties which we can open for negotiation. So those are the primary levers. On the other fixed costs like personal electricity and other fixed expenses, we have given a slide as part of our investor deck, which shows that we are already on a 9-month basis operating on a lower base as compared to last year. So I think content coming back, so that would give us a driver on the revenue side. And then on the fixed cost, rent and control, even more control on rent and CAM is, I think, what will deliver these higher EBITDA margins.
Okay, so in terms of occupancy, because you mentioned that that one is going to be a key lever for you. So, Mr. Bijli, if you can highlight on your maybe expansion strategy, say in key markets area, new cinemas, and also in say tier 2 or tier 3 cities in terms of expansion of cinemas, if you can highlight to get a more broader level than looking at the quarterly numbers.
Yeah, of course. I mean, we still remain committed to screen expansion. I think we still very strongly believe that India is very underscreened, and movie going is one of the most popular entertainment options for our country. We're underscreened per capita compared to US, China, and many other developed markets across the world. We opened 70 screens this year, and our strategy has always been to do a mix of tier 1, tier 2, and tier 3 cities. Wherever we get a good property, good developer, good development, and a high movie-going index, we commit to open cinemas there. So 70 screens we've already opened this year. We've opened in Dehradun, Bombay, Delhi, Bangalore, Pune, and also some tier 2 and tier 3 cities. And we're opening 33 more screens in this last quarter. And these are also all over the country. We're opening in Jabalpur, in Leh Ladakh, and in Gurgaon, and in some places in South India as well. So it's always been a mixed strategy to open all across the country, across all kinds of demographics.
All right, so that's PVR Inox. I'd wonder what Kush's views are with regard to some of these counters. Discretionary pocket, Kush, looking interesting, especially post the budget.
At least about PVR, I still maintain the view. Despite the extremely overpriced popcorn, it's still a better option to buy a ticket and watch a movie than at least buy the share for now. Whatever rebound that we are seeing from these 1,030 odd levels is more of a bounce, dead cat bounce from extremely oversold territories. But I don't think the move is done yet. I mean, the down move, I don't think it's done yet. Perhaps one indication, being a Marvel fan, I can tell you next year or maybe this year, once the Marvel movies start making their way, and the moment you see RDJ, that's on a lighter note. On screen, perhaps the fortunes might turn. For now, I would avoid PVR.
Well, okay, avoid PVR. Something that we spotted at the start of the show today was the kind of moves that stocks like VRL Logistics were making, right? And it'll be interesting to see if that stock has given up some of the gains or is still strong. Well, 12%, so slightly lower than what was there at the start of the trading day, but still a strong number. I wonder, Kush, if the charts look tepid because it's come off the highs of the day or still look strong?
No, irrespective of it coming off the highs of the day, the 200-day moving average, that's been the resistance for the stock for the last 6 months. Today also, it did briefly cross, but it did not actually, sustain above that. So for me, more than the today's move, it's actually what it's been doing over the last 6 months that's a bit of a concern. That level, by the way, comes close to 550. I will wait and watch, if we do get a follow-through move tomorrow and do we close above 550 or not. However, I don't particularly like these gap up kind of scenarios because, eventually, if you believe that gap theory, the gaps do tend to come into a fill, sooner than later. So for now, VRL Logistics is a wait and watch. From the near-term perspective, if anyone is looking to enter, I think wait a day, see if the 550 level is taken out and, you get the follow-through on this, then it makes sense to enter. Otherwise, the medium-term downturn that it has been in for some time might just continue.
Okay. Your views, Aditya, with regard to how best you would play some of these consumption-related themes. 1 lakh crore freed up. Not sure if you've had a chance to get your views on that. What does it mean and how would you play it?
Harsh, difficult to play the consumption theme per se. With the consumption stocks, I don't think that they are pretty cheap per se. And this money getting freed up will come over a period of time. So I will not tend to alter my strategy per se. My strategy has been pretty clear. We will continue to stick to the large cap stocks. Reliance, if any company was going to benefit from this consumption theme, I would think Reliance and its retail arm of Reliance is going to benefit. And Reliance has been at a 52-week low. So that is something that looks really very interesting. And then again, as I said, the larger private sector banks, the chemical names, and as Neeraj also said, some of the CRAM CDMO players, that is where the real juice is. That's where we are positioning ourselves because we feel that in 2025, small and mid caps could see a little bit of correction, whereas the large caps will continue to move the market higher.
Okay. So want to take your view first, Kush, with regard to what should one do with a Swiggy. Of course, numbers came out slightly on the weaker front, and I'll take a fundamental view from Aditya as well. But Kush, on charts, how is it looking? And I just want to club a few of those platform companies together and take your view. Maybe that gives more options. Zomato, of course, but outside of that, a PB Fintech, a Paytm, a delivery. Just give us that entire logistics come new age businesses play. What should one really bet on now? Because Swiggy will have a smaller chart as well for you to work with.
That's true, Harsh. Swiggy rather limited data, but from whatever data we have, the stock's actually gone below the recent lows, or rather, the lows that it had made right after listing. That was close to the 400 odd mark. So I think this, even from that limited data, is an avoid for me. Zomato is this one stock that I'm actually looking to accumulate from these levels. 200, 205, that's the level that the stock has made a fairly decent base around. So I wouldn't go all in, but this is a good level to start accumulating, something like a Zomato from, a 6 to a 12 month kind of a perspective. Now, some of the other names, Policy Bazaar, even Paytm, some of these names have actually fallen off the cliff. There is a recovery underway, so the momentum might be missing, but not from a near-term perspective, not from a month or two. But if you've got a very similar view that I mentioned for Zomato, which is 6 to 12 months, I think some of these names can actually, look for, or rather, start looking good for accumulation. The other one being Policy Bazaar, Zomato first. The other one being Zomato Policy Bazaar. 1620, 1625 is a medium-term base. Even now, when the stock fell, we saw it take support around those levels. So 1625 being your stop loss on the upside for targets of 1850 and about 2000. I think Policy Bazaar is one stock that I would consider accumulating. So Zomato and Policy Bazaar, these are the two. Paytm on the way to recovery, but doesn't show that much conviction or that much strength yet on the price as well as the volume action.
Okay. We just, I think Enviro Infra numbers are out as well. And its stock has been doing well, but just look at the numbers as they've come out. It seemed to be doing okay. The stock is up about 7.5% as we speak, and just those numbers, of course, it's a small firm, so bear that in mind, but I think they've done well. On the bottom line front, they've reported a net profit of 36 crores versus 17 crores on a YOY basis, and that probably is the reason why the stock through the trading day was doing well, still up about 7.5%. Not that a lot of infra companies have gotten too much of traction this quarter, but Enviro Infra has done okay. Aditya, you track this one by any chance?
No, Neeraj, no coverage on this stock.
Okay, fair call. Kush, any thoughts on Enviro Infra?
Again, there's rather limited data, so I'll have to skip.
Fair call. Yeah, okay. Well, but the reported numbers seem okay, so maybe that's why the stock is doing well. But let's take in the closing strategies. Kush, what is it that you would recommend?
So I think the healthcare space is doing well. I mean, yesterday, even today, we've seen a lot of these names do well, not just the pharma companies, but even the hospitals. Yesterday, we discussed KIMS, and that stock's doing rather well in the market like this. Today, again, I've got another one, which is Narayana Hrudayalaya. This stock also has seen a fair degree of volatility, but if you see the medium term to a near term slope of this stock, at least the averages, they've all been pointing north. Fairly decent action on the volume front as well. So from a near to medium term perspective, 1415 and 1440 being your targets, 1345 as the stop loss. Narayana Hrudayalaya is one more pick from the healthcare space that can be considered on the long side.
Okay. The other thing is, of course, what some of the companies that have reported numbers today have done. And Aditya, some of the stocks which are staying above, right, is one of them is Sagility, one of them is Avalon Tech. I don't know, we spoke about VRL, of course, but the others which have done well. Do you have any thoughts on any of those?
Those stocks, Neeraj, unfortunately.
What about you, Kush?
Again, for Sagility,
don't have
at
an
least
auto
there's
queue,
fairly
you'll have to
limited data. As far as Avalon goes, well, here too, while there is, that 200-day moving average support and the stock rebounding, the volumes aren't really as comfortable for me to say that, this recovery might be sustainable from even a month or a 2-month kind of a perspective. So wait and watch on this one. If you've got a position, I think, not a bad idea to actually use this bounce to maybe perhaps go a little light or, exit some of, some of your holdings in Avalon Technologies. So yeah, no fresh positions. Perhaps you might want to consider, lightening your positions on this bounce.
But we'll also talk a bit about Sagility. In fact, we spoke with the company's managing director and CEO, Ramesh Gopalan, and he talked about sustaining their current margins as well as their growth, because very, very impressive margin performance. Listen into a slice of that conversation.
BroadPath was a EPS accretive acquisition, right? Having said that, BroadPath organically, their margins are lower than where Sagility is today. And so we hope to create synergies both on the revenue front as well as on reduction of cost. And so we will improve those margins over the next 2 to 3 years. Our debt levels are continuing to come down, right? So that's one of the reasons why the PAT growth will be much higher than the revenue and EBITDA growth.
Okay, so that's Sagility. Kush, I'm also very curious to know, Trent on charts, now 8.5% lower.
So Harsh, I think this downturn could well actually continue. I think most of the key numbers, key averages have been taken out, rather easily. I might add on this one. So I think we'll have to switch to the weekly, time frame on this. Any kind of meaningful support actually comes in on 5,000, which is not just a psychological mark, but also a technical level to look out for. But below that, I think 4,700 is the level to look for. So not sure if this fall is entirely done, because despite the kind of 35% fall that the stock has witnessed, it continues to fall on the back of rather high volumes. So I think there's still some selling pressure that might come in. For me, 4,700 to 5,000, that's the zone that I will look for in terms of any kind of support for this stock to arrest this fall at, perhaps even consolidate sideways.
Okay, well, that's with regard to Trent. But all eyes on the MPC now, tomorrow, Neeraj. You have a bet, in fact, likely to win a free coffee. But the street expects a rate cut tomorrow, and Pallavi joins in with what the street is expecting in terms of what are economists saying. Pallavi.
Right, so the Monetary Policy Committee meet is currently underway, and this is the first MPC meet after the appointment of Governor Sanjay Malhotra and after the redesignation of Rajeshwar Rao in the Monetary Policy Department. It's also only the second meet for the 3 new external members, Ram Singh Shogata Bhattacharya and Nagesh Kumar. Now, of the 42 economists polled by Bloomberg, all except for 6 expect the MPC to cut rates by 25 basis points. In fact, economists haven't entirely ruled out even a 50 basis points rate cut given the current setup, though that is extremely unlikely. Currently, of course, the benchmark lending rate is at about 6.5%. So if the MPC does move on rates, it will be the first time in 2 years that we see any action on repo rate, and in fact the first time since 2020 that we will see a rate cut. Now, what's changed from the last MPC to this one? Let's take a quick look. First up, of course, inflation has moderated from the last MPC meet to this one. We have seen steady easing in inflation. The last figure we have is for December, when it came in at 5.2%, and that's compared to 5.5% we'd seen in November. In fact, in October, which was the last figure the MPC had at the time of its last meet, inflation had come in at almost a 14-month high and in excess of the RBI's tolerance band. Encouragingly, as per the last print for December, food and beverage inflation has also eased. led by lower vegetable prices. Another talking point is, of course, liquidity. Now, in what was being called a rate cut by stealth, we did see the central bank announce a whole host of measures, and while liquidity continues to remain in deficit, despite all of those measures, there is expectation that we will see some improvement on the liquidity front and more measures being introduced, though a CRR cut might be a tad unlikely. They're also going to be keeping in mind easing, slowing growth. For the full year, we've seen the first advance estimates come in at just 6.4%, which means that this time around GDP growth will be the slowest in 4 years, and compared to a print of 8.2% we had seen in the last fiscal. Now, despite the fact that there was broad expectation that growth will pick up in the second half of the year, most high frequency indicators and of course corporate earnings to belie any signs of any solid pickup. Another point that the MPC will have to keep in mind, and that will make the rate cut a hard one, will be the rupee. Now, we've seen the rupee continue to depreciate to fresh lows, and that's of course led by actions by US President Donald Trump. But what remains to be seen is how far the RBI will go and what it will do in terms of the rupee. So quite an eventful MPC, the one we're looking forward to.
Thanks so much for that, Pallavi. But other things to watch out for, frankly, on the macro front. One, you have US unemployment claims, which will come through. You'll have 3 US Fed presidents who will be speaking. You'll also have the earnings today, later today, of Bharti Airtel, Britannia and Hero MotoCorp, as well as ITC to focus in on. You will have earnings tomorrow coming in, LIC, M&M, NHPC and Oil India. And you'll have certain corporate actions which also will flash on your screen in just about a minute, and those are the ones that you'll want to look out for. Some dividend payments on those companies, along with a share lock-in expiry. Sagility India, 3% of the shares will expire, and likely you might see a reaction on those counters as well. But on to an NDTV Profit exclusive. My colleague Shrimi caught up with CBIC chairman and spoke to him about how India is planning to combat the US tariff policy threat and any possible tariff revisions. Let's hear his reply.
In this rate rationalization exercise, basically what we have done is that we have removed the high tariff rates, which we found that there were very few items on these tariff rates, but unnecessarily the optics about the Indian tariff was getting a bad name. So the rates which were not required, we have eliminated 7 such rates and brought it down to 70% or 20%. This is what we have done. But at the same time, we have tried to keep that duty incidence at the same level by imposition of AIDC, equivalent AIDC or slightly lower AIDC, so that industry does not feel the shock of this exercise. But now these AIDCs are in a different schedule, and we have done this identification exercise, and after that, after a stakeholder consultation through the line ministries, we can have a look whether these AIDCs need to continue at the same rate.
Okay, I'm going to thank both Aditya as well as Kush for joining us today, giving us all of those views. We're just about a minute from close. Thanks so much, gentlemen, for joining us this afternoon. Quickly on to the intraday chart for the Nifty 50. And what we're seeing is a muted kind of a day coming to a close, 0.25% low on the Nifty. When you're looking at the intraday chart, it was quite a range-bound day of trade. If I cut out the first half hour or so, there are a very, very tight band that we've seen the Nifty play in. Let's look at the Nifty Bank as well, and that one trading marginally in the green, so a slight bit of outperformance we've seen on the Nifty Bank. The Nifty IT and the Nifty Pharma index though did relatively better in trade today. That's the Nifty IT index up around 1/3%. The Nifty Pharma index was up around 2/3%. So those two doing particularly well in trade. But outside of that, it was a tough day of trade in that sense. Let's look at the advanced decline. We've closed for the day. Look at the advanced decline, and it's largely even Steven, slight tilt towards the negative, but you know, it's going to be a very interesting Friday to see what's happening, because we've had that kind of a week where we've not seen any single direction where the Nifty has gone in. We've seen Nifty move in both directions pretty much through the week, and today we've seen flattening out on the index. Let's look at the Nifty mid cap and small cap indices as well. And you'll see a slight bit of underperformance in that sense on those indices, 1% lower on the Nifty mid cap. The Nifty small cap though holding fort. We've seen a very strong recovery in the last 15 minutes, in fact, on the Nifty small cap index, and we've closed largely flat, slight negative bias if at all anything on the Nifty small cap. So a decentish recovery coming in on this one. Will be again interesting to watch out what happens tomorrow on this. Let's also look at the sectoral heat map, try and see which sectors have done well. We spoke about Nifty Pharma, we spoke about Nifty IT. The private banking index seems to have done well as well, 1/3% higher on that one. What's not done well, the Nifty Realty Index continues to reel under a bit of pressure, second consecutive day down. Nifty FMCG down 1%, including and along with it also the auto index down 1%. 3/4% lower on the Nifty Metal Index. It's a mild kind of a move pretty much by all indices, anything between 0 to -1% broadly on the others, and therefore not too bad is what I would call it. The Consumer Durable Index down 2%, and that stands out in a week when we've had a very strong budget announcement which has come through. Last off, just the BSE 500 top gainers, top losers, plenty of movers on the back of earnings, but GSK Pharma up 14.5%. What a strong move on that one. Castrol India up 9, Reddington on the back of numbers up 7, Samman Capital standing out as well. But on the losing side, Trent 8% down on the back of numbers. Again, will be interesting to see what brokerages and analyst community has to say on that one tomorrow. Solar Industries down 5+. Again, numbers had come out earlier this week, and you continue to see some pressure on that counter. Outside of that, you've got a few others which have seen some bit of pressure through the day. But with that, from Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m.
Market shed early gains, the Nifty down by almost 100 points. Trent and Bharti Airtel led the decline. Consumer durables and real estate stocks dragged the markets. Pharma, though, held fort in a sea of red. Will the RBI cut rates? Day 2 of the RBI's Monetary Policy Committee meet comes to a close. All eyes on new RBI Governor Sanjay Malhotra as the budget hands the baton of economy to him. An NDTV Profit exclusive. Boeing expects South Asia's commercial airline fleet to grow by 4 times by 2034, and 90% of these planes are expected to come to India. And Boeing wants a chunk of the India pie. Banking major State Bank of India's margins disappoint as operating profit takes a hit. But net profit is up 84% over the previous year, in line with estimates. And deposit growth is strong. Asset quality too improves in the third quarter. We are engaging with the US authorities to ensure Indians found to be illegally residing in US are not mistreated, says External Affairs Minister S. Jaishankar. His statement comes after uproar over allegations of a plane load of 104 illegal immigrants being handcuffed and ill-treated. The consumption theme continues to be on rocky roads. Trends profit misses estimates in the third quarter. Nestle India says the 1 lakh crore rupee income tax relief in the budget is not likely to bump consumption up by much. Death toll from the GBS outbreak climbs to 5. 170 patients suspected to have contracted the ailment in Pune and surrounds. 20 patients are on ventilator support. Former Indian cricket captain Mahendra Singh Dhoni has invested in a Nagpur-based e-bike startup. We introduce you to the founders of e-Motorrad Dynam, the startup that is making waves with a turnover of 550 crore rupees in just 4 years.
Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmarks closed in the red, extending losses for the second consecutive day. The Nifty closed around 23,600 levels while the Sensex declined by 213 points. Realty, auto, FMCG and metal sectors dragged the markets lower while pharma and IT managed to close in the green. But before we go to the market, update, Prime Minister is speaking in the Rajya Sabha right now. He's replying to the motion of thanks. Let's cut across to it.
प्रभावी भी था और हम सब के लिए भविष्य के काम का मार्गदर्शन भी था। मैं आदरणीय राष्ट्रपति जी के उद्बोधन पर धन्यवाद करने के लिए उपस्थित हुआ हूं। आदरणीय सभापति जी, करीब 70 से भी ज्यादा माननीय सांसदों ने अपने बहुमूल्य विचारों से इस आभार प्रस्ताव को समृद्ध करने का प्रयास किया है। यहां पक्ष प्रतिपक्ष दोनों तरफ से चर्चा हुई। हर किसी ने अपने अपने तरीके से राष्ट्रपति जी के अभिभाषण को जिसने जैसे समझा वैसे यहां समझाया और उन्होंने आदरणीय सभापति जी, यहां पर सबका साथ सबका विकास इस पर बहुत कुछ कहा गया। मैं समझ नहीं पाता हूं कि इसमें कठिनाई क्या है। सबका साथ सबका विकास ये तो हम सबका दायित्व है और इसीलिए तो देश ने हम सबको यहाँ बैठने का अवसर दिया है और उसमें लेकिन जहां तक कांग्रेस का सवाल है, उनसे सबका साथ सबका विकास इसके लिए कोई अपेक्षा करना मैं समझता हूं कि बहुत बड़ी गलती हो जाएगी। ये उनकी सोच के बाहर है, उनकी समझ के भी बाहर है और उनके रोड मैप में भी ये सूट नहीं करता है, क्योंकि वो इतना बड़ा दल एक परिवार को समर्पित हो गया है। उसके लिए सबका साथ सबका विकास संभव ही नहीं है। आदरणीय सभापति जी, कांग्रेस ने राजनीति का एक ऐसा मॉडल तैयार किया था जिसमें झूठ, फरेब, भ्रष्टाचार, परिवारवाद, तुष्टीकरण सबका गालमेल था। जहां सबका गालमेल हो वहां सबका साथ हो ही नहीं सकता। आदरणीय सभापति जी, कांग्रेस के मॉडल में सर्वोपरि है फैमिली फर्स्ट और इसलिए उनकी नीति रीति, उनकी वाणी, उनका वर्तन उस एक चीज को संभालने में ही खपता रहा है 2014 के बाद देश ने हमें सेवा करने का अवसर दिया और मैं हूं देश की जनता का आभारी हूं। हमें तीसरी बार लगातार ये तीसरी बार जनता यहां पहुंचाती है। इतने बड़े देश में इतनी वाइब्रेंट डेमोक्रेसी हो, वाइब्रेंट मीडिया हो, हर प्रकार के बातें बताने की छूट हो, उसके बावजूद भी देश दूसरी बार तीसरी बार हमें सेवा करने का मॉडल बनाती है। इसका कारण देश की जनता ने हमारे विकास के मॉडल को परखा है, समझा है और समर्थन दिया है। और हमारा ये विकास का मॉडल को अगर मुझे एक शब्द में कहना है तो मैं ये कहूंगा, नेशन फर्स्ट, राष्ट्र प्रथम। इसी एक उम्दा भावना और समर्पित भाव से हमने लगातार अपनी नीतियों में, अपने कार्यक्रमों में, हमारे वाणी में, वर्तन में इसी एक बात को मानदंड मान करके देश की सेवा करने का प्रयास किया है। और आदरणीय सभापति जी, मैं बड़े गर्व के साथ भी कहता हूं, बड़े संतोष के साथ कहता हूं कि एक लंबे अरसे तक, 5-6 दशक तक देश के सामने अल्टरनेट मॉडल क्या हो, तराजू पर तोलने का कोई अवसर ही नहीं मिला था। लंबे अरसे के बाद 2014 के बाद देश को एक अल्टरनेट मॉडल क्या हो सकता है, अल्टरनेट कार्यशैली क्या हो सकती है, प्रायोरिटीज क्या हो सकती है, इसका एक नया मॉडल देखने को मिला है। और ये नया मॉडल तुष्टीकरण नहीं, संतुष्टीकरण पर भरोसा। पहले के मॉडल में, खास करके कांग्रेस के कालखंड में, तुष्टीकरण, हर चीज में तुष्टीकरण, यही उनका एक प्रकार से औषधि बन गई थी उनकी राजनीति को करने की। और उन्होंने स्वार्थ नीति, राजनीति, देश नीति, सबका एक घोटाला करके रखा हुआ था। तरीका ये होता था कि छोटे तबके को कुछ दे देना और बाकियों को तरसा कर रखना, और जब चुनाव आए तब कहना देखो उनका मिला है, शायद आपको भी मिल जाएगा। और इस प्रकार से झुनझुना बांटते रहना, लोगों के आंखों पर पट्टी बांध करके अपनी राजनीतिक सियासत को चलाए रखना, ताकि चुनाव के समय वोट की खेती हो सके। यही कार्य चलता रहा। आदरणीय सभापति जी, हमारी कोशिश रही है कि भारत के पास जो भी संसाधन है, उन संसाधनों का ऑप्टिमम यूटिलाइजेशन किया जाए। भारत के पास जो समय है, उस समय का भी बर्बादी से बचा करके पल पल का उपयोग देश की प्रगति के लिए, जन सामान्य के कल्याण के लिए, उसी पर वो खर्च हो। और इसलिए हमने एक अप्रोच अपनाया, सैचुरेशन का अप्रोच। पैर उतने ही लंबे करने जितनी चादर हो, लेकिन जो योजना बने, जिनके लिए वो योजना बने, उनको वो 100% उसका बेनिफिट होना चाहिए। किसी को दिया, किसी को नहीं दिया, किसी को लटका करके रसक रखा और उसको हमेशा प्रताड़ित करते रखना और उसको निराशा की गर्त में धकेल देना, उन सिचुएशन से हमने बाहर आकर के सैचुरेशन अप्रोच की ओर हमारे काम को आगे बढ़ाया है। बीते दशक में हमने हर स्तर पर सबका साथ, सबका विकास की भावना को जमीन पर उतारा है और वो आज देश में जिस प्रकार से बदलाव नजर आ रहा है, फल के रूप में हम अनुभव करने लगे हैं। हमारे गवर्नेंस का भी मूल मंत्र यही रहा है, सबका साथ, सबका विकास। हमारी ही सरकार ने SC, ST एक्ट को मजबूत बनाकर दलित और आदिवासी समाज के सम्मान और उनके सुरक्षा के संबंध में अपनी प्रतिबद्धता भी दिखाई और हमने उसको बढ़ाया। आदरणीय सभापति जी, आज जातिवाद का जहर फैलाने के लिए भरपूर प्रयास हो रहा है, लेकिन 3 दशक तक दोनों सदन के ओबीसी एमपीस और सभी दलों के ओबीसी एमपीस सरकारों से मांग करते रहे थे कि ओबीसी आयोग को संवैधानिक दर्जा दिया जाए। ठुकरा दिया गया, इनकार किया गया, क्योंकि शायद उस समय उनकी राजनीति को ये सूट नहीं करता होगा, क्योंकि तुष्टीकरण की राजनीति के और फैमिली फर्स्ट की राजनीति में जब वो बैठेगा तब तक वो चर्चा तक के हित में भी नहीं आता है। आदरणीय सभापति जी, ये मेरा सौभाग्य है कि हम सब ने मिलकर के 3 दशक से मेरे ओबीसी समाज ने जिस बात के लिए मांगे की, आशाएं रखी, जिसको निराश करके रखा गया था, हमने आकर के इस आयोग को संवैधानिक दर्जा दिया। और हमने सिर्फ उनकी मांग पूरी की इतना नहीं, हमारे लिए उनका मान सम्मान भी उतना ही महत्वपूर्ण है, क्योंकि देश के 140 करोड़ देशवासियों को हम जनता जनार्दन के रूप में पूजने वाले लोग हैं। आदरणीय सभापति जी, हमारे देश में जब जब आरक्षण का विषय आया तो उसको एक तंदुरुस्त तरीके से समस्या के समाधान के लिए सत्य को स्वीकार करते हुए करने का प्रयास नहीं हुआ। हर चीज में देश में विभाजन कैसे हो, तनाव कैसे पैदा हो, एक दूसरे के खिलाफ दुश्मनी कैसे पैदा हो, वही तरीके अपनाए गए। देश आजाद होने के बाद जब ये प्रयास हुए हैं, इसी तरीके से हुए हैं। पहली बार हमारी सरकार ने एक ऐसा मॉडल दिया और सबका साथ सबका विकास के मंत्र की प्रेरणा से दिया कि हमने सामान्य वर्ग के गरीब को 10% आरक्षण दिया बिना तनाव के, बिना किसी का छीन करके। और जब ये निर्णय किया तो एससी समुदाय ने भी उसको स्वागत किया, एसटी समुदाय ने भी स्वागत किया, ओबीसी समुदाय ने भी स्वागत किया। किसी को भी पेट में दर्द नहीं हुआ, क्योंकि इतना बड़ा निर्णय, लेकिन करने का तरीका था सबका साथ सबका विकास, और तब जाकर के बहुत ही स्वस्थ शांत तरीके से पूरे राष्ट्र ने इस बात को स्वीकार किया। आदरणीय सभापति जी, हमारे देश में दिव्यांगों की कभी सुनवाई जितनी मात्रा में होनी चाहिए थी नहीं हुई। जब सबका साथ सबका विकास का मंत्र होता है ना, तब मेरे दिव्यांग जन भी उस सबके कैटेगरी में होते हैं, और तब जाकर के हमने दिव्यांगों के लिए आरक्षण का विस्तार किया, दिव्यांगों के लिए सुविधाएं उपलब्ध हो, इसके लिए मिशन मोड में काम किया, दिव्यांगों के कल्याण के लिए अनेक योजनाएं बनाई, लेकिन योजनाओं को लागू भी किया। ये इसके कारण इतना ही नहीं, आदरणीय सभापति जी, ट्रांसजेंडर कम्युनिटी के अधिकारों को लेकर के हमने उसको कानूनी रूप से उसको पुख्त करने के लिए प्रामाणिकता पूर्वक प्रयास किया। सबका साथ सबका विकास के मंत्र को हम कैसे जीते हैं, ये हमने समाज के उस उपेक्षित वर्ग की तरफ भी हमने बड़ी संवेदना के साथ देखा। आदरणीय सभापति जी, भारत की विकास यात्रा में नारी शक्ति के योगदान को कोई नकार नहीं सकता है, लेकिन उनको अगर अवसर मिले और वो नीति निर्धारण का हिस्सा बने तो देश की प्रगति में और गति आ सकती है। और इस बात को ध्यान में रखते हुए हमने ही और इस सदन का पहला निर्णय हुआ, हम देशवासी गर्व कर सकते हैं, सदन इस बात के लिए याद रखा जाएगा, ये नया सदन सिर्फ उसके रूप रंग के लिए नहीं, ये नया सदन का पहला निर्णय था नारी शक्ति बंधन। इस नए सदन को हम किसी और तरीके से भी कर सकते थे, हम हमारी वाहवाही के लिए भी उपयोग कर सकते थे, पहले भी होता था, लेकिन हमने तो मातृशक्ति की वाहवाही के लिए इस सदन का आरंभ किया था, और मातृशक्ति के आशीर्वाद से ये सदन अपना कार्य आरंभ किया है। आदरणीय सभापति जी, हम जानते हैं, इतिहास की तरफ अब थोड़ी नजर करें, यानी मैं कह रहा हूं इसलिए नहीं, बाबा साहब आंबेडकर के साथ कांग्रेस को कितनी नफरत रही थी, उनके प्रति कितना गुस्सा था, और किसी भी हालत में बाबा साहब की हर बात के प्रति कांग्रेस चिढ़ जाती थी, और इसके सारे दस्तावेज मौजूद है। और इस गुस्से को दो बार बाबा साहब को चुनाव में पराजित करने के लिए क्या कुछ नहीं किया गया। कभी भी बाबा साहब को भारत रत्न के योग्य नहीं समझा गया। आदरणीय सभापति जी, कभी भी बाबा साहब को भारत रत्न योग्य नहीं समझा गया। इतना ही नहीं, आदरणीय सभापति जी, इस देश के लोगों ने बाबा साहब की भावना का आदर किया, सर्व समाज ने आदर किया, और तब आज मजबूरन कांग्रेस को जय भीम बोलना पड़ रहा है, उनका मुंह सूख जाता है। और आदरणीय सभापति जी, ये कांग्रेस भी रंग बदलने में बड़ी माहिर लग रही है। कितनी तेजी से अपना नकाब बदल देते हैं, ये इसमें साफ साफ नजर आ रहा है। आदरणीय सभापति जी, आप कांग्रेस का अध्ययन करेंगे तो कांग्रेस की राजनीति, जैसे हमारा मूल मंत्र रहा सबका साथ सबका विकास, वैसा उनका हमेशा रहा कि दूसरे की लकीर छोटी करना। और इसके कारण उन्होंने सरकारों को अस्थिर किया। किसी भी राजनीतिक दल की सरकार कहीं बनी तो उसको अस्थिर कर दिया।
Viewers will have to slip into a short break, but there's more lined up ahead, so stay tuned.